Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Now there we go. Now my microphone is working. Sorry about that, everybody. I apologize for earlier. Looks like I have a few lessons to learn about pushing buttons to start the microphone in the morning. Again, my name is Kelly Clement. For everybody who didn't hear me last time, I am today's host on the YouTube side. Jeff Gibby will be our overall host, helping today through the conference. And this is day 2 of the MetaStock conference. We are excited for another fun-filled day of market education, talking about this exciting market that we have going on right now. What we are going to do is in about 3.5 minutes, we're going to get started. Our first presenter today will be Barry Burns. Jeff will be introducing him in a few moments. Just our conference schedule for today is Barry Burns, Vince Vora, Joe Duffy, myself. I'll actually be presenting a little bit later. Then we have Tom Busby, Todd Horwitz, Ken Calhoun, and Peter Dalal. So we have a fun-filled day of education for you. We are very excited to have you here. As you come into the room, make sure and tell us who you are, where you're from, say hello. We are coming here from Salt Lake City, Utah. If you've never been to Salt Lake, great place for skiing, awesome. We are going to get started in about 2 minutes. I'm going to go check in on our presenters and just make sure that everything is good to go. And we'll be getting started again in just a moment. Okay, just about ready to get started. Now, one of the things I did want to mention this morning is we are going to be doing door prizes throughout the day. Now, if you're watching it here on the YouTube side, you may not have registered for the event overall. You actually do need to go in and register for this event in order to be able to qualify for the prizes. So to do that, I recommend that you go to metastock.com/events. metastock.com/events. Right at the top of the page, you will see the MetaStock Traders Conference. Just click on that link. It will take you to the page of the conference where you can see the schedule, everything going on. And at the bottom, you can click register, put in your name and information, and then you're qualified to get the prizes that will be going on today. So there are many door prizes going on today. So make sure you register at metastock.com/events. Okay, I was just talking to Jeff, and it looks like we are just about ready to get going here in about 45 seconds. So if you don't hear from me again throughout the presentation, enjoy today. Hopefully everything goes smooth on this side. We won't have any problems, but we are just about good to go. So enjoy the conference, everybody. Okay, welcome again, everybody. We are ready to get today started. I am just going to jump in with Jeff and Barry and make sure that they're ready to go. And we are going to get started this morning. So give us just one more second.
I guess that's what straight means. Anyway, it's a great software program. I've been proud to represent the company. It allows you to scan markets, test trading ideas, forecast, run the forecasts. You can get real-time alerts and commentary and signals. All of it starts at $59 a month. You can get, buy 1 month, get 2 months for free. And that basically you can give us a call at 800-882-3040. I'm just waiting. All right. From audio, sound, and Orange Frog, can you guys hear me, Scott? All of those people in YouTube, let me know. You're fine. If you guys can let me know you can hear YouTube. Okay. Awesome. We only needed to get out the duct tape before we started today, so no big deal. Our first guest is Barry Burns. Barry Burns is does top dog trading. He has a 5 energy method that he likes to talk about. He likes to talk about getting his stuff and taking it to court. This is a picture of him while he was in college. Barry does a great job. I love his 5 energy method. We're gonna go ahead and bring him on here. And how are you doing, Barry?
Okay, I am doing well. There I am. All right.
Yeah. You're looking good. I actually love the beard and the glasses. I think it does really well for you.
Oh wow. Well, thank you. What can I say?
It gives you like a professor type of vizier. Like I'm ready to learn a lesson from you.
Well, I've got some good things to teach, so that worked out well. All right, let me bring up my slides, and thank you for that, by the way. Let's see, we will just do, I guess we'll go with monitor number 1. All right, you know us traders, we got 6 monitors and all kinds of stuff going on, so, okay. So, very good.
Looking good. Right. It's all yours.
All right, okay. Oh, real quick before you leave, Jeff, or mute yourself. So, just to make sure I am correct, do I have 45 minutes for presentation, and then you're going to need 15 minutes? Is that the schedule here today?
Yeah, you can go anywhere between like 45 and 50 minutes, and we'll take it from there. Or even 55 if you go long. So anything up to that point. All
right. So got it. Okay, very good. Just want to make sure that I'm abiding by the schedule, because I know we have a lot of great speakers here today, and I want to keep us on schedule right from the get-go. So welcome. Thank you so much for having me, Jeff, MetaStock, Stocks and Commodities Magazine. By the way, I've also subscribed to them since, gosh, I don't even remember. I think I actually wrote out my initial subscription card to Stocks and Commodities Magazine while I was still in the womb. It's been so long. I honestly can't remember when I started. I've been with them maybe from the first year. I don't know, but for as long as I can remember, and I still get it, and I still pay for it every month, and I love that magazine. And of course, love MetaStock. By the way, MetaStock as well, very first trading platform I ever used, still use it. So if it ain't broke, don't fix it. It's been fantastic for me. So let's get on to, let's see, you can see my screen. Yep, okay. So today we're going to talk about timing. Actually, we're going to talk about quite a few things, but timing your entries, timing your exits. It's interesting to me that so many people talk about price action, which is good, volume, which is good, support resistance, good. It's all good. But one of the things that is rarely talked about is how to time your entries. And, you know, if you think about it, a chart is a two-dimensional object. You got price on the right, you got time on the bottom. And so if you're not using some sort of tool to measure the time of your entries, you are leaving behind 50% of the information on this thing we lovingly call a chart. And it only has 2 dimensions, price and time. So you better consider both of them in order to have a high probability trade. All right, so let's, I'm going to just kind of skip over or go through real fast my bio here. There's my ugly mug, as you can tell. A little old, a little fuzzy. Now I'm a little more in focus. Back in those days, I used to be out of focus. There's a few years there that are kind of the lost years of Barry, but we picked up where we left off there. So Trend Trading for Dummies, really honored to have written that book. Wiley & Sons actually called me out of the blue and asked me to write the book. And I'm like, okay. All my friends who are trying to publish books hate me for that story, but they just called me and I said, all right. So that's how easy that was. And I've helped others, authors with their books, given all kinds of seminars all over the country, even at exchanges, not just retailers, but professionals as well. We already had our disclosure spoken. So I'm not going to read through this again. That was already done, but I just want to make one little emphasis here, and that is this, that these disclosures are very important. Don't think it's just something we have to say. I mean, yeah, we do have to say it, but if we have to say it by law, what does that mean? That means it's really, really important. So don't just think of it as legalese. Think of it as where your education begins in trading, because what the regulators have done is given us a gift with these disclosures and stripped away all the hype of trading and say, okay, here's the real deal. And that's why we're required to say it. So really pay attention to that. Go back, even if you've seen it a million times, you probably haven't read every single word. Read every single word. It's there to protect you. It's there to help you. And as I said, it's really where your trading education begins. Okay, let's start interactive. We're here live today, so we might as well do some interaction as opposed to just a recording where I could just talk at you. No, I want to talk with you today. So answer this question and let me pull over the question box. Go ahead and type into the whatever, chat box, question box, whatever it is, your answer to, oh, there it is, I see, questions. Your answer to this question here. What's your most common, pull down the old microphone in front of my mouth. That, I don't know, they tell me that increases the volume. I don't know if that's true or not, but we'll try it. We'll give it a good sorry about that. Better? Sound better? Okay, hopefully. Okay, so type in your answer to this question. Now I do see the answers here. What are your most common trading problems, struggles, or frustrations? Type those in, and while you're typing them in, I'll just tell you that I built in a little bit of flexibility to today's presentation. So sure, we've got we got a rail that we're going to be going on here today, but I've given myself enough leeway to, in response to your answers here, focus on the answers that you give. So in other words, yes, I've got slides, and yes, we've got an order in which we're going to go through things, but I can give more time to certain topics that you say are your problems, your struggles, and then less time if I come to a slide where it's like, yeah, nobody said they have this problem, so I'll just zip through that one. I really want to be here and serve you today and make this personal. And let's see what we got here. Okay, good. Hey, Silver, how you doing? Hi, Daniel. All right, Gregory. Okay, so Ed says entry point in volume, in low volume stock. Okay, interesting, very good. Lack of knowledge is the next one. Dominic, economic, whoops, it's moving here and I'm trying to keep track of it. Okay, economic data swings. If I can bring this over here so I'm looking at the camera. Yeah, there we go. Let's see. Lack of knowledge, economic data swings, closing the position too early. Okay, we'll talk about that for sure. Jeffrey, pulling the trigger, analysis paralysis. Totally understand that. I've suffered from that myself. Jeffrey, Dan, keep information overload, not keeping it simple. 100%. Boy, is that important. Sinjay, consistency. Trade works one day and the same trade does not work the next day. Yep. I can totally relate to that. That's kind of a laugh of recognition. T, not a trader, but investing exits give me the most issue. Okay, so exits again. Too many trading products. Yep, a lot of choices out there. Getting a trade earlier than later, says Terry. Allie, reading the market correctly. Robin, when I place a trade and the market runs my stop and then takes me out. Yep, these are common problems. Angelo, biggest frustration is missing a move by just seconds or minutes. Yep, got it. Tom, stopped out on a trade too soon, not staying in for maximum profit. Okay. Oh, we got so many here. I'm just gonna kind of go through some of these and skip some that are common, repetitious. I like AJ, risk management. Very rarely, AJ, does anybody mention things like money management or risk management. So good for you. Very proud of you on that one. That's hugely important, and rarely do people ask about that. So confidence, wrong entries, sudden moves take away my gains. James says, where to find stop losses for least losses and option trades in order straight puts and calls when least losses and gains you fit. Getting stepped out, direction was the most accurate capable. Okay, got a lot of them, but you guys got a lot of problems. Nope, these are all very common. In fact, one of the reasons that I wanted to do this exercise is, well, you know what? I'll tell you in a minute. So I did a poll, a huge poll. We did a little mini poll here today, but I did a poll of literally tens of thousands of traders. And here are the most common answers that came up. You want to see what they are? See if these sound familiar. One was, and I kind of grouped them together into the top 5. People said, well, I enter the market. Okay, I buy, let's say at the buy side. So I take a long position, and then they get stopped out. And then after I get stopped out, the market goes back in the original direction of my trade. Now that's really frustrating. Not just getting stopped out, but as one of my mentors in Chicago used to say at the CME, he said, Barry, retailers are often right, but at the wrong time. Boy, is that frustrating to realize you had the right direction, but you just got in a little too early, got stepped out. And getting out of big moves too soon, a lot of you mentioned that. Not sure how long to hold your position for maximum profits. Number 3, getting stepped out too often. Gosh, that was mentioned like 735 times. Not knowing the best place to exit. And number 5 was trading a trend that doesn't follow through. So do these sound familiar? So I wasn't just doing a survey here to find out, what you guys think, because what you guys think here, what you guys are struggling with, and I'm saying this to help you, is very, very common. I want you to know you are not a uniquely bad trader. Your problems are not unique. And that should be good news, because as I said there, I just inserted it a few times. Well, yep, I've had that problem too, me too. Because yeah, these are things we all struggle with. And the good news of that is we've come up with solutions to the problems. We had to, because these are common trading problems. So professional traders, we've all met this. We've all been there. Don't feel bad about it. We've all been there. We've done it. There are solutions, and I'm going to help you get to the other side of that today. So as Jeff mentioned, my methodology is measuring up the energies in the market. Now, what I mean by the energies in the market is the energy of money or money flow. The market is a huge auction place. So for those of you who said, oh, information overload, there's too much. I totally get that. So having been in the markets for over 50 years, by the way, my dad was a stock trader, so I was raised in the markets. I'm 62 now, and he started teaching me when I was 8 at our dining room table in Detroit, Michigan. And so I've been through it all. I've been through all the stuff that's out there, and it is overwhelming. So let me simplify it for you. The markets are about one thing: supply, demand, period, the end. That's it. That's it. It all comes down to that. Now, there's many ways to measure that, many ways to analyze that. But when there's more demand than supply, prices go up. More supply than demand, prices go down. When they're evenly balanced, we're in a choppy market. That's it. So the way I approach the market with my 5 energy method is I look at 5 different perspectives of money flow, of supply demand. And those 5 are: number 1, trend. Number 2, which trend is direction. By the way, trend is actually long-term direction. In fact, Webster's Dictionary defines trend as the extended general direction of something. So in our case, trading. So a trend is a long-term move. If you get it right, you get a good reward and a small risk. So there's no such thing as a short-term trend, by the way. It defies the definition of the term. So when we're creating a system, a trading system, or trading a trend trading system, it will by definition give you a potential large reward in relation to risk. So that's the first thing I look at, because we want to get up or down or sideways right first. Number 2 is we look at the momentum or the strength of that trend. Is this a strong trend or a weak trend? Number 3, we look at cycles. Now, this is what we're going to focus a lot on today, is the timing. So you could have a big meta pattern like head and shoulders, double top, wedges, triangles, cup and handle, whatever. But the key is, okay, and those are all great patterns. But then before we take our trade, the last question is, all right, when is the best place to enter this pattern? That's where cycles or timing comes in. And number 4 is support resistance. That's a blockage of energy up and down. And number 5, the energy number 5 is actually the most important of all the 5. And I put it last because it is a kind of a safeguard. So we put together the first 4 energies of money flow, of supply, demand. Make sure those are all aligned, bullish or bearish. And then we have a filter in our system that says, is the momentum on the longer time frame in line with the direction of your trade? If it's not, we don't take the trade. We're not going to trade against the long-term strength of the market. And so literally my methodology is a 5-step checklist. And we've got tools for everything that we use. So for trends, I use a moving average, real complicated. I don't use any proprietary indicators, by the way. Just real simple stuff. Momentum, we use a momentum indicator. And by the way, you know, people talk about indicators and there's people for them, against them. I'm not for or against anything. I'm just looking for what works. And the reason that I do use indicators is because indicators are literally math functions. And the last time I looked, math is rarely wrong. It's usually pretty right. I type 2 plus 2 in my calculator, you type 2 plus 2 in your calculator, probably going to both get, I don't know, maybe 4 the vast majority of the time. So when you really dig deep and find out what the heck is an indicator, it's not the lines on your chart. It's a math function. And so in that sense, it's always right. Now, we can't extend that to say, well, you just trade direction in the line of some indicator and you're going to be right. No, you got to understand the function and what it's actually telling you about money flow. All right, so the dollars are in the details. So once you get to understand your indicators, then you choose a momentum indicator for the strength of that trend. And then cycles, this is timing. That's the timing part. We use an oscillator for that. Support resistance, I use the usual suspects, previous swing highs and lows, floor trader pivots, Fibonacci. And then finally, when I use multiple time frames, we go to that fractal energy, meaning a little longer term time frame. I like to have a 3-to-1 ratio between the 2 time frames. 4-to-1 is okay. Anything greater than a 4-to-1 ratio is no bueno. The reason is because they're not tightly correlated time with time. And so the short-term chart can do a lot of stuff with the long-term chart doing nothing. And so the long-term chart really is not very helpful unless it's a 3-to-1 ratio, or like I say, 4-to-1 at the outlier. So how do we determine probability scenario? Because this is what trading is all about. People ask me, well, how do you know if the market's going to go up? How do you know if the market's going to go down? And you don't. Watch your own language and listen to the language of others. When somebody says, how do you know? That should be a red flag. You don't know. Nobody knows. There's no certainty in the market. This is one of the things that makes trading one of the most difficult things, is that we as human beings, now if you're not a human being here today, then you're probably pretty good. But if you're like me and you're a human being, we like certainty. It's built into our nature. It's actually part of our survival instinct. And that's how deep-rooted it is in our psyche. And in trading, there are no certainties. One of my friends who's a trading psychologist, he even defines trading as managing uncertainty. I think that's a pretty darn good definition. So best we could do is establish a probability scenario, a statistical probability that works on our side over a large sample of data. So here's how I do that. I determine probability scenarios by just taking those 5 energies of money flow and saying at any given point how many are aligned. I give each set up a score of 1 to 5, depending how many of those 5 are aligned. Higher the score, the higher the probability, of course. So 5 out of 5 would be best. 4 out of 5, we'll take it. What about 3 out of 5? 3 out of 5 energies are aligned. Is that a good trade? What do you think? Type in. What do you think? Is 3 out of 5 energies, does that give you a probability scenario? Type that in. Let's keep the interaction going here. Let's see. I'm looking at some of the other comments here. Shanti, you put your comments right where you're putting them. I can see them. Yep. Risk management. I love that people typed in risk management. Okay. Oh, nobody's answering whether. Oh, there we go. Oh, wait a minute. I think I had to scroll. Nope. Oh, here we go. Okay, now we're getting some answers. There might be a little delay here. That's kind of normal with broadband or this kind of technology now. Let's see. Okay, so now we're getting some answers. All right, good. All right. So yes, you might think, so we got all different answers here. We got yeses, we got nos, we got in-betweens. Okay, so that's cool. That's awesome. That means you're about to learn something you didn't know. Hey, about to learn something new. So 3 out of 5 is not enough to trade with. And the reason is this. Yes, it looks like 60%, and at the surface it is. But the problem is there are other considerations such as slippage, the bid-ask spread, your commissions, your exchange fees, all, any other fees that you've got. And so that, when you add that to the equation, all of a sudden that 3 out of 5 and that 60% becomes like 50-50. So don't forget about all these other little things. These are the costs of doing business. Okay? So we got to have at least, in my methodology, I insist on at least 4 out of 5 of the energies. Don't need all 5, but I do need 4 out of 5. And it's kind of like taking a trade to court. So you see, it's a very logical approach. I need 5 independent witnesses to establish a preponderance of the evidence. Now, the operative word in that sentence is independent. So you can't just throw a bunch of indicators on a chart and say, okay, I got 5 indicators here. I'm following various top dog trading 5 energy method. And when all 5 align, good, I'm going to take a trade. Not quite that simple. The indicators you choose, and by the way, I don't use 5 indicators. I only use 2 indicators, but I'm still able to measure 5 different energies of money flow. But it's very critical how you choose those and that you understand what they are telling you, the story that they're telling you, what the logic is behind the math equation. So we've got to have them each independent, meaning that, okay, well, just like I said, trend is not the same as strength. Trend is just direction. You could be walking north, turn around in 1 footstep, all right? But momentum is not correlated with direction, in that momentum is like a bullet train going north, all right? It cannot turn around in 1 human footstep because it's got momentum. So that's the difference there. Then you got your support resistance. That's like a brick wall. Then you got your little oscillator for cycles. So they're all measuring the same thing, but from different perspectives. If you're using things that are redundant, well, it's just a waste of landscape on your, or real estate on your charts, and doesn't increase your probability scenario. All right, so that's the key to the system. 5 uncorrelated mathematical measurements of money flow to give us a probability scenario over a large sample of data. So let's put it together. Let's put some visuals to this puppy dog and make it bark. All right. Does that make any sense? I don't know. So putting it all together, we've got Starbucks. So what does Starbucks make? I don't know. I guess they're selling stars. So here's an example on MetaStock where price is coming up, up, up. So trend is up. I just used the 50-period simple moving average for trend. Nothing fancy. Again, nothing fancy. Don't need it. All right. So 50 MA is going up. Very common moving average that a lot of people use. Kind of has a self-fulfilling prophecy for that reason. People even tell me that. They're like, yeah, well, it only works because it has a self-fulfilling prophecy. And my response to that is, well, why would you diminish that being the reason it works? The markets are masses of people and the computers that they programmed all over this beautiful planet we live on to call Earth. So something that has a self-fulfilling prophecy is exactly why you would want to use it for trading. Because who do you think's trading? Masses of people. And so, yeah, if it has a self-fulfilling prophecy, that's a good thing to trade, right? The market's not some objective thing out there. It's people trading. And the computers they programmed in their algos and all of that, yes. But it still came from people's brains. So if it has a mass psychology effect, it's fantastic. That's exactly what you should be trading. Anyway, so we've got a trend is up. Now, another key aspect of trend is how early is the trend. Not all trends are created equal. So you know the old saying, the trend is your friend until the end. Well, that is very important. Now, we've all heard that as a general statement, but what does that really mean? What's behind that? What's the learning moment behind that very famous slogan? And it's this. If you think about it, when he says it's your friend until the end, that means it's your friend early in a new trend. So I don't just trade trends. It's not quite that simple. The little distinction here, the dollars thrown in the details, if you will, is that I will only trade in the direction of a trend early in a new trend. And I define that with waves. Now, these are not the same as Elliott waves, but it's a similar principle. These are more objective. You know, Elliott wave is great. By the way, I traded it for a while. Still have a friend who trades it. He makes money. There's many ways to groom a cat. So there's many great approaches to trading. But I decided after trading Elliott wave for a while, it was a little too subjective for me, and I wanted something, again, I'm very rule-based, very mathematical, very objective. That's everything I do is that, and that makes it duplicable as well, of course, since we're all trading the same math functions. And so I created what I just call, for lack of a better term, Berry waves. And these Berry waves are mathematically defined. Now, because of that, we're not limited to 5 waves in a trend. As long as the trend goes, it'll continue to create more waves. But the benefit of that is that it tells me when we are beyond an average trend statistically. So 5 waves is an average trend, but we're not going to recount waves after we get to 5. We're going to go to 7, to 9, to 11, and now I know, oh, okay, we're in an extended trend. At that point, the trend is no longer my friend statistically, so I will start looking for reversal trades, trend reversal trades. So the earliest you can get into a new trend that is confirmed is wave 2. 1, first high after a new trend. 2. All right, so we're starting a new trend. Number 2, momentum. This is the momentum indicator, top dog trading momentum indicator, angling up, coming back up off a low. Bam! Okay, that bullet train has left the station. Going 100 miles an hour, 715 tons of money, honey. All right, then cycle low. Now, this is my cycle indicator. It's a modification of a stochastic indicator, by the way. Good old-fashioned, slow, or full stochastic. But there's a key here that we look for. Okay, again, stochastic indicators, you can see, look up here, for example. So K crossing below D, K is the black line, D is the blue line. And, you know, it crosses below here. Does the market come down? No. Does it come down here? No. Does it come down here? Well, yeah, finally it does. So we look for a pattern. Pattern. How do you pronounce that? I've had people tell me I pronounce the word pattern weird. So I don't know. Is there an English teacher out there? I would appreciate it if you would correct me on that. So the pattern, I'm going to stick with that, right or wrong. I'm a trader, not an English teacher, obviously. Is what we call a mini divergence. Mini divergence. So what that means is price bars are lower, but K, and it's the black line here, K is making a higher low. And see how mini that is? Just like this. Not between swing highs. That's a regular divergence. Those have an application as well. But the application on this, the way we use it, is just to find the final low before the market goes up, to time our low. In this case, to time our wave 2. And say, okay, when I see this, and by the way, George Lane created mathematically the stochastic indicator to be a momentum indicator, and that indicates a little momentum shift at the bottom of a single swing low. That's what gives us high probability that that is the time to go long, so that you don't get stopped out as often. Many of you said you have a problem being stopped out a lot. So this here is one of the solutions. You wait for the market to identify a momentum shift at a low, and then, I mean, this is just amazing. Nothing's perfect, nothing's a miracle, nothing's, you know, magical, but because of the mathematical equation of showing a shift in the momentum of money flow, works pretty darn well, because that's how markets move. Okay, so this, I'm going deeper into the energies now and showing you the visuals of them. So trend, but it has to be a new trend, and that's how we measure it with waves. Momentum shift, okay, momentum, I mean long-term momentum, first of all, that's down here. Little momentum shift within just a few bars. Support of the 50 MA, that's energy number 4. Then energy number 5, which it says the most important one, we go to a higher time frame. This one's a 30 minutes. See the 1-to-3 ratio between the time frames. So it's a very tight correlation time-wise. And now we go over to this puppy and we say, okay, do we have an alignment of energies? In other words, am I trading in the same? It's not so much direction as it is the strength. The most important thing on the longer time frame to confirm the shorter time frame is strength. We don't want to be buying a market when the higher time frame has bearish strength, and strength's measured by momentum. So we go over here, sure enough, momentum's up, and we also happen to have what I call concurrent cycle lows. So this is a good time to put in a low on the 30-minute, good time to put in a low on the 10-minute, and those are just amazing when you get concurrent cycle lows. Those are not required in the top dog trading method, but you get fewer better trades, nothing but net trades, we call them. So that's it visually on how the 5 energies all work together. And again, it's just, again, mathematically, nothing subjective about this. We're not guessing. We don't have a feeling in our gut, right? We're taking these math equations, they plot on a chart, and they plot what money flow, strength of supply demand, and then we just follow the money, honey. Okay. So nothing else. Oh, yes. So you can use different time frames. Absolutely. You can use, I put 10-minute, 30-minute up here. No particular reason for that. I just had to put some time frames up there. I could have put a 1-minute and a 3-minute. I could have put a daily and a 3-day. I could have put whatever, 5 and a 15-minute. You could do this with tick charts. You could do it with, yes, it works with stocks, Forex, futures, commodities, options. Again, because, well, it's really a universal trading method because, again, all of these markets are just auction places. So they do have some unique characteristics for sure. But as far as measuring the money flow, same for all of them. So pretty much any time frame, any market. The only criteria that I have, that I self-impose, is that I personally don't trade markets that are illiquid, because again, we're trading money flow. We want there to be some professional money in there that is trading in a systematic, organized way, not just, if it's only people who don't know what they're doing and amateurs trading something, the charts tend to reflect the mentality of the people trading them. And so then those charts tend to be kind of chaotic and noisy. So I like to trade markets that have professional involvement, that professionals are trading in a systematic, logical way. And then the charts will form nice logical patterns as well. And then two, I want liquidity, just so that my fills are good. I can get in, get out, get tight spreads. Okay, so let's move on here. Doing time-wise, okay. All right. So now let's go to my favorite trading technique for pinpointing market highs and lows for entries and exits. And what we're going to do is we're going to deep dive into that stochastic indicator for you. Okay, so I'll show you how to set this up on your charts. I want to give you some real details. So far it's been, well, we started with a big picture, and now we've narrowed it down a little bit more. And now, at least on this one cycle indicator, since I promised to talk about timing, we're going to deep dive into this. So I'm going to actually just give it to you here. So we use the stochastic oscillator. That's what it's called on MetaStock. On other platforms, it could be called other things. It could be called slow stochastic or stochastic full. But don't use MSI, don't use fast stochastic, don't use double stochastic, don't use Stoch RSI. None of those work for this purpose. They might work well for other purposes, but not for this. All right. So what we do is we change the parameters. We do not use the default parameters. So the primary one we need to change is %K. and we're going to change that to 5. A lot of charting platforms defaulted to 14, but for our purpose, no, we need it to be 5. And what that literally does, remember, look, it says time periods. What's that mean? Well, basically length. And some charting platforms will actually call this length. So we want it to be measuring over a period of 5 bars. Put a moving average of it on 2. That's what slowing means. And then D, that's the moving average of the slowed K. We're going to change that to 3 and make it a simple moving average. Okay, so take a second, write those down. There'll be a recording of this, so if you missed this part, you can write that down too. But this is how we take the traditional stochastic momentum indicator and morph it into a timing or a cycle indicator. So, and then, I put in the horizontal lines at 20, 80, and 50. 50 is the mid-range. You got to be careful. If the stochastic indicator just wobbles around 50, the mid-range, you may be in a choppy market. It's one way to help you avoid choppy markets. Again, remember this is a momentum indicator, so it is telling you that there's really no dramatic strength to the up or downside, which could very well indicate a very choppy market condition. Okay, so those are the 3 lines that I draw. Again, pretty simple stuff. Now, it's not useful by itself. I get so many people get enamored with indicators, you know, and I tout indicators, they're good, but they don't directly make you money. If they did, we'd call them money makers instead of indicators. We call them indicators because they indicate something else. They point to something else. So like I have right here, please, 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 in the name of all that is holy, do not just take this, what I'm sharing with you, and go throw money into the market. You will lose, because it is not about just using any one indicator. No one indicator directly makes you money. It's a piece of evidence, as we talked about. So you've got to use this stochastic indicator, this modified stochastic, in and along with the other 4 energies. So we're only going to trade these cycles highs and lows, early in the trend. We're only going to trade these cycles that have momentum. We're only going to trade these cycle highs and lows where the fractal energy is behind it. And we're only going to trade them when we have those little mini divergences. I call those second chance patterns. That's the high probability cycle high or low pattern. Now, I call them second chance patterns. There's many others as well. I showed you the mini divergence. There's a total of 6. So we don't have to just wait for the little mini divergence, but we can't just look for a K and D cross either. So I've cataloged 6 different of these little second chance patterns. Mini divergence is just one of them. So here's the problem. Problem is we want to avoid market coming down, coming up. Okay, here you got a simple cross of K and D, goes down, and then it goes back up. It takes out this high. Stop, or not stop running, but just getting your stops run. Okay, so got in, as my mentor in Chicago at the CME said, right? You got in the right direction, but at the wrong time. So how do we prevent that, or at least help prevent it, minimize it, mitigate it? So we look for these little momentum shift patterns. Again, 50 EMA is going up, trends up. Stop at the 15 EMA. This black line's the 15 EMA. Make a little lower low in price, higher low on K, the blue line. That's your little momentum shift pattern. 1, 2, 3, 4, 5 bars. Remember we changed K to 5. This is why mathematically it's measuring a momentum shift of 5 bars. How's that for accuracy? And up it goes. All right, it can work. That's a trend trade. Now it can work for trend reversals. If we're late in an extended trend, then we don't trade in the direction of the trend. Now the statistics are against the trend. So we catch that by waiting till after 5 waves of trend. And then we look for our friend, the mini momentum shift again. So again, boom, 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 comes down, price lower low, K higher low, and the trend reverses. This actually gives us an indication the trend's reversing before the 50 MA, because the 50 MA is slow. It's slow. Slower than my dad trying to get out of his lounge chair. Okay. Sorry, Dad. Here's a consolidating market. Higher high on price, a little lower high on K. See how many that divergence is? These are can be real subtle, but I can teach you all 6 of these. So the summary of high probability trading is, number 1, wait for the alignment of the 5 uncorrelated energies to put the odds on your side. Number 2, numero dos, 2. This is my whole trading methodology in 1 sentence. You should have a trading methodology that's short, has details, has distinctions, has some sophistication to it. But at the end of the day, is actually pretty simple and can be described in 1 sentence. And that's what I got. And there it is, handed to you on a silver platter. We trade early in the new trend, number 1. That is strong. This finger I have problems with because my Cane Corso yanked it with my, he's 168 pounds. And well, I guess 1 finger in him running, that did not work out so good. So early in the trend, that is strong, that's momentum. At the right time, that's our modified stochastic indicator, with support at your back or resistance if you're going short, and finally confirmed by the higher scale, the multi-dimensional chart, so the chart that is 3 times the time frame of the short-term chart. Very robust and adaptable. Again, works for pretty much any market, stocks, commodities, options, currencies, futures. I personally trade all 5 of these markets, so I know from firsthand experience. Works for a variety of time frames, works for investing, swing trading, day trading. These are just all fractals, so the markets work the same. Now you can get down to too short of a time frame where it just becomes noise, so you got to watch that a little bit. But otherwise, yeah, it's the same dynamics on different time intervals. So whatever time intervals you like, you can probably trade it with this methodology. As long as, like I say, you're not trading like a 5-tick chart on a stock that only trades 100 shares a day. Then that's kind of ridiculous. So it's simple, it's objective. I mean, oh my gosh, we're counting to 5. That's it. Now, MetaStock has some super uber cool additions that no other software has. No other, MetaStock's the only one that has these for top dog trading. So first of all, you get all the indicators that are already preset, so you don't have to go and worry about modifying it. And well, do I have it right here and all that? I get questions like that every day. So with MetaStock, it's all preset here when you get the top dog trading plugin. So we've got the cycle indicator, we got the momentum indicator. I'm not putting it all up here right now, but you get the wave counts, and these are objectively measured and automatically plotted on your chart. So you don't have to even know how to count the waves. You just need to know, okay, well, when we're here, now we've got, oh, and then it's got the commentary over here. This is what I really wanted to highlight on this slide. Time, oh, doing good. Okay, so this right here, see where that little, that blue, what is that, triangle? No, it's not a triangle, I don't know. It's a marker. And so that is related to this commentary that comes up in MetaStock, and it's automatically there for you. So it does all the heavy lifting for you. And so it says, hey, Dennis, T, Mona, Ed, Nathan, Dan, James, Fishek, hope I pronounced that right. If not, I apologize. We have a 9-wave reversal pattern here to go short, right at that dot right there. And then it tells you the basic setup, 9-wave high, 50 MA angling up, %D has been up to 45 or above. Again, all the rules, there's like I say, under the hood, there's a lot of detailed rules here that give you a probability scenario, but it spells that out for you right here. So that's the basic setup. Then it gives you the commentary, and then the confirmation to make it tradable. And then there's your entry, there's your initial stop, and there's your targets. And it'll actually give you these. Just hand them to you on a silver platter again. So, wow, no guesswork. So it's still important, I think, to understand the basics so that when you read this, you understand what it's talking about, but you don't have to guess. It's all automated in the software, in the Top Dog Trading plugin. And I worked with MetaStock personally to create this. Now, I'm no programmer, Jeff can tell you that, but at MetaStock, they actually have real professional programmers. And so I used English the best that I can to help them over there to translate this into the programming language, and they did an amazing job. An amazing job. In fact, I don't even think there's any software out there who's capable of doing this. So just phenomenal. I'm so proud of what they've done over there, and I'm really proud to be associated with them and to offer this. Jeff will talk more about that and show you some more of the features of the Top Dog Trading plugin for MetaStock. I just want to offer you some extra freebies here before I leave, and that is this. Number one, I'm going to give you my personal email address. So I've been with you here for 45, 50 minutes, but can't answer all the questions that have come in. You may think of some questions later, perhaps. So I'm here to serve you. If you need anything, have questions about what I talked about today, feel free to email me at barry@topdogtrading.com. That's my personal email. Now, I'm also going to give you a free gift, and that is my rubber band trade strategy. This is an actual trade strategy, a trade setup that you can trade and, well, hopefully start making money with it right away. And that's my goal. I want to just give you a trade setup. Obviously, try it on a demo account, simulator account to prove that it works for you. And so I'm going to give that trade setup to you, complete rules, exactly where to enter, where to exit. It's included in my free little trade. It's a little mini course called How Pros Trade Different Than Amateurs. So you're going to get that course. You're going to get that set up in that course, and you're also going to get more details about my cycle indicator at a follow-up webinar. I'm not quite sure when we're going to do that today or when we're going to do that. I think we're going to do one maybe tonight, maybe one Saturday. Anyway, when you sign up here for topdogtrading.com/free, you'll get all the information. So you'll get when it's going to be. In fact, you'll get a little list of the next live seminars that are coming up. And the recorded ones, we've recorded ones too. In fact, we have this one on recording, so you can watch it at your leisure. And all of this, all the stuff for free. Just go to topdogtrading.com/free and enjoy. So, Jeff, I think I finished on time here. I'll turn it over to you, but I'll stay on and let you share with the good people here what you want to share with them.
All right. We didn't have a lot of... I need to move this microphone so you can hear me. We didn't have a lot of questions, but Nathan said, thank you for being so generous, Barry.
Well, you're very welcome.
All right. Let me go ahead and let me just go in and take control a little bit here. I want to show kind of the work that we did for this add-on. I didn't program it either. So I'm actually not quite that good of a programmer either. I do tinker around in MetaStock, but this is definitely kind of some stuff that's done by, let's say, a professional programmer. And this is basically, it's a small little company known as General Electric that I've decided to just pull up. And I wanted to kind of show you how this is all kind of put together and presented if you were on a chart. So you'll see automatically you're getting kind of these these kind of modified wave counts based on Barry's methodologies. This is a daily chart. You got the 1, the 2, the 3, 4, 5, et cetera, et cetera, et cetera. Anytime we see a, you also have the notifications. That's the word I'm looking for, of divergences here that Barry was talking about. We have the momentum wave counts down here. It's a pretty clear picture of what it's giving you. In addition to doing the wave counts, anytime that it sees an opportunity that exists on the chart, you'll notice that it'll highlight the bar give a buy signal. So you see there's a buy signal here, there's a buy signal here, and there's a base buy signal way back here in kind of your second wave. And we did use the full commentary capabilities. I love commentaries personally because it allows us to kind of really get specific about what we would recommend that you do when something happens. So I'm going to open up that window. I'm going to go ahead and click on View Expert Commentary right here, and we're going to go to number 2. Okay, and when I do that, I just move that arrow over. So I'm looking at this buy signal here, and I'm going to zoom in just a little bit so you can see it. So right here, you can see this buy signal. I'm going to actually kind of keep zooming in a little bit. Okay, and right here, you've got the momentum wave counts. The instrument is currently in a cycle low. I'm just going to undock this for a second so I can make it a bit fatter.
And then I'm going to dock it back in there. Now we can kind of see it a little bit better. So we get an entry signal. Our entry signal is at 7.86. Our stop is at 7.090. I love this. You get an entry, you get exactly an idea of where your exit's going to be for your stop loss. And then it kind of gives you some definitions of what your target should be: the first cycle high, the second cycle high, a trailing stop of your choice. One of the things that we actually did, so this signal is called the first retrace of the after the cross. And this is also the first retrace in a trend long. So there's actually two patterns that are going into this buy signal right here. But one of the things that we did with Barry is Barry had so much information about the patterns that we literally couldn't fit them into the software program. So one of the things that we came up with was we wanted to include all of the information. What we did is if I click on this little file right here, it's going to open up in a bit of a web browser. And it's just going to give you like the setup, how we're finding it, what the confirmation is, what our entry, how those are calculated, and some additional things that we just couldn't fit in the commentary. And so we really packed a lot of information in here when we put this together. So let me go ahead and kind of come in here. I want to show kind of how this kind of fits together. I'm actually kind of was working a little bit earlier. So we've got the 5 energy method. You've got the trend, the momentum, the cycles, the support, resistance, and the scale. And it's going to be looking at 4 different patterns in there. This add-on is really, really very good. We normally sell it as a one-time cost with a 30-day money-back guarantee. Here today, it's normally $500. Here at the webinar, we're going to do it for $399 as our MetaStock webinar special. If you're new to MetaStock, we'll include a free subscription to MetaStock as part of that. And you can order by either going to metastock.com/conference promo or conf promo. We can give us a call at 800-882-3040, or you can go online and chat online with us at metastock.com/saleschat. I'm kind of looking at the time, and I have a little bit of time, so I'm going to go back into the product for a second, and I'm just going to show you how the scanning works with it as well. So let me go ahead and go back in here. Barry was very gracious with giving me enough time to kind of talk about this. Robin says, you'll go broke giving away everything, Barry. So, Robin, Jeffrey says, great info, generous follow-up. Jeffrey, great name, by the way. I love it. It's even spelled correctly, Jeffrey. So, James says, thank you, Dr. Barry. And Dan says, thank you, Dr. Burns. So, yeah, great job today, Barry. Let me show you how to run a scan real quick, because it's not going to take a lot of time. Like, this is our power console. So you can see kind of where the signals are coming in. You've got like your first retrace in the long and the first retrace after the cross. Over here, we had a couple more signals that you can see came in. If I wanted to scan for any of these signals, all I have to do, I'm going to open up the power console for MetaStock right here. And what I'm going to do is I'll just go down to, we named them all. I'm going to actually, we got a few selected from yesterday still. I'm going to go back down to where they're all labeled TDT for Top Dog Trader. What I'm going to do, just get down there. So here's the kind of the different scans that we've got. We've got the 3-to-1 confirmations, the 5 ones. If I wanted to find like the dad trades, the rubber band trades, the trend trades, the triangle trades, maybe I'm looking for some reversals. Those are I can just choose whatever I'm looking to find. Let's go ahead and find a top dog trend trade. So I'm going to go ahead and select there. And one of the things that's been extremely beneficial with us and working with Refinitiv and getting their data from them is we literally can scan anything that you might be interested in. We cover like 200 different market exchanges. Now, I'm not going to scan all 200 of them, and neither are you. But if you're interested, like we literally have hundreds of thousands of different things that you can scan. For me, what I'm going to do is actually I'm just going to go into this index constituents list right here. I'm going to basically do a scan for the S&P 500. We'll go ahead and start that exploration. And it's just going to go through, filter out all of the stocks that I'm not interested in. Right now, it's filtering out about 98% of the stocks. And just give me the ones that actually have an opportunity that exists in the market today. And for me as a trader, like I just, a lot of it has to do with focus. For me, like we've rejected maybe 382 out of 386 right now. If I'm only looking at 4 stocks instead of 400 stocks, that's extremely helpful for me. And here it is. If we're looking for some positions right here, we could be looking at these 4. They're all shorts. You can see right here that it's a 1 retrace short. And then these are the different stocks that we could be looking at. No long opportunities. Again, I just want to be able to focus. I want to be able to kind of cut through the clatter. The markets are so noisy with everything that goes on. And this allows me to do it. And it allows me to do it Dr. Burns' methodologies. It's just awesome. So anyway, any final thoughts, Mr. Burns, Dr. Burns?
Yeah, well, just the one comment there saying, I'll go broke giving away so much for free. And it's a little tangent. I understand what that person meant. But I've also had people ask a similar question as to, well, if it works so well, then why do you share it with everybody? Because then won't stop making money. And I don't think that everyone understands how huge the financial markets are. It's not like everybody around the world is ever going to use the top dog trading method, or even 1% of the financial world. And I mean, MetaStock offers just so many exchanges. I mean, you can find any market on MetaStock. And that was just a little sneak peek there. It's kind of timely that you showed all of those markets and exchanges. The data that you guys have is just incredible. And so, yeah, as many people as I could share this with, it still wouldn't put a dent in the number of people trading all kinds of methods, all kinds of time frames, all different systems, algos, quants. It just goes on and on and on. It's a very complex place. So we're just looking to get our little niche out of it, and it works great. We find our own little angle, and other people have theirs. So we play our little niche of the market and take that. And when things work according to another system, hey, you got to let some other people make some money once in a while too. Can't be greedy about it.
I like Obed's comment. He says, fantastic presentation and realistic. Thank you very much. I reiterate the comment. Thank you so much for your time today, Barry.
Thank you, Obed, and thank you, Jeff, for putting on such a great multi-speaker event this week. It's just been fantastic.
All right. Thank you, Barry. I'm going to dismiss you just so you know.
Yep.
Here we go. Thank you very much. We'll
see.
We'll talk to you soon. All right. Let's go and do that. All right. Again, for the conference special, $4.99 is going to be your normal price. Very, very popular add-on. $3.99 here at the event today. That if you don't have access to MetaStock, I'm going to give you a free copy of it. You'll be able to try the highest rated software in its price category 28 years in a row as part of this. We do cover it with our money back guarantee. So if you're not happy, your risk reward is really, really good. So metastock.com/conf promo will get you there. 800-882-3040 or metastock.com/sales chat. T, thank you for the question about the constituents list. I did not build those myself. Actually, I'm going to go in there and somebody's actually kind of taken some of them out. You actually have tons of constituents lists in here, and you can have an ability to kind of hide the ones you don't want. But these are all put together for you. There's a ton of different constituents lists that are already put together and maintained for you every single month. One of my favorites is all the list of the ETFs. If you like to trade ETFs, that's available, or all of the optional stocks. I like to do a lot of scanning of just the optional stocks list, but those are built for you already. And somebody's gone in and filtered this list. I'm going to reset it while Vince talks because I like to be able to show the constituents list. But to answer your question, no, you don't have to build your own constituents list. Those are put together and maintained for you automatically. Every month or so, you're going to open up the software and it says, we've updated all your lists. And it's just, you don't have to worry about it. So good question. Appreciate it. Let's go ahead and get back over here. Okay. What I would say is you can take advantage of any of the add-ons we're talking about today. You can also sign up for our extended trial if you'd like. That's where you buy 1 month and you get your second and your third month of MetaStock for free. We're going to be talking about MetaStock all day. I've already talked a little bit. We're only one session in, but I talked about scanning and testing. And yesterday we had a really good demo by Scott of the forecaster. All of this starts at like $59 per month, $69 here in the US. You can actually get 3 months of MetaStock for that $69. So you can get that extended trial or watch videos or anything you want to. Just go to metastock.com/conf promo. I do want to say real quickly, thank you to Stocks and Commodities for hosting our event. I know I talked a lot about them all day yesterday and between every break today so far, but we do appreciate them helping us with the conference. They've been great partners and we absolutely love them. I've had the magazine myself since like 94 when I started. And I think we still have every issue from that time over here in our filing cabinet. So it's a great magazine. They're great people to work with. And if you just registered today and came to the event, you're going to get a free issue. So our next presenter is Mr. Vince Vora. Vince and I have been working together for a number of years. I love Vince. He's got a very, very easy way about him. When he talks about things, they're very, very understandable. I like kind of particularly the way he talks about money management. I've worked with Vince very, very closely on a number of different systems over the years, and he's one of our most popular systems designer. So we really appreciate the work he does with us. Vince, let's go ahead and bring you on here. Maybe.
Good morning, Jeff. Can you hear me?
Yeah, we can hear you. Good.
Excellent. All right. Thank you for having me on. Let me share.
It's good to see you.
Same here. It's good to see you.
Did you have a good, well, I don't know. I was just going to get into the woods, but I should get out of the way. People are here to hear you. So
not a problem at all. I hope you can see my screen.
We can. Everything looks good. We can see you.
Excellent.
I can see at least 3 different time zones in the background there.
Yes.
You're good to go. I'm going to get out of your way.
Okay. Thanks again for having me on. Appreciate it. And welcome, everybody. Glad to be with you here today on this great event. Today, what I did want to speak to you about is our victory method. This is something that I put together late last year, at the end of the year. I had a conversation with Jeff, and I was mentioning I thought that this year's markets would be volatile, and I wanted to find something that was going to be very responsive with the type of markets I was expecting we would have. And so he helped me program it. Him and the other staff at MetaStock helped me program it. And so that's what I want to share with you here today. I am very pleased with the way this worked out. Before we get started, just want to say that trading can be risky, of course, so please don't trade with real money until you get very comfortable with the system you are trading with. So no more slides today. I want to focus the whole time we have together on the charts and explain to you what victory is, how I use it, and hopefully how you can do the same. So what you see here, excuse me, is my MetaStock platform along with the indicator, the victory indicator on here. So you'll notice a few things. There are obviously green and red arrows along with these green and red dots. And then every once in a while, you'll see a yellow bar and maybe an exit sign. So what you're looking at here is a system that is based solely on technical analysis, but really only has 2 indicators involved, okay? So when that combination of those 2 indicators come together and we have a clear trend and momentum on our side, that's when it's best to use this system. So throughout the session, I'm going to flip through many, many charts. I'm going to show you some of the more popular ones at the beginning, and I will show you equities, Forex, futures, you name it. You can trade this on any market, any time frame. If we have time, I will certainly show you other markets. We can look at the Asian markets. We can look at Europe, etc., and look at different exchanges just to prove to you that it really doesn't matter what it is you're trading or where in the world you're trading. You can use this on just about anything. It's two simple indicators that really align when you have a clear trend and momentum on your side. Now, you do not want to take every single signal. So I'll explain exactly which ones you want to. But the whole point of this was not just to have a system that responds to quick changes in the market, but one that is very, very simple and easy to use. Because I truly believe, after almost 35 years of trading, that keeping things simple is best. I know you've heard that many times, but it's actually been my experience. And I've been a lot more successful as a trader when I've managed to keep things extremely simple. So let's go through this. Whenever you see a green arrow, what it's signifying here is a long trade setup. Okay. If you see a red, obviously a short trade setup. Now, the circles here are the dots. The green ones obviously are for long trades as well. Now, what the dots are, what they mean is that the same two indicators that lined up when we saw the arrow have lined up again. Only we've displayed this as a dot or a circle instead of an arrow because we're already in that trade. Okay, so this is again another trade opportunity, but since we're already in the trade, we're just marking it as what we call a re-entry. So this is giving you an opportunity to either jump in on this trade if you missed the initial call, or add to your position if you are a little more aggressive and would like to add to your position. Or else you could just use it as confirmation that you should still remain in that trade. Okay, now, once we call a long trade, all the bars will remain green. If we call a red trade, they'll all remain red until, of course, we either get an exit or a change in direction. Sometimes the two indicators call for an immediate flip from one side to the other. Other times they call for an exit and then one or two bars where we're out of the market completely until we wait for another setup to come together. Okay, so again, we do not want to take every single signal. Reason being, we don't always have momentum on our side or a clear trend. Okay, so obviously we can identify a trend by just looking at the high and low pivots, right? These turning points. And if you have a series of higher lows and higher highs, you're clearly in an uptrend. If you have lower highs and lower lows, you're clearly in a downtrend. And then, of course, we want to identify momentum. And that's where this blue line comes in. And this is a 20-period simple moving average. Okay, just a 20-period simple. You can use exponential if you like, weighted. I always prefer to use simple. And what we're looking for from the 20-period moving average is a slope in the direction of the trade. So you'll notice that here, during these two re-entries, the 20-period moving average was sloping higher. And that's exactly what we want to see, right? Here, when the initial trade came together, it was flat. So the way I like to trade this is just to look for the trade setups, whether they're original or re-entries, to happen along a sloping 20-period moving average. So for a long trade, I want that 20-period moving average to be sloping higher, and I want the entry to be near the 20. In other words, if this gave us an entry, but it was on a gap and the bar was up here, far away from the 20, I would not take that trade. So I want the bar to be close to the 20, and I want the 20 to be sloping higher. Same for short trades, okay? By the way, this is the SPYs, the S&P 500. So here's an example of a nice short trade. So if you recall last February, March, when the whole pandemic thing started and we went into a lockdown, the market fell apart, right? So the initial trade setup here is the 20-period sloping. No, it is not, right? So I'd much prefer it to be sloping. So if I'm an aggressive trader, I can take that signal, but I prefer not to. I prefer to wait for some sort of retracement and that 20 to be sloping. So this trade here definitely is one I would always jump on and ride low. The bars are colored the same color to keep you disciplined. How many times have you been in a trade, you know, where you get in, it goes in your favor a couple of bars, and then it starts to retrace on you, right? It makes you nervous, makes you second guess your decision, maybe scares you out of the trade quickly. The reason we paint these bars all the same is to keep you disciplined, not worry about it, and keep you in that trade until it's time to get out. Now, I will say a couple things. First of all, everyone's got a different trading style, right? So the entries are the entries. When the formula comes together, it is highly accurate. By no means will I tell you that it's 100%. It is not. Nothing is. But it is highly accurate, okay? Highly accurate when you have that slope in your favor. So you can look for areas where we have a flat, like sideways action. For example, one stock that comes to mind is Microsoft, right? Was in a consolidation for a very long time. You notice all these signals, buy, sells, right? But look at the 20-period moving average, completely flat. So I would not trade any of these myself. Why would I want to make it difficult on myself? Why would I want to risk my money here? Even though, you know, when you get in, it doesn't work out. It gets you out quickly. So the losses are small, which is, you know, what you should try to always do is keep your losses small, okay? But why would you want to fight all this choppiness when you could just look for the trades that have a nice slope on that 20 and just take those? So if you look back here, right? This one, this one, this one, this one, very easy, right? We go back a little further, right? And look at these ones. Winner, 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 right? Very, very easy. Why? Because we have two key components on our side, and that is trend and momentum. And when you're trading with trend and momentum, more than half the battle is won before you even take that trade. You can realistically buy anywhere along this line, anywhere, and make money, right? That's because buyers are fully in control and they're pushing this market higher. We don't know why. We don't really care why. We just need to know that buyers are in control and they're pushing it higher. And the way you know that is because you're getting higher highs and higher lows, and that 20-period moving average is sloping significantly higher. To me, this angle, this degree of slope, is what I would call very significant. So would I take trades with slightly less slope? Yes, I would. Would I take trades with a higher degree of slope? Absolutely. The higher the degree of slope, the better, okay? But it has to be going in the direction of your trade. So if you took all of these, you'd still make money in the long run because your winners would be bigger than your losers. But why would you want to do that? Why would you want to have so many losing trades? And imagine the commission going in and out of here at the same time. So don't fall in love with particular stocks, regardless of the story. You know, I always like to use the example of Apple, right? If you look at Apple's balance sheet and the amount of money Apple makes, you know, if the stock price was just a reflection of their financials, right? Apple should never have a down day ever. It should always only go up. But that's not what the stock price reflects. The stock price reflects what most people anticipate in the future for that stock, right? And there's all sorts of opinions out there, but it's very easy to follow along and only jump in on the trades that have a trend in place and have a slope on that 20. So if we go back here on Apple and look at these, right? Just look at the arrows and the dots that happen along the slope, right? So this one worked out. This one, break even, maybe even a little loss, right? This one certainly worked out, right? Same here. Maybe a break even, a small loss. This one we would not take. That one worked out. In other words, the reason I say it's highly accurate, because it works out way more times than it doesn't when you have a slope like this in your favor. If you're trying to take these signals, it will not work more than it does not work. In fact, you'll lose more than you'll win if you take these ones alone, okay? If you take them all, yes, you'll come out ahead. But why would you want to sit through this here? It'll drive you crazy. It'll not only cost you money, but it'll cost you confidence as a trader. So don't do it. Wait for a slope and then take those trades, okay? So again, trading with trend and momentum is really all you need. Bruce, the yellow bars here are telling us that those two indicators that I talked about at the beginning, they need to line up in order to give us some sort of signal, long or short. When they are not lined up, when one is going in one direction, one is going in the other, we have yellow bars. And that's telling us to stay away from this particular market, okay, this particular stock or index or whatever it is that you're trading. Stay away from it and just sit tight until the next signal comes along. That's all it is, right? I'm just trying to keep an eye on the chat session here. Yes, it does include, you can look at crypto or trade crypto with this. I'll show you Bitcoin and Ethereum in a second here. And Juan is asking for 5-minute, 15-minute time frames. Absolutely, we can look at that. Let's go to a 5-minute on Apple here. So any time frame. Now, you're going to run into days where there isn't much movement, or you get a big pop at the open and then it kind of goes flat. So you don't always get the best setups every day, and so you just move on to a different looking chart. But here's an example on the 1 minute today, right? Just a few minutes ago. Did we have slope? Did we have higher highs, higher lows? Yes, we did. We got the green entry here, and off we went, right? So it works the same way no matter what. And we can scroll back. Let's go to a different example. Let's go to the SPYs. What time frame is this? That's the 1 minute. Let's look at 5 minute. Okay, and let's refresh here. I'm not sure why I'm not getting any more data here. That's odd. Something happened here. Let's try Tesla. I apologize. I thought I had set for more data here. Let's refresh the indicator. There we go. So here's Tesla on a daily chart. I can show you weekly, monthly, and I'll go back to the shorter time frames as well. But have a look at Tesla here, right? When you have a clear trend in place, as opposed to this flat area here, right? Now, you can trade breakouts with this as well, right? You can mark the highs, right, of that consolidation area. You can mark the lows and wait for a breakout one way or the other. You can trade it that way as well. That's the only time I would take one of these signals. But then again, why, a lot of the breakouts end up being head fakes, right? So why not just wait until you have slope? So here's an example of when we're far from that 20, right? So for example, this re-entry here on Tesla, I would not take personally because it's too far away from the 20. And why won't I take it? Because generally when you move far away, you snap back to it, right? You can look at any time. Whenever you move away from any moving average, right, you're going to snap back. So when you can get it near the moving average, that's when it's best, okay? The other thing is, if you are anywhere near all-time highs or an area on the chart where there's very little resistance overhead or below, if you're trading short, then it's an even stronger trade, right? But again, throughout this move here, you could buy it at any point and make money, right? What this does is give you these entries that give you a much higher probability of profit based on those two indicators that when combined are very, very accurate, okay? You can see it here and you can see it back here. If we go to the weekly time frame, you know, there it is. So you can say, well, you know, oh, I would have missed this. Yes, I would have. My answer would be, who cares? You know why? We miss things every day. Think of how many stocks are out there, how many indexes, how many different crypto coins, how many different futures contracts. You cannot possibly trade everything. You are going to miss way more than you are going to catch. But what you miss does not matter. What matters is what you catch. So would I have caught this one? Yes, we had a slope on that 20. Would I have caught this one? Absolutely. With this slope, I would never hesitate on a slope like that. And so look at those moves. Would I care about missing this? Not at all, right? Let's look at the monthly chart. There. Now, if you look at it on the monthly, you can say, well, you know, I would have missed the whole thing. Well, yeah, you would have if you only looked for that one thing with slope, right? But you wouldn't on the lower time frames. And anyway, you may have missed this one, but you probably would have caught many other charts on the monthly time frame. And I can show you the several. By the way, I don't want to just pick the stocks that I'm showing you here. So type them in, type in symbols. If there's a stock that you traded and maybe you made money on or lost money on, want to know how it would have looked with victory, please, if there's one you're thinking of doing and you want to share it, we can bring it up and I can show you exactly what it will look like, right? Here's another example of a big tech stock that everyone loves to trade, Amazon, right? But look at Amazon. Look at it back here compared to here, right? Or here. Where do you want to be in on Amazon, right? You only want to trade in this area, not here, not here. So you would have been out of Amazon last August or maybe early September here, and would not have been in it ever again throughout here. Now, unless you're trading a lower time frame, right? You can say, well, I like to trade the hourly, right? Well, then on the hourly, you would have had plenty of trades. Look at these shorts back here. Look at this long recently, right? So if you trade intraday, you're gonna find setups left, right, and center. If you trade on a daily time frame, you know, you got to be a little more patient, and weekly, monthly, even more patient, right? Oh, great. Signals are coming through. Perfect. Let's have a look at some of these. So the Qs, everyone wants to look at the Qs. Let's look at the Qs, which is the NASDAQ 100, right? Let's have a look. Here we are on the Qs. Now, let's go back to the daily time frame. There it is. So, two things. One, you want to find really strong entries so you can make money with that trend. But when that trend is about to end, you want to get out of there as quickly as possible, don't you? So you remember February, March, right? So here it is. So the good thing about the combination of these two indicators that I talked about is that the second that trend breaks, those two go their separate ways, which means we're either going to see an exit flag here, right? Or we're going to immediately get a short signal. Now, just because we get that short signal doesn't mean we have that 20-period moving average sloping in our favor automatically. So here it told us to get out, right? And so look, if we were in here and out here, that would have been an actual loss on this trade, but a small loss, and that's what's important, okay? And remember, the other thing I encourage you to do is that if you're in a nice winning trade, especially like, see, you got in here, then you had another opportunity to enter here. But along the way, you would have had substantial profit. So scale out, right? Take some profits along the way. Don't wait till the very end. Okay, you can do that. You can do that. But remember, you're always at risk of a gap against you on news or any other black swan event that happens, right? So it's always good to scale out along the way. But just have a look at the entries with slope, okay? Like this one, this green one, this one, and then all of these along here, right? All of these along here. So, you know, who cares about trading the areas where there's no clear trend? If you look at a chart like this, even without any indicators on it, just look at the price bars, and you're seeing it chop back and forth. Are you going to be able to say there's a long trend right now or there's a short trend? No, you won't. That's your biggest clue to stay out. If you can't clearly define the trend that we're in, that is telling you you should stay out of this market, okay? Let's look at a few others. Home Depot. Wanted to look at Home Depot. RG wanted to look at Home Depot. Here's Home Depot. So again, you know, you have nice trades here. You have a nice short here. You have this one that worked out beautifully. You have this one and this one. Now you say, wow, look at that. I would have missed all of this. Well, you know what I mean? But how many would you have caught on other charts instead of Home Depot? And anyway, who says this trend is over? Home Depot is at all-time highs. On the next pullback, it'll likely give you another re-entry like this, which is going to give you a much higher probability of making money than not. As a trader, your main responsibility should be reducing risk, keeping risk to a minimum. The profits will come, okay? They will come. And if you trade with trend and momentum on your side, then the odds are in your favor, okay? The reason why people lose money trading, the majority of people lose money trading, is because A, they just might not know enough, okay? It takes time to learn this stuff. But secondly, usually they trade with either fear, with greed. You know, why? They're human. We're all human, and we do that. And that's why you want a simple system to follow, but one that will give you an opportunity to make money. And what this does is just jump on board trends, strong trends, because the stronger that slope on the 20, the stronger that momentum is behind that play. So we don't know, I certainly don't care to look or investigate why Home Depot was trending as strongly as it was back here. I don't really care. As long as I see that dot along that upsloping 20 and that price bar is near the 20, I'm all over that. Now, when I structure the trade, I can structure it based on my risk tolerance level. So for example, if I have the highest risk tolerance level, I can just go and buy the stock, right? I don't. I have a very low risk tolerance level. I hate risk. So I might buy a call on that. I might do a debit spread or buy a put credit spread here, right? But everyone can trade it their way, the way they're comfortable with. But what you need to know is that when you make an entry like this, you're much more likely to make money than if you enter a market here. Let's look at weekly, right? There's these trades all along the way if you look at these. And all you have to do is just be patient and wait for these setups, right? Look at the monthly on Home Depot. There we go. So going back to that example, you know, I missed the monthly chart on Tesla. I missed that whole move. Well, I would have caught a lot of the Home Depot move, wouldn't I? And you can look at this over and over again on different stocks. Go back to Amazon, right? On the monthly, there it is. You know, and if it's a dividend paying stock, you're collecting dividends while you're sitting in this. And how easy would it be to sit in a stock like this? Imagine building a portfolio, a long term, like a retirement portfolio using weekly or monthly charts, where you just pick up these and add to it and add to it and pick up more and more dividends. It's super, super simple, right? And you can do it. You can even do it by diversifying with different sectors and ETFs, etc., right? Or, you know, buying a bit of Bitcoin, Ethereum. Here's Bitcoin, by the way, right? Now, this is the monthly chart. We know this is a newer issue, so, you know, we don't have a great trend on the monthly, but weekly. And now let's look at daily, right? And let me squeeze in here. So you can say, hey, this started to slope. So I may or may not have taken this, right? Would I have taken this? No. 20 was flat. Would I have taken this? Yes. This I would have taken. Made a lot of money there, right? Would I have taken this? No. Now, you can, once it breaks the all-time high, jump in. But again, I wouldn't. In this example, it'd be too far away from the 20 at that point. Totally up to you. Would I take this trade? Yes, I made it. But this one, not so much. So I may have taken 2 trades out of this whole chart, right? Maybe 3. But would I have made money on it? Absolutely, I would have. So what would have been my record on that, right? 2-0, basically, right? And so you can look back and laugh at me for missing this or missing this piece here. I really don't care. I made money somewhere, and that's what matters. Let's look at Ethereum.
Hey, Vince.
Yes.
When it's, I have a couple of symbols you could drop down from YouTube if you want
Sure.
them as well.
Yeah.
And just get to these when you can. Apple.
Mhm.
No, that little, I think they do produce. SEDG, SEDG, and Cucumber are all requested from YouTube.
All right, great. And here's Ethereum before I go into those. And again, throughout here, right, you may have believed in Ethereum long term because of the technology and whatever else, and that's all fine and dandy. If a stock or an index or a crypto coin, whatever it is, may have a story behind it, right? I buy stuff that I believe in the business itself, but I'll do that as an investment, not as a trade, right? I'll buy and hold it regardless of what happens, because I just want to be in that for the next 5-10 years. So you may have bought in here for that and you would have done very well, right? But if you're just trying to trade in and out, this was dead money for you. You're trying to get in and out here, you're getting chopped up, and the money you invested here is not making you money somewhere else, right? Once it starts to trend, now is where you start jumping in and making money. Then it goes quiet again and you skip it, right? This one you probably would have gotten in and out at a loss, but a small loss. So the key thing to remember here is that if your winners are bigger than your losers, and you have way more winners than losers, how can you go wrong with that math, right? That's the key here. And all you have to do is keep it very, very simple. So shut off the noise, right? It doesn't matter what some analyst on CNBC says about Ethereum, right? If the chart is showing you a strong trend with strong momentum, right? Buyers fully in control. What do you think is going to happen more often than not? It's going to go up, right? So Apple, we already showed. So I'll just show the daily chart quickly here. There it is. Again, when it's trending strongly, the trend is your friend, definitely. When that 20 is flat, there is no trend, right? Can we say in here we had higher highs and higher lows, or lower highs and lower lows? No, we can't. Right? We might have had a lower high, but a higher low. It's a mixed picture. So you want to stay out of there, right? SCDG, Solar Edge, again, when you have slope, though, that's when the odds are in your favor, right? That's when the odds are in your favor. Think of a casino, right? Why do most people lose at a casino? Because the odds are against them. The odds are in favor of the house, not in the player, right? And so as someone once said to me, look at the size of their house and look at yours, right? Who has the bigger house? The casino. So here, if you put the odds in your favor, now you will be the house here. And that's what matters. Let's look at Qualcomm. And there you go. When it's sloping, if you look at these trades, tell me how many would be losers compared to winners, right? But when it's flat, right? There are a lot of losers. Sure, there's some winners, but we don't care. We just want to put the odds in our favor. And again, you can look at different time frames. It really doesn't matter, right? Look at the weekly. Look at this one. So do I really care that I missed this portion, right? And it's substantial. I mean, we went from 80 to 110, but what we caught was 110, you know, and I'm not going to say we caught the top, even if you come back down here, right? We caught 110 to 145. Am I happy? Yes, I am. And that's all that matters, okay? Let me show you quickly futures, like crude oil, for example, right? It doesn't matter what you're trading, right? If there's a trend, that's all you care about. You just want to jump on it. And this is giving you those accurate areas to get in on, right? Let's look at gold. Right? And again, look at this trade, slope. When we get in here, we don't know if this is only going to move 2 or 3 bars before pulling back. We don't know if it's just going to quickly turn around and go against us and be a small loss, nor do we know if it's going to be a huge winner, right? But if you take these consistently and only focus on the execution part, in other words, when you're in here, you don't want to look and say, and start calculating in your head, how much money can I make on this trade? That's the last thing you want to do. You only want to ask yourself, am I following the rules, right? Do I have trend? Do I have higher highs and higher lows? Yes, I do, right? Do I have slope on the 20? Yes, I do. Is the bar near the 20? Yes. Then I should take that trade. That's the only thing that should go through your head. And if it goes against you, don't hope and pray it's going to come back. If it gives you, if it gives you a red arrow or an exit signal, you get out. Okay. And along here, you can scale out along the way. All right. So it works on anything. And how many? I'm sure most of us on here are from the U.S. or Canada. But how about overseas? And how many of you trade overseas rather than say in the U.S. markets? Right. Because if there are, I can show you other markets. It works the same way. Let me just quickly show you the USD CAD pair if you trade Forex. And again, you know, if there's a clear trend, and lately it's been trending lower, all you have to do is wait for these entries with slope near that 20, and look how accurate you'd be, right? It's very, very simple. So it works extremely well. And it doesn't really matter what pair you have. Let's look at Euro USD. Okay, same thing. Now we can look at this and say, well, I wouldn't have taken these. I would have taken this one. There was slope on the 20. That would have worked. This one, no, and I missed that. Okay, all of these, no. I would have gotten in here and made money. And then I would have gotten in here short and made money, right? So you're not always in one of these. You're coming out and going into the others, but you want to put your money where it's working for you, right? And where it's working for you is when the odds are in your favor. If the odds are against you, you know, it's like swimming upstream. It's going to be very, very difficult, and unnecessary is what it is. Okay. Let me see. I'm just going to look for. Oh, great question. Someone's asking, do I use a trailing stop? Yes, not always, but mostly, and that's when you have a parabolic move, right? So let's look at a couple of, because one other question is, does it work on penny stocks? Let's look at a penny stock here. I'm sorry, INQD. Okay, let's look at a penny stock here. So when you get a parabolic move like that, right, you want to be scaling out along the way. So you either are happy with, you know, the amount of money you have and just take it and leave, because you know it's going to snap back at some point, right? Especially if it's a penny stock. But when it moves, you know, vertically like that, you can trail your stop, yes, and you can do it on a dollar amount or just put it at the low of the previous bar, right? Use a 1 bar trailing stop, or even put on like an 8 EMA, for example, a tighter moving average that will follow it a little closer, okay? But either way, it's hard to go wrong on a move like this, because even if you were to take your profit here, only to watch it continue going up, who cares? You made some good money here, and that's what matters, right? So here's another penny stock. And, you know, do we care about all the flat area? No, we don't. Now, if we believe in the company long term, we can just buy and hold it. Otherwise, we can wait patiently for slope, right? Higher highs, higher lows, and off we go. Okay, and again, you want to scale out of here. All right. Now, let me show you a couple of quick other features here before I hand it back to Jeff, because there are different parts to this indicator. And one of the key ones that I really like is the scan feature. So you go to the power console, the P here in the top left, and you click on Explore. You go to the bottom of the top section here, because it's in alphabetical order, and you find Vora Victory and Vora Victory Re-Enter. Vora Victory are those arrows, the new trade setups. The re-entries are the dots, okay? So you can click one or the other and search for those. Then come down here and start looking for the markets you're going to scan. Now, you can create your own custom list. You can find the market wherever you like to trade. Or what I like to do is look at the index constituents, which are the different indexes. So for the interest in time, I'm just going to do the S&P 500. It's a broad enough index. We should hopefully find some setups. Now, when you come to the far right here, you can pick your time frame. So if you trade the 5 minute, the 1 minute, the hourly, whatever it is, I like the daily, so I'm going to do that. So I'm going to start the scan. Now, I'm running a lot of things off my laptop here. You know, I'll go to webinar software, my charting platform, all of that. But you'll see that it's only going to take a few seconds to run through here. And once it completes one, we can start looking at that list while we wait for the other. Let me just see if there's any other questions. So yeah, Ian, this is the scanner for this. And then there's an expert commentary, which will also help you follow along the trades. And I'll show you that in a second. So Ian also trades in the UK. I can try to pull up a trade on the UK market as well to show you in a second. Mark is saying, is that a 20 EMA or an SMA? Mark, it's a 20 SMA. Simple period moving average here. So the Vora Victory, the original signals has completed. Now, when you see the list here, it'll show you that out of the 505 charts that we selected, 477 were rejected, 28 are considered setups. Now, the one thing you got to know is you need a number one in either the long or the short column to know whether it's a new long or a new short setup. And the slope. This is the key. It took me and Jeff a while to figure this out. But what you see here, these numbers represent the degree of slope in the 20 period moving average. Okay. Now, what I look for is a number greater than 5. So if you're looking for a long, you want a positive 5 or higher, and the higher the number, the better. If you're looking for a short, you want a negative number. That's -5 or higher, okay? So if I click on here, I can sort. So here we go. The first long that comes up is end phase energy. And it's got a slope of 7.7. I'm going to open the chart, and there it is. Now, that doesn't look like a good enough setup, because while we may have some slope there, we cannot say at this point that we have higher highs and higher lows, right? So I'm not going to look at that. Let's go to Constellation Brands, STZ, and open that chart. Now there it is. That's what I'm looking for. See right there, right? We have higher lows and higher highs. We have slope, nice degree, and the price bar is near the 20. And I would bet that that's near an all-time high. Let's confirm that weekly and monthly. Let's move this out of the way. Yes, so we're near an all-time high. So if this triggers, off we go, no resistance overhead. That is a very high probability trade setup. Okay, so STZ immediately is one that I would go now, look at the options, and if the options make sense, then off we go. Okay, and now here are the re-entries, right? Again, we sort high to low, MAA. Let's see if there's anything there. There we go. There's another nice re-entry. CT VA. Let's open that. And there we go. So it takes seconds to find new setups. And believe me, there will be more than you can handle. So what you want to do is be able to compare one to the other. And that's along with this indicator. When you pick up this indicator, we're going to give you a couple of different training classes that go with it. That's where we go over in detail how you want to compare one trade to the other. It could be as simple as, you know, the degree of slope compared to the other, but you want to look at things like support, resistance, and all of that sort of different time frames aligning. We go over all of that in the classes. Okay. Now, before I hand it over to Jeff, let me just show you. If you go to the View tab up here and click on Expert Commentary, it brings up this little box, and this is going to tell you a bit about myself, a bit about trading wins, and a bit about the victory system. But you can't see it here. There it is. If I hover over it, you see this little triangle over the most recent candle? It always defaults to the most recent candle, but you can move this by either clicking above a candle or using the arrows on the commentary box. Okay. Now, if you are not in a trade, let me go over here. You're not in a trade. It will show you a blank space on the in here, like this, between these paragraphs. And then once there's a new signal, it'll tell you that we're signaling a long opportunity. Okay, so that gives you a heads up. And then as you move along and you're in that, look down here. You see it's giving you a suggestion of where to put your stop loss. So right now it's saying 33.26 and it's on this bar. And if we follow it along, see now it's 33.39, right? 33.53. So there's your trailing stop mechanism. So every day you can just look at this and follow that along the way. And so not only do the color of the bars help you remain disciplined and help you stay in that trade, but the expert commentary will hold your hand through the whole process. It will not only alert you to when there's a new trade opportunity, but it will also provide you an estimate of where you should get out of that trade. Okay. So the combination of these works exceptionally well. And again, any market you want to trade. So quickly, if we go to the list here, say I go to Asia. Okay. So 20 years ago, I used to trade on Hong Kong. Let's just go to Hong Kong and select the first chart here. We'll flip through a few. We'll open it up and we'll see. So not a whole lot there. Would not have taken this trade. This is kind of a choppy chart. Let's go through. And then here, let's flip through. There's a nice trade right there, right? There's a couple more. So those are what you look at. So when you run your scan, right, you can select that exchange or whatever group of stocks you want. You can create your own. So if you prefer to trade in Hong Kong rather than New York, you do that, right? Whatever it is. Let's see, if we go to Europe, I think it was Mark. I apologize if it was somebody else asking for it. Let's go to the London exchange and see if there are any potential setups there. That's not right. Let's see. So again, there you go. There's a couple there. There's one nice one here, right? So the more volume a stock has on it, you know, the more liquid it is, the better it's going to respond always, right? So you want to stick to the liquid instruments. But see here, it looks like we've changed direction. Now, we've been having lower highs, lower lows, right? Now, you know, if we break that high, we'll soon be able to say we have a higher high. Will we have a higher low yet? No. So this is not a trade I would take. I would definitely exit if I was short here, right? I would exit, but I wouldn't take another one. So again, two simple indicators that when they align, okay, put the odds in your favor. And when you're trading with the trend and momentum, and we use the 20-period simple moving average for momentum, that's all we need. And you get a scanner that helps you scan through it. And along with this, you will get the two classes that will teach you exactly how to compare one to the other. I think there's a number of questions, but I'll be happy to stick around and answer them all. But I'm going to pass it back to Jeff so he can tell you how to get a copy. And then, of course, I'd be happy to answer as many questions as you like. Jeff?
All right. Hey. There is a comment I wanted to read to you, which I think so far wins comment of the day.
Sure.
You're correct, Vince. You can't eat the fish that you miss. You can only eat the fish that you catch.
Exactly. Perfect. Great saying.
F-Sesk, I might borrow that. You might hear me saying it again in the future. Just.
Yeah.
All right. Great job today, Vince. I really like how thorough that is. I want to talk a little bit about how easy it is or the training that Vince did as well. We sat down with the training. It was back in February, I think, or maybe January. We sat down and did a few. It was this year. We sat down and did a couple of training classes, and Vince did a great job. He talks about like support and resistance. He talks about identifying the stocks with the proper slopes, and those are just included as part of the purchase. So Vince, you do a great job of showing MetaStock, showing the scans. I don't have a lot to add to those, but what I am going to go ahead and kind of just come in and highlight them a little bit and kind of talk about how to get them. Vince, thank you very much for coming in today. I really appreciate your friendship and the work you've done with us over the last years.
Thank you. Thank you for having me on, and to you and your staff for the great job on the programming of this indicator. It's great.
All right. Okay. So let me go ahead and kind of jump over here into MetaStock. And let me just change the presenter real quick. Show my screen. This is just a chart of the General Electric. This is a daily chart. I was looking at GE before. Again, Vince did a really good job of showing how you can scan for these. You can scan for either the re-entries or the setups. And this is something I personally use. I like the slope calculation that Vince and I came up with to kind of help you identify whether stocks are moving in the correct direction or not. There's not really a lot more to show. So let's go ahead and kind of jump in. Oh, darn it. Okay, I was going to have Vince pick a number for us, but that's okay. I'll have Kelly pick a number for us. Let me go ahead and kind of just talk a little bit about this. We released the Vora victory method back in December. It's been received very, very well. We were looking at kind of the numbers. It's done a really, really good job. What I like, here's kind of a little bit of just some descriptions about it. It's got your detailed commentary breakdown. You can do the scans either for the new entries or the re-setups. The other thing I like about it, and the one thing that I want to kind of talk a little bit more about is if we come in here to one of these setups, for example, it gets really, really specific. I've always loved the commentary feature of MetaStock because it kind of can spell things out so well. But right here, it says in this case, it says the victory system is currently signaling a potential long re-entry opportunity based on me putting it right here. Okay. Traders who missed the initial purchase opportunity or would like to add to the position should look to buy the stocks. Option traders should consider intermediate term call options about 2 to 3 months before expiration. These signals can last anywhere between 4 and 6 weeks. If you're more aggressive, you could look at these with this particular delta. And you see that it gets really, really specific about ways you could kind of look to structure a trade. And in addition, how you could look to get out of that trade. So once you're long, you can hold the position until this happens, or exit the position 2 weeks before your option expires, or actually those are the only two things. And the other thing I'll point out real quick right here is right here, it says, and this will update every day. If you're in a long position, then you should look to exit the position if the price of the security closes below 11.28. And if I go forward a few days, like if we go to right here, that it'll tell you, I need to resume so you can see it. It'll say that you're currently in a long position and you should go out. Your stop should be at 12.01. That will update as the price of the security moves up. Here it's at 12.48. It's just recalculated for you automatically. I think the reason Vince has been such a popular designer is he kind of really spells it out for you. It's very specific. And he goes into a lot of detail into that training that comes with the program. You get your detailed commentary, the expert alerts come up. You can do the full market scanning for both your triggers and your re-entries. And it does have system tests as well. So normally the cost of this particular add-on is $19.97. That's a one-time cost. We're doing an introductory offer on it. It's $909. Maybe we should stop introductoring it, but we are doing an introductory offer on it. It's $995. If you don't have our award-winning MetaStock program, we'll include a trial of that if you need. If you don't have access, we'll give you access to the software. We're going to include 2 recorded bootcamp sessions, the 2 sessions that we were just talking about. We're going to back it with a 30-day money-back guarantee. So if you try it out, if it will help you make better decisions, if it doesn't help you with kind of taking your trades to the next level, you can return it and you'll get a full refund. Again, a really good risk-reward ratio. So I'd encourage you to try it out. 800-882-3040 will get you to one of our sales guys here. You can also go to metastock.com/sales-chat. Now I'm going to throw you on the spot a little bit, but Kelly, are you in the control room right now?
Luckily, I am in the control room, yes.
I want you to pick a number between 1 and 10,344.
Ooh, let's go with 6,922.
Okay, so we're going to give away a prize. Thank you, Kelly. That's all I needed.
You bet.
So let me go ahead and find the right person in the spreadsheet. I better find a faster way to scroll through the spreadsheet. Okay. Our winner is, I'm still getting to the right number. Mike B from Spain. Mike B, thank you for registering for the conference today. You won a valuable prize. Let me go ahead and write down your information so I can find you later. But that prize, Mike, is going to be access to our premium sessions that we're doing on Thursday. So I'll tell you about that in just a second. I do want to make sure I capture this information because that way I can kind of give you, get it to you. Okay, so on Thursday, okay, you're good. Mike B from Spain. On Thursday, I'll email you with kind of the information. What we're going to do is we're going to do a premium conference with Steve Bigelow, Jeff Tompkins, and Vince Vora. So the conference, they're basically, all 3 of them are going to sit down. They're going to talk for 90 minutes each, and they're going to give you a paid class. Steve Bigelow does a great job. He's going to talk about the top-ranked candlestick patterns and signals. Jeff Tompkins will be in tomorrow. He's also a very, very good educator and coach, and he does a really good job. He's going to be talking about finding high-probability trade signals. And then we're also going to have Vince Vora doing trend lines and technical formation. So that's a $450 value. Clear off your calendar for Thursday. You're going to be welcome to come in here and join us. It's a great session. We did one. We did a premium day back in our first conference ever back in November. It was great. Nice crowd. Everybody got all of their questions answered. Very kind of, it worked out really, really well. We had really good feedback from it. So if you want to come to that conference, $450, you can give us a call at 800-882-3040, or you can kind of visit, or you can come in and visit with us at metastock.com/sales-chat. So there you go. Our next speaker today is Joe Duffy. Joe comes to us from Canada. He's been working with us for a number of years, and he does have what he's going to be talking about, the scoop system, and he does a really, really good job as well. We have so many great presenters over the course of 3 days. Joe, you're going to enjoy. I really enjoy having Joe in here. So let's go ahead and bring him in here. Joe, how are you doing? And this is a
good, Jeff. Can you hear me?
Yeah, I can.
Okay,
There's
good.
always a little bit of an initial, is the audio going to work when we bring somebody in? So I'm glad we can hear you. Let me go ahead and get the presentation over for you. Okay, you should have just gotten a pop-up that says you're ready to share your screen.
Yep. Just one sec here.
How are you doing today?
Oops. Good, Jeff. Okay. Yep. All good as soon as I get this to load. Here we go. Okay.
I like your
All right.
PowerPoint design.
Thanks.
I like this. Okay, I'll get out of the way. It's your turn.
Okay, buddy. Thanks very much. Okay, guys. Thanks for coming. I'm not going to talk about anything that we do or sell today. I've got a presentation about neuroscience in trading, and don't be put off by that topic. It's not complicated, but it's really important, and I think it's more important than anything that we sell. So that's what we're going to talk about today. Okay, first of all, I'm not a scientist, far from it. There's no John Hopkins or Harvard Medical or anything here. What I'm going to provide for you is a layman's interpretation of things that we've learned in neuroscience very recently, because neuroscience in the last 2, 3, 4 years has made leaps and bounds. And the great thing about it is that it's really not very complicated. I'm sure the methodologies and the research was extremely complicated in order to figure out what your brain's actually doing. But the explanation thereafter is quite straightforward. And if you have a grade school education, you can understand it. So that's how I came to understand it. So let me give you a few examples of things that we've learned, and then we'll later relate them all to trading. And as I said, it's really not that complicated, so it's not going to take it won't take me a whole hour probably. So if you have any questions, I'll have them prepared. One of the things, for instance, that we learned is a lot of people pride themselves, for example, on multitasking. So you can do several things at once, and people will swear up and down that multitasking is one of their great skills and it allows them to get so much done, and it's where they are because of that skill. But what we've learned is that multitasking is a myth, and the way our brain actually categorizes in functions, that if you have 5 things to do, doing a little bit of each one is not nearly as efficient. You won't end up doing it as quickly or as well as if you do one thing at a time and go through each of the 5. Now, if you explain that to people, and some of you probably right now who pride yourself on multitasking are poo-pooing or disagreeing with that conclusion from the neuroscientists, but that takes us into belief systems. Belief systems are extremely hard to change, and they don't want to change. They're hardwired in our brain not to change. So if you're believing that no matter what anyone says, for instance, multitasking is your deal, your belief system will fight that tooth and nail. And knowing that our belief systems are so well entrenched in our brain, and that's our neural pathways are designed that way, that's a very useful piece of information to have as we proceed and how we can tie this all into trading. Now, the other thing that we've seen, I'm sure every one of us has seen this. We watch somebody do something, and it doesn't have to be trading. It can be anything in life. And we can watch them go down a path, and we know, watching them from the outside, that this can only lead one way. And that way's not good. But that person will continue to go down that path, seemingly oblivious to the inevitable. We do it also. And those people who watched, or whom we watched go down that path, they can watch us. And they can watch us in the exact same way, and they'll say, what's going on there isn't going to end well. And of course it doesn't, because we can't our brain isn't wired to see ourselves. Okay? And that's another very important aspect that we'll need to tie into as we go. Let me scroll through here because maybe I have some of these. Well, we'll get to this in a second. Let's do the preliminaries a bit first. First of all, our brain is not one big homogeneous organ. It's divided into several sections, and these sections do not always work together in our best interest. And we just talked about that. You're going down the path, you can see somebody else doing it, and you know the inevitable happens. It isn't good. So that's how that happens. And the reason it happens is because your brain is divided into different sections, and they all don't work together, and they all don't work in our best interest. And further complicating that is that 95% of the activity that we do each day, our reactions, our thoughts, occur at a subconscious level. Okay? So they're not really conscious. It's like an example of that is if you've gotten in the car to go drive somewhere, and either two things have happened. Either you start driving to work when you're really going to the golf course, because you're so used to taking those turns that you do it subconsciously, or you arrive somewhere and you don't remember a thing about your drive. But that's because your subconscious brain, which rules 95% of what we do in a day, was in charge. Okay, so our brain is actually like a PVR or a new cell phone. When you get it, you record things, you put the programs in, and then the rest of the life of the phone, you just play them back. And that's much the same, and it may seem cliche or Freudian or whatever, but we now know it as hard science, not, maybe perhaps soft science that was psychology in the old days. But we know now that that's absolutely true. What you put in your brain during the first 7 years of your life will basically be played back for the rest of your life. Now, those pathways, habits, reactions, thoughts are hardwired from that initial programming, but they can also be changed. Okay? It is possible, and it's really not that hard. At least the process isn't hard. It will take a gradual change usually, but it is not hard to change those, and they can certainly be changed. Okay, now having said that, obviously we're all different to some degree, and for some people, that shift is going to be easier than it is for other people. But it's important to understand that there's nothing wrong with you. So if you are sitting there, and believe me, everyone who's ever traded has done this. Oh, why do I keep making this same mistake? Or, how stupid was that? Why am I always so stupid? I would really caution you, one, that everyone has had those feelings, everyone. And two, don't reinforce negative thoughts by saying, why am I so stupid? Because the brain takes those in, and you're actually reinforcing the fact that you're probably going to be stupid again. So the non-homogeneous brain, there's a part of your brain that obviously wants better results than you're getting, for sure. So, why aren't we getting them? Well, again, it's because we've got things hardwired in our brain that we're not even consciously aware of. And that's that conscious awareness. You've maybe heard the term conscious awareness has become sort of a buzzword, sort of like mindfulness. And basically what they mean is having the ability to step outside yourself, just like you're watching someone else, and observe your own behavior. Okay, so that's conscious awareness being able to step outside yourself and observe your thoughts and your behaviors as if you're someone else, right? That's really important. Very, very important to be able to understand that. It's if you're writing anything down that I'm going to say today, here's the first thing you really need to write down. You are not your thoughts. You are the observer of your thoughts. Let me say that again. I can't really even stress how important that is as a life skill even. You are not your thoughts. You are the observer of your thoughts. And when you can understand, oh, here's how my brain works, I need to start being the observer so that I don't run these same programs subconsciously over and over and over again and end up with the same result, the result a part of my brain doesn't even want. Okay? So why does this happen? Well, you can see as I've got up there, why is it hard to change? Why do you say, why did I make the same mistake again? We all do, to a certain extent. Now, some of us are going to be able to solve that easier than others. Everyone is different for sure. Some of us take longer or need to work at it harder. And your brain's number one function, and this is true for every single person alive, your brain's number one function is safety. It wants to keep you safe. And part of that is that it views change as something that it doesn't know how to deal with, and that's unsafe. Okay? And you see that you know, it may be hard to relate to that in trading right away, although I think you can if you give it a little bit of a thought. But you know, it's maybe much easier to see that that's how your brain's hardwired in, say, relationships where people keep repeating the same mistake that didn't work last time. Okay? They keep dating the same person over and over again that doesn't ever work out, or something like that. But it happens in trading for sure. Okay. Okay. So we've gone through some of that. Okay. One of my favorite analogies for the whole brain functioning is if you and how the different parts have their own agendas. If you think of the different parts of your brain as a nursery school with a bunch of little kids, right? Sometimes there's going to be one of those kids that's standing on the chair screaming he wants ice cream before nap time. And in trading, that may be the guy who's going, oh, just get me in. I can't miss out on this rally. Just get me in. You know, buy market, pay the ask, whatever. This market's moving too fast. You know, that's also known as FOMO, fear of missing out. You know, or it could be, oh man, I can't take this loss. It's too big, right? So I'm going to hope that it comes back. Okay, that's the kid sitting on the chair screaming. He has control at that point, or you've given them control at that point. And we know that neither one of those things usually leads to a satisfactory result. You know, the first one, if you chase, you usually end up losing money. The second one, sometimes the market comes back, but if it doesn't, you end up with one of those losses that, you know, just sabotage your whole account. Okay? So neither one of those things works. So, but if you were the nursery school teacher, observing all these kids and watching this kid standing on his chair screaming, I want, you know, ice cream before nap time, you as the adult or the outside observer wouldn't allow that kid to run the nursery school. Okay? And here's how we get back to that separation where you're the observer of your thoughts, not immersed in your thoughts where you think you are your thoughts, but you're separated, you're outside, you're the observer of your thoughts. So you are the nursery school teacher looking at all the kids. You are not that kid standing on the chair screaming, okay? If you let that kid run the nursery school, as adults, we all know that would be a disaster, right? So when you understand that that's how your brain is actually functioning, and that sometimes for whatever reason, whatever happened, whatever programs were put into your head as you grew up, some of them aren't going to serve you in trading, for sure. And even though they may serve you in other areas of life. So if you've got that kid screaming who wants to FOMO or doesn't want to take the loss, you have to stand outside, recognize this is how my brain is functioning, and put a stop to that. And we will go through some ways to do that, but it's very, very, very important to understand the process of how your brain is functioning before you can change it. That's 50% of the way. When you can understand that you need to separate and observe yourself, and that you are not your thoughts, but you're the observer of your thoughts. That's 50% of the way. It's like opening a book and immediately having 50% of the knowledge of that book in your grasp. Okay. After that, the process is more like turning the page of the book one step at a time. But understanding what I've just said here about conscious awareness, being able to step outside, understanding that 95% of your thoughts are not serving you, that they're at a subconscious level, you can understand that. You can understand that your brain's not a homogeneous unit that's one side of it that says, I really want to make money trading, but there's another part of it that's doing things to sabotage that goal. Okay, and the sabotaging one is the one that's hardwired because it's in your subconscious. You're consciously saying, "Hey, I want to make money," but your subconscious isn't allowing you to. So we need to fix that. Now, it's not enough to it's not enough to say, "Oh, I need better discipline," or psychology is important. You see that a lot. Psychology is more important than a trading system, or you really need self-discipline. Those are papering over the issue. They're not. There's no telling you need more self-discipline. It is, for most people, rarely enough to get them over the hump. It may, like I said, all of our brains are different. So for some people, a little bit of pain and then more discipline, you may be able to rewire, or you need less rewiring. But for most people, just playing lip service or papering over the thought that, I need more self-discipline in my trading, or I need to stop FOMO, or I need to, honor my stop loss. It's not enough to tell yourself that in your conscious moments, because in the line of fire, when the pressure's on, you will revert to what's hardwired in your brain, which is your subconscious neural pathways. That's a neuroscience fact. And that's why this is important. And it's why just saying, I need to be more disciplined, I need, whatever. That's your conscious brain saying, yeah, that's what I need. Or your conscious brain will say, I'm not going to do that again. But then you do. Because your subconscious brain is 100 times more powerful than your conscious brain. Okay. Again, understanding that your subconscious brain is far more powerful than your conscious brain is very important to make change, because you have to understand, is telling yourself consciously, oh, psychology is important. I need more discipline. That's not usually going to work. Usually. It may work if you've endured enough pain that you can start to change, because as I said, your brain will always resist change, because its first goal, its first objective for every human being is safety, and it sees the unknown or change as unsafe, It would rather deal with the problems it knows. So sometimes if there's such immense pain that you can't stand it anymore, sometimes that will result in change, but let's hope that none of us have to get to that point where that's the way we need to change. So what do we need to do? Well, first of all, like I said, understanding everything I've just said, that you're the observer, that your brain's not homogeneous, that the parts don't work together, that the subconscious is 100 times more powerful than the conscious. When you understand that and embrace those things as actual hard science, that's 50% of the way to your goal. Because now you can actually consciously observe yourself and say, oops, here's a pattern that used to run in my subconscious brain that's now playing out again. You'll recognize the feelings. If you've ever had FOMO, you know what it feels like, right? So when you start to get that feeling, what you need is an interruption so that you can change the progression that's wired in your subconscious. And these things aren't that hard, as I said. I'm going to repeat things over and over. And I do that for a good reason, okay? And you can probably summarize why, because saying it once isn't good enough. You really have to keep repeating it. And you have to eliminate the things in your head that aren't serving you and start replacing them with things that are. So if I'm going to repeat this myself over and over again, it's because actually it helps me. Believe me, telling you guys this actually helps me. But it may help you, because if you hear it enough, you may give it some consideration, and maybe you'll start to go down this road, maybe not today or tomorrow, but sometime when you've hit enough pain or brick walls that you're consciously ready for a change. Okay, so if you've been trading long enough, you probably recognize that you do fall into familiar patterns that don't serve you. So when you get those feelings, or when you're going to react in a way that you've always reacted, you have to label that thought process as harmful and unproductive to your success goal. Now, your success goal is the one that your conscious brain has laid out for you. Okay, your unconscious brain doesn't know how to get there. It might feel that taking this loss, oh, I can't take this loss, it's too big, or I may not be a good enough trader if I take this loss, or does that mean I'm not perfect if I take this loss? Because I've always been told that I have to be 100%, or I've got that belief programmed in my brain somewhere. For whatever the reason your subconscious is reacting, is really not as important. You don't have to go back and take your childhood apart. Okay? All you have to do is understand, again, what we've talked about. Your brain's not homogeneous. Your subconscious is 100 times more powerful than your conscious. It will not always serve your conscious goals, and you have to fall into the observer role and stop the process in order to reach your conscious success goal. Okay, so if I'm looking at a trade, and I think this is, by the way, it's an ongoing process. I don't know if anyone, maybe some people have, who never fall into a mistake pattern that they've mostly cured or mostly got by. But it's difficult. There are some times, and I'm an option trader now. I've moved to options instead of futures because, to be perfectly honest, even if I have an issue where I don't pull the plug fast enough, I've never got enough capital in any one option trade that it really is going to, affect things in a big way. So if I put on 5% of my account and I, on an option trade, and I should have pulled the plug when that trade was down, 2 or 3% of my account, and I didn't, then I may lose another 1 or 2%. Well, that's not going to change my life or my account, honestly. But if you put on a future position and you don't pull the plug, or you have a stock, you bought General Electric when it was $100, and when it went to $5, you still had it, and it was the biggest part of your portfolio, then those kind of things can be devastating. So what do you do? Well, when I feel like that thing where you've got the FOMO, or you're wondering, should I pull the plug on this? Which is, the FOMO is easy to feel. Should I pull the plug on this is you should have a plan, and my plan usually for options is to pull the plug around 50%, give or take. Although sometimes I'll pull it at 10 if I'm really sharp. But I say 10% loss or 50% loss is what I'm shooting for. But if I pull it at 60, I still consider I followed my plan. But sometimes, and particularly for me, and I'm being frankly, brutally honest here with you, I will, the more success I have, and I'm pretty accurate with my option trades. So if I've got a real run of, many trades in a row that have all been winners, I find it harder to pull the plug when eventually the inevitable happens and I'm going to be wrong. Okay. So simple thing I will do is 5, 4, 3, 2, 1. Separate from the feeling that I'm in right there. Maybe even get up from the chair, walk out. 5, 4, 3, 2, 1. You're observing yourself doing this. What's your success plan? Your success plan is to pull the plug on this trade. Go back and sit down. Get out of the trade. Right? Now, most of the time, I don't have to go through this at all. Most of the time, I'm pretty good at pulling the plug. Once in a while, I'm not. And I know that that's usually when I'm just so enamored with my own success. So, and we all have different times where that's going to plug into us. But to me, that's one of the big advantages of trading options as opposed to stocks or futures. Okay. Let's see what our next slide's about here. Okay, so I'm going to go through some of my beliefs and or my success plan beliefs. Now, these are tailored to me. I'm sure some of you are going to recognize them in that we share them. Some of you may have slightly different ones. Our brains, as I said, they have many commonalities, but they're not obviously all the same. So when I go through my interrupt phase, if I have to, and sometimes this can be after the market closes and I've had, I didn't pull something quickly as I should have. I have to remind myself that I shouldn't be trying to avoid something that is unavoidable, which is obviously the loss. Okay? Remind myself the degree to which I understand and embrace that losses are going to be part of my account will be the same degree to which I can avoid self-sabotaging my account. Okay, I understand it, and most of the stuff I do this. I understand the risk in trading doesn't cause me to lose my focus, stop following my rules, or lose confidence. As I said, most of the time I'm really pretty good at that, but once in a while we all fall, or at least I do sometimes. And so I have to go through my process of reminding, and actually telling everybody about this today is helping me. I imagine the next few weeks I will be particularly sharp So accepting the risk that you're going to lose and that it's unavoidable, no matter how many, even if I've been on a 15-win streak, it doesn't change the fact. In fact, it may increase the chances that I'm about to lose. So accepting that risk that I am going to lose, and then my account's not going to go in one big straight line from bottom left to top right, stops me from interpreting that information in painful ways. And that's really an important statement. When you can stop viewing the information that the market's giving you as painful, the more you're going to get in the flow of the market, when your intuition's going to rise, and you're going to have more success. That's for sure. That's not an easy thing to do in terms of telling your subconscious that losing money isn't painful. But when you can step back outside of those thoughts and look at the big picture, you understand that losing money isn't painful because it's a small part of a bigger process. You're going to lose money sometimes. All you care is that your equity curve is going from bottom left to top right. Right, so it's a very key skill to have, and it's one that you have to constantly remind yourself of, that market information is not painful. Okay, so if the market's going against your position, it's giving you information. Don't interpret it as painful. Interpret it as just information. Now, sometimes the market's going against me, and I'm pretty confident still that my position's right, so I'm fine with it. But there are other times when I'm going, oh boy, this is probably wrong. And then that's where that fight comes between your brain going, yeah, but you're always right, and or you don't want to lose money because you just hit this threshold, you just hit a new equity peak high, now you're going to have to lose. Well, come on. So that's how your subconscious brain, or mine is anyway, is acting against me sometimes. Again, a small percentage of the time, but depending on many things, depending on what happened in your life recently, depending if you shot 120 the last time you played golf, depending if you had a fight with your spouse, depending on what's going on with your kids. It can be many reasons why you're not as sharp as you would be, and your conscious mind's wandering off somewhere, allowing your subconscious mind to affect your trading more than you know it should. So those are the things that I tell myself. Again, I don't try to avoid something that's unavoidable, right? And if I do that, the more I do it, the more I'm inviting sabotage to my account. And don't interpret market information as painful. These are things that I've done, that I've determined that are good for me. You may have slightly different ones, but if you follow this format, I'm sure you're going to be able to fill in different sentences that fit your particular obstacles. Okay, so again, here's the thing that's really important too if you want to be successful in trading, is that you're solely responsible for your results. If you subscribe to someone else, and my option trading obviously has a subscription basis, and we publish the actual results. But you're responsible for your own trades. I subscribe to a couple of people who I respect, and they've actually very recently just absolutely gotten annihilated the last month or so. But I'm responsible for taking the information that they provide and seeing how it fits. I'm sure they'll be back, but they've had a horrible go. So that's my responsibility. Okay? If you don't take responsibility for your own trades, you even if you're using someone else as a tool to help you, you won't be successful. For me particularly, because I'm very hands-on, obviously I'm doing 100% of my own analysis, and anything I have from the outside is very just complementary, I would say, rather than making the decision for me. Okay, so when I don't take responsibility for my own trading, that sets up an adversarial relationship with the market where the market's constantly giving feedback, but if I'm in an adversarial relationship with it, or I'm not really paying attention to what it's trying to tell me because I'm more concerned that, I'm losing money and I don't want to be, and I'm interpreting that information the market's giving me in a painful way instead of just as an observer, what information is the market giving me? That keeps me out of the flow of the market. That keeps me out of learning how to just have a feel for it. You've heard it, sometimes you've had a feel for whatever job you've had, or maybe it's a sport. Sometimes you just can feel, right? And that comes with the market too, but it's never going to come if you're in an adversarial relationship with the market, which is keeping you out of the flow of the market. And the second one is that you can analyze your way to perfection. That's never going to happen. So if you have losses in the market and you go back and you start trying to add things to your chart, that's the wrong way to go. In fact, so much of what's true in the market is counterintuitive. So if you've had losses, you should probably go back and start taking things off your chart. I honestly believe that if you have a little imagination and you can use the trend line function on MetaStock, that's all you need to trade. There's certain things that can help you. I mean, my number one tool is a Scoop that I use, and that's what we use in my trading room. And but I also use a lot of just old-fashioned, trends, channels, and a little imagination. So over-analysis won't change your success rate. In fact, it'll probably inhibit it. Okay, so excuse me. So again, these are the things that I focus on. My state of mind not affected by the market's behavior. So if I'm losing money, I try to accept the information the market's giving me and then decide what to do about it. Or if I'm making money, same thing. Okay, so I try to keep that even keel, that whatever information the market's giving me is neither painful nor, abusive, or whatever, like just happy. It's just information, right? So in order to keep that mindset, I don't focus on the money. I don't grab my calculator every time I'm making a trade. Money making is the byproduct of the mental skills to trade my edge. And my edge is just the probability of one thing happening over another. Okay? And I don't think you need to overanalyze to get that edge. I 100%, I'm confident that if I just use my Scoop indicator and trend lines, well, in fact, I make many decisions with only those two things. That would be fine. You don't need a million things going on. So making money is the byproduct of the mental skills to trade my edge, which is my state of mind, which is not affected by the market's behavior, and I don't attach happiness or pain to information the market's giving me. And I don't focus on the money. I just focus on the information that it's providing and following my rules. Okay, so if that rule is, take some off at 100% gain, then I do that. If it's cut some at 50%, then I very, very largely do that, except when I fall off the wagon, which I do occasionally. So the degree to which I understand what I've just laid out for you about my own psychology or my own state of trading is the degree to which I will be successful. So I have to keep repeating that to myself. Here's my things that I have to avoid. Here's my things that I have to do. The degree to which I'm able to follow those is the degree to which I'm going to be successful. That's sort of like a mantra that if you continue to repeat to yourself will start to become hardwired in your brain. And this goes back to saying, don't go or don't say, why am I so stupid? Why do I keep doing the same things over and over again? Why do I make that mistake again? Don't say that to yourself. Don't do it. Just say the degree to which I understand and practice, blah, 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 whichever the important things are for you, is the degree to which I will be successful. So when you've screwed up, that's what to say. Don't reinforce the habit of I'm stupid or when am I ever going to get this right? That goes back to, you've all heard the story of, shooting free throws. You've got 3 test groups, one who does nothing, one who only shoots free throws in their head, and one who actually practices for the month shooting actual free throws. Well, the one who does nothing is, significantly worse than the other 2 groups who are very close, and perhaps the one who actually physically did the free throws is marginally better than the one who only practiced in their head. So what you tell yourself, what you say out loud, what you write down is real important. Okay, so again, conscious awareness is the first big step. That's being able to step outside yourself, observe what you're doing. You can do this and you can write down, here's my problems, here's my goals. Now your goal is a conscious one, obviously, but when you're not in the middle of the battle, it's easy to write down, okay, here's what I need to do, here's what I need to stop doing. And once you're able to separate yourself and step outside yourself and observe yourself, then you're 50% of the journey. Okay. After that, it's just like turning the pages of a book one at a time. You'll get better. Okay. And again, understanding that the degree of conflict between your success goal and your mental environment is the degree to which you will inhibit your own success. Okay, really important to understand that, and that all ties into how your brain functions, that it's not homogeneous, it has many parts, that the subconscious, runs 90% of it. All those things are so important to keep to your mental environment, and knowing that they are waiting all the time to sabotage your success. Okay, so again, I've talked a lot about myself here, but that's really what I know best. So I know my personal biggest psychological obstacle is patience. I often get into things a little bit early and out of things a little bit early. It still works, but I could have a little more patience for sure. And when I'm trading really well, I am patient. When I'm, especially again, after a win streak, I get a little more impatient because I can't wait to discontinue this streak. But I know the edge that I have works best when I am patient. Okay, the process of changing the brain is referred to as neuroplasticity. Okay, and it's quite possible to, well, for sure, scientifically, it's quite known that you can change the habits that your brain has. Now, they're hardwired in there in those neural pathways, and it's not easy, okay? But you can certainly change the neural pathways of your brain to do something different than you're doing now, okay? And you're not going to get it there by yelling at yourself that, you need more discipline, or why do you keep doing this over and over? You're only going to get it by understanding what we've talked about today about how your brain works, and the role of the subconscious and so forth, everything we've talked about. Okay, so self-sabotage is real, and you must constantly be guarding against it. And the only way to guard against that subconscious self-sabotage is to try to be consciously aware by standing outside and observing what you're doing. Okay, so you may be able to get to that point where you get, well, you absolutely can get to the point where when you start to feel the familiar emotions or you start to recognize familiar behavior, you can stand outside, label it, identify it, and then take steps to interrupt it. Okay. And if you do that enough times, you're going to get way better at not making the same mistakes. Okay. So very simply, we talked about, writing down what your success goal is and what your obstacles are. Read your goals every day. Read the process you're going to take to interrupt the process, whether it be observing, maybe getting up from the chair, going 5, 4, 3, 2, 1. What's the process that I need to take here under my success goal column? And then going and doing that. And scientifically, you can actually help to rewire your brain faster is if when you read your success goals, you read what you need to do, you put your finger on the page, feel the energy of the words travel up your arm and into your brain. Some of you are going to go, oh boy, that's fine. This is not pop psychology. This is neuroscience. So, if your brain's rejecting it, it's because it doesn't like change. It's not because I'm wrong. Or not me wrong. My regurgitating of the science to you is not wrong. Okay. Yeah, I think I just kind of went through this. You're the observer of yourself. You label behavior that's not serving you as harmful and unproductive. Labeling it is a good thing. If you're tempted to FOMO, if you're tempted not to take your loss, label your behavior, stand back, get up from your chair. 5, 4, 3, 2, 1. What am I supposed to do here? Boom. Okay. Now I'm in a different frame of mind. I can go do it. This doesn't happen the first day or the first week. Okay, but you will get way better if you start following the process of conscious awareness, standing outside and looking at yourself, interrupting the process, interrupting a behavior that you've labeled as harmful and unproductive, replacing that new behavior, and if you do this often enough, you will start to burn new neural pathways, and the old ones will start to decrease in their ability to affect your behavior. Okay. Now, there's always going to be other things, like I said. What happened with your kids today? Did you have a fight with your spouse? Did your team lose? All those things can affect your ability to act at our optimum levels. But you can certainly burn new neural pathways by awareness, interruption, and repetition. Okay, I'm not sure where to see the questions, so if Jeff's is still listening, maybe he'll jump in if there are any.
Of course I'm listening, Joe.
Yeah, okay, all right.
Yes,
so,
we don't have a lot of questions, but
okay.
V Spinney in YouTube says, good advice. This is 90% of trading. We did have somebody say, what is this scoop that you're talking about? And so I'm prepared to show the scoop and kind of talk a little bit about it, but maybe you have a few things you want to talk about as in advance of that.
Well, basically, it's I can tell you that the most productive way to trade anything is to establish the trend, buy the retracement. I mean, buying breakouts, in my opinion, may work in very exceptionally trending markets. Well, not my opinion, it's true. But generally, if you buy retracements in a trend, you have a higher chance of success and you have smaller stops because you're buying a retracement. So you half the decline's already over, or some of the decline's already, or maybe 100% of the decline's over. So that's what Scoop is based on. What's the trend? How do I establish the pullback? How do I get in? So it has those 3 steps.
All right. Ace Lover would like to know, how long does it take to be consistent?
Well, I think, as I said, it's I don't know if it's for some people, and I'd be counting me as one, that you ever get to the point where you don't slip up in your mental. And again, it's affected by so many things. But I really believe that, well, I know actually, that once you've understood and embraced the things that we talked about today, that you understand how your brain is not homogeneous, how your subconscious wants to run 95% of what you're doing. Once you can be consciously aware of that, you're 50% of the way. So that's a big step to take immediately. Now, after that, like I said, it's like turning the pages one at a time. You will get better. And I think for every person's going to be on a different schedule. Listen, why do you think hedge funds blow up? It's because they just, in almost every case, couldn't pull the trigger, right? They had a position that was going against them, and they couldn't pull the trigger. So you can see, no matter how long you've been doing it, people still have these issues. So,
right.
Yeah, do you ever get it right? Yes, you get it more right all the time is the answer.
You get it better.
Right. And maybe some people, maybe Paul Tudor Jones is perfect at it. I don't know that. I wouldn't doubt it. But I think for most of us, just getting it better all the time is good. Is you can still be successful.
Yeah, I totally agree. I said it yesterday. You're either getting better or worse. There's no perfect.
Yeah.
Here's a rapid fire of I'm really surprised by I'm not surprised by it, but there's a lot of comments I want to read to you real quick. Anthony says, good stuff. This is a good condensation of a lot of principles of human behavior. Obed says, this neuroscience is so very interesting. Thank you. Can you please save the recording and allow me to listen again and again? And I did, when you said that, Obed, I actually did put the YouTube link. This will be available for you on YouTube for as long as you'd like. And one thing that we were talking about a little bit earlier is if you do go watch it on YouTube, we believe you get karmic benefits if you like and subscribe. I'm just kidding. But we do appreciate it if you like and subscribe because it does help the channel a great deal. So let's see. We had a couple more comments. Really great job. Psychology is 90% of trading. I totally agree with that, Tom. And good job. I also agree with the good part of that. Good job part of that, Joe. Really, really appreciate it. Ed said, excellent. Needed this. Well done. Margaret says, thank you for this. Obed says, this is great. Thank you so much for a different view to trading and a good break from all of the technical indicators. Awesome. Very helpful. Alex says, excellent presentation. Thank you. Quick note, there's really a good book on this. Do you have a book that discusses being an observer? Is the question.
Yeah, I don't, because what I've talked about today is really, as I said earlier, so much of this neuroscience is on an exponential curve. So, no, I don't have a book about it. So, no. There are some good books. I mean, even Mark Douglas wrote some before I think we knew the science. Trading in the Zone's a good book. There's a guy called Steve Ward that wrote a book, High Performance Trading. I think both of them, honestly, are good, but overcomplicated. It's really not that hard. It's just, it's a dichotomy to say neuroscience is simple, but I think what I've told you today is really all you need to know. And, you could write it out in, like I said, some bullet points on a PowerPoint. You don't need a book, but those are two good books. I highly recommend, actually. So, High Performance Trading, Steve Ward, and Trading in the Zone, Mark Douglas.
Teresa says, yes, very good session. I've been wondering why I keep making mistakes. Me too, actually.
Yeah.
Don't worry. I think that's very natural, right?
Yeah. Yep.
Obed says we need to write a book or a paper. So I think you've got a ghostwriter there if you want one.
Yeah. I mean,
Yeah.
Honestly, like most books have 7 or 8 or 10 ideas in them and 200 pages of fluff. So I've just distilled the fluff out here.
Alex says a good book that he liked was The Power of Now by Eckhart Tolle. I've read part of that.
Yeah.
I've started that one.
Well, absolutely. It is a good book. And a lot of what we talked about today certainly applies in your regular life. Okay, absolutely. And in fact, many of the best books that you could take into trading are not written about trading. So yeah. Eckhart Tolle is a boring reader, but he has some great quotes. So if you just Google Eckhart Tolle quotes, you'll probably find a lot of knowledge in there without having to buy his mundane books.
That's probably why I got lost.
Yeah, his ideas are good, but he's just too obtuse about it. If you Google Eckhart Tolle, Tolle quotes, you'll find some gems.
All right, Joe, thank you very much. I'm looking at the time, and I'm going to try and kind of just show your indicator for a minute or two, and then we're going to roll on. Appreciate it. That was a great event. Great session.
Thanks, bud.
All right. Ace Lover, you're asking how many days do we have left in this session? One more day tomorrow. So I'm glad you're enjoying it. I know you're here yesterday. And we hope to see you tomorrow as well. Tomorrow's the end of the free sessions. Of course, we have the premium sessions that we're doing on Thursday as well. So I'm glad you're enjoying it. A lot of really good feedback on the webinars in general. And I have to agree with that. I think we've been, to no fault of my own, we've had some great speakers and some really good sessions. I thank you for all the positive, good feedbacks. So in any case, Tapis, you're asking about getting more info. Email him at JD. Oh man, I need to get the actual contact information for him. I'll post it in the chat as soon as we get Kelly started. Okay. So that looks like the end of the. Let me talk a little bit. Unfortunately, that was great, but he didn't leave me a lot of time to talk about his scoop system and kind of what's included in that. But I will say that his scoop system does include a lot of really, really good training. So, he actually was the very, very first person, Joe was, that we actually did kind of what we call our Enlightened Training Series with. And he did an awesome job. It comes with a module of trainings. His out on itself, just showing it here on GE. One of the things that I like is it does have commentary, which I love. It has scanning, which is one of my favorite features of MetaStock. What I really like is he kind of ranks different trades that you could be looking at. So you'll see on here, this is, you've got a most aggressive right here. It just means if you're really aggressive about getting into GE, that's an opportunity you can consider it, right? Here's a sweet spot. And then there's a really conservative one as well that you'll see once in a while. And those are labeled and identified on the chart for you. And it does a really, really good job of doing that. If I come back to where this had a sweet spot, it's going to basically say this is a bullish 2-entry signal. It talks about the scoop histogram and the scoop A oscillator and kind of where they need to be. It says it's a moderately aggressive entry. And then kind of some instructions for that. So that's fine. I'll just show that to you a little bit. Certainly, we don't have time to delve into it too far, but it's a really, really popular add-on. It includes a lot of really good training. And if you like kind of what you just listened to, it's really, really good because he just kind of walks through kind of the systems and how to use them. And he's in addition to kind of talking about the psychology of it, Joe has an extremely good reputation for trading and that kind of stuff. So his scoop system includes about 4 indicators. It has the commentary. It's very, very easy to understand. And it doesn't come with all of that training. And we do back it, of course, with our money back guarantee. So it's a one-time cost. It's $699 here at the normally, if you just go up to our catalog and buy it. If you like it and you want to try it, $599. We'll back it with a 30-day money back guarantee with our webinar special. If it's helpful and you like it, you'll keep it. And that's kind of the mantra that we're going to go with for it. So give us a call, 800-882-3040. You can also visit us online at metastock.com/sales chat. I've got all of the sales guys are here today. They're very good. And they do a great job of talking to you and helping you and help you understand what MetaStock is. They're happy to pull charts for you. They'll do whatever you ask them to within reason. So you can also go up online and order at metastock.com/conf promo. And they can help you out that way as well. I do want to say thank you to Stocks and Commodities again for sponsoring the event today. I've been reading their magazine. They've done 17,000 articles. I wonder how many of those 17,000 I've read. I wouldn't even be able to guess. Anyway, they're a great partner. If you go and register for the event today, if you're on YouTube, they'll send you a free issue. If you're already registered, they'll already send you a free issue. So in any case. We are going to talk quite a bit about MetaStock today. We've been kind of showing the power of MetaStock. I need to eliminate all of these 25 years. It's actually 28 years in a row that MetaStock's been rated #1. It's a great software company. I really love working for MetaStock. You know, I've been here for decades. It's been a product that I've been really proud to represent. And I'm not just saying that because my boss is going to speak next. It's a good company to work for. I love the ability to go in and scan through markets, test trading ideas, you know, the forecaster we talked about yesterday, the real-time alerts, the commentary, the signals. There's really a reason that MetaStock's been rated #1 every single year for 28 years in a row. And that's, well, because you vote for it every year. Thank you for that. But as I believe the reason that you vote for it every year is because it's helpful. So if you don't want to do anything and just want to try out MetaStock, we're going to do an extended trial. You can do this with the end of day version or the real-time version. Kelly's going to talk more about the differences in just a second. But you can get an extended trial at metastock.com/conf promo. Or you can give us a call at 800-882-3040, and they can kind of help you get set up and for any version that you're interested in. So our next speaker today is a very handsome gentleman. He's my boss. So actually Kelly's been working here at MetaStock for quite a while as well. Very nice guy. He does a great job. And he does a really good presentation. He's almost as good of a trader as I am. So
I don't think that's possible, Jeff. I don't think it's possible.
All right, how you doing today, Kelly?
I'm doing so good, thank you.
I was going to try and get like really, really flowery with my introduction and just talk about how really a nice guy you were, and really kind of just ham it up a bit, but I failed. Your turn.
Well, I think I would just have to turn it right around and say, no, you're better than I am. So, so either way. And before we get started, actually, I'll say to Jeff, he was a little bit modest when he said, through no fault of my own, did we pull in great presenters to over the course of this conference. Jeff actually spends a ton of time working and organizing and finding great speakers for this conference. So it's really Jeff that we owe a lot of kudos to for this conference and the work that he does to pull it together and make it a success and make it as educational as it is. So Jeff, great job to you for everything you do there. And he turned off his camera so he didn't have to blush, I think is what happened there. So let's see, Jeff, can you give me the screen rights, please?
Yeah, let me do that. And I'm red with blushing.
All right, let me go ahead and share my screen. All right, Jeff, can you just confirm you can see my PowerPoint for me?
We can see you, your PowerPoint, and we can hear you.
Okay, fantastic. Well, let's go ahead and get rolling then. I am just going to, I realize I'm sharing my wrong camera, so I'm just going to try and improve that just a little bit here. and then we'll get started. Sorry about that. Well, it looks like we're going to show my old one here. So apologize for the quality of the video here, but it's not me here. You're here to see. It's the presentation. So let's go ahead and get started today. So what I really want to spend some time talking about today in MetaStock is powerful trade identification and ways to identify trading opportunities. And I do want this to be an interactive session. So if you do have questions throughout the presentation, feel free to put them in either YouTube chat or in GoToWebinar chat. I'll be trying to watch both of those as we go through the presentation and monitor so I can, well, we don't want to show that here. So we can go through those. Now, I know Jeff already did a disclaimer this morning. We're about halfway through the day. I'm just going to go ahead and do the disclaimer again because I know everybody really enjoys listening to the disclaimer and picking up what the disclaimer has to say. So this demonstration is designed to instruct you on using MetaStock and accompanying software plugins and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investments decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So just as you go through these presentations, we're not here today to tell you what to buy or sell. We're here to show you how to actually use the software, how you can use it to make trading decisions, but don't make any decisions based off of what I show you. This is just for demonstration purposes. Okay. All right, so a little bit of history on MetaStock. Obviously, you're here at this MetaStock conference. Not everybody has MetaStock, so I'd just like to introduce us a little bit. MetaStock goes way back. We go back to 1982. This is the type of computer MetaStock first ran on using a DOS-based operating system. And people would have to go in and type in data on a daily basis to be able to enter in their data on a daily basis and analyze the market. Obviously, we've come a long way from there, as you would imagine. But this kind of shows you our roots. MetaStock's been around a long time. We have a lot of people using MetaStock because it's such a powerful software and designed to help you identify great trading opportunities. It was actually created by a gentleman named Steve Akalis. I was going to see if I had his book sitting right behind me, but I don't. But he also wrote a book called Technical Analysis from A to Z. If you're interested in learning more about technical indicators and how they work, that's a great book to pick up as well. I'm being asked, are these your trading PCs? No, this is not our trading PC. This is actually just the way MetaStock started right there. All right, and as Jeff mentioned, we've won that Stocks and Commodities Reader's Choice Award for the last 28 years in a row, something we're very proud of. And obviously that's users like yourself reading and then voting every year and giving us that type of kudos. So we thank you for that award, Technical Analysis, and for everybody who's voted for us over the years. And also a great sponsor of today's event. So here's a little bit of what we're going to be talking about today. We're not going to talk about all of this, obviously because of time. But what we're talking about is we're going to be talking about different charting tools, scanning the market for opportunities, back testing those, and identifying when to be getting in and out, how to forecast the market and look at future probabilities based off of past events. If you saw Scott Brown's presentation yesterday, he talked a lot about this. We'll be talking about options, and then some of the other things that we offer, but we won't be talking about today, is our news that we offer. It's powered by Refinitiv, very powerful news and analysis platform along with MetaStock. So let's go ahead and jump right into the presentation and talk about this a little bit. Now, obviously, this is a cockpit from a plane. It doesn't matter which plane it is. But what we're looking at here is a metaphor that I like to equate to trading. When you talk about pilots and what pilots do on a daily basis, and if we all think about our jobs that we have, whether it's trading or if you have another job that you have, but you all have things that you have to do on a daily basis. And if you think a pilot, when you get into the back of that plane, what do you want the pilot doing? You want that pilot paying attention, right? First of all. Then you also want that pilot to be doing his checklist. So you want him to go through his checklist of everything that has to be done on that plane before you take off. And if he misses something, that's when problems happen, right? I really like this. I travel a lot. I get to go around the world and talk about MetaStock and meet with our partners and learn about what they're doing and talk to people about local markets. And I have this affinity for this TV show. It's called Air Disasters. Now, why would I be interested in a show called Air Disasters if I travel a lot, you might ask? And if you haven't seen Air Disasters, it's a bit morbid, but it's one of those shows where it talks about a plane crash, and then they try and figure out what happened to cause that plane crash. So they'll go back and they'll analyze all the data. They'll look at different scenarios, and they'll try and figure out what happened. And oftentimes when something goes wrong, it goes back to human error. It goes back to that pilot not following his checklist. Now, most pilots do their checklist. They do everything safely. And it's not something that we worry about when we get into that plane, because we have trust that that pilot's going to do the right thing and do his checklist, because that's part of his job and that's what keeps us all safe. So I like to equate that to trading a little bit. We've talked about discipline. We've talked about all that. And when we have something that goes wrong in our trading, when we make that bad trade, it's always good to step back and review it and look at what happened, what went wrong as we went through our trade. Why did I lose? What steps did I do wrong? And that's a great way to improve your trading. And that's something that I found over the years. So, and that's been discussed. These are just a few of the presenters that have discussed that over the last day and a half. Steve Bigelow talked heavily about that. We had Vince Vora talk about that. We just had a great presentation by Joe Duffy talking about that psychology of trading and really understanding what's going on in ourselves and understanding that setup. So again, great presentation by Joe. What are pilots doing today? Somebody's asking. Most of them sitting at home due to COVID. That's very true. But those ones that are behind the cockpit, we do want them following their all their steps and making sure that they're doing that discipline. So here's what we're going to get into today. We're going to talk about how to identify the best stocks to trade. We're going to talk about when I should get in and out of a trade, how to test your trading strategy before you spend your first trading dollar, and how to add clarity to your trading decisions. Okay. Now, when we talk about trading, and we all talk about when we talk about what we're going to do when we're trading, every stock that we look at may trade differently. So if I'm looking at Google, or if I'm looking at Apple, or if I'm looking at Facebook or Netflix, all of them trade a little differently. They may trend, they may be following a momentum, they may be very volatile, or they may work well with volume. And what we're trying to accomplish is finding the best indicator to work with your whatever it is you're trading. So it may be, hey, you're a MACD trader. Well, does the MACD work on every stock? No, it doesn't, because the MACD is a trending indicator, and it wouldn't work well on a volatile stock. So we're going to talk about how to identify those types of things. So let's just take some examples of different types of indicators and what we're looking at. Okay, so trend, moving averages, MACD, there are types of indicators for that. Momentum, we have the stochastic and the RSI. Volatility, those are going to be indicators like Bollinger Bands or average true range. And then volume, unbalanced volume, and the Chaikin money flow. Okay, so those are some examples. Now, if I were to be looking at this particular chart here, so we're looking at Alphabet or Google, and we want to know what works best on it. Okay, so if I look at this, should I be using a trending indicator? Should I be using a momentum indicator, volatility, volume? What should I be using? And that's the question we want to answer as we go through this presentation today. Okay, so through our workflow, we're going to we're going to do a couple different things. We're going to show you how to use your preferred indicator and identify powerful trade opportunities, or simply find the best indicators to work on a particular stock that you want to trade. Okay, so we're going to take two different approaches to this workflow and find what works best. We got some good discussion going about pilots. Pilots are talking about, people are talking about what pilots are doing. So we have good pilots brief and debrief each other after each flight, can apply the principles to trading. Thank you, Jeffrey, for that. Most pilots are actually flying supplies during the pandemic. That is true, Eric. A lot of people are actually flying. Emmanuel says, I love this guy. Well, hey, thank you, Emmanuel. I appreciate that. And okay, great. Let's go ahead and let me just see if there's any questions on YouTube. Okay, we're doing good. Okay, let's go ahead and jump into MetaStock. Now, you have been seeing Jeff talk about and Vince talk about and other presenters today talking about how to scan the market to identify opportunities. That is one of the biggest things that Jeff has talked about, one of his favorite features of MetaStock. One of my favorite features of MetaStock is the scanner, because it helps me identify things that are happening right now. I'm not wasting my time going through hundreds of charts, trying to find something that matches all my criteria. I want to find something that's happening right now. Now, when you're talking about scanning the market, there's multiple ways to do it. You can scan on a 1 minute, 5 minute, 30 minute, daily chart, whatever time frame it is you trade. MetaStock has a different version for you, okay? So I'm using MetaStock RT, or our real-time version. There's also an end-of-day version. End of day will do daily, weekly, monthly, yearly, quarterly. The RT version will do any time frame that you want. So from a tick by tick up through a yearly chart, whatever you want to build, you can do. So I'm going to focus mostly on daily, but know that anything that you want, any time frame you want to scan, you can do the same thing on a 5 minute or a daily or whatever. Okay, so we're going to start with something basic. Okay, we're going to start with a MACD. The MACD we'll get into in just a second. We'll show you some examples of how it looks and the way it trades. But what we're going to do is we're going to look for a MACD buy signal against the S&P 500. And Jeff was talking earlier about, somebody was asking about the index constituents. So here's that whole list of index constituents that you can scan. And you can scan any list that you want to, full markets, the full NYSE, full ASX, whatever it is. But for this one, we're going to just focus on the S&P 500 for the moment. Okay, so all I'm going to do is say MACD, S&P 500, find me current examples. This is now going to go through and look for MACD buy opportunities across the S&P 500. Okay, so you can see it takes just a second to get started, but once it gets started, it starts churning through these very quickly. Now we've rejected out 44 out of the 45, so we have one signal. So this is easier again than me going through those charts one by one, trying to identify these opportunities, okay? So it's really weeding out most of these stocks. And when we're screen sharing, it does slow this down a little bit. It's typically quite a bit faster. That's why I like to try to limit it to something like the S&P 500, so we're not doing this. So you can see we're starting to get a little bit more. So now we have 3 opportunities, and I just want to give this a second to go through and identify these opportunities for you, because we're going to try a few different workflow things. And again, this is a good way to identify it. And while that's going through, I'll just go ahead and check questions. Okay, so we have somebody asking for a stock example. We'll get to certain stock examples in a few minutes. Somebody's asking, will there be recordings of these 3 days? Yes, the YouTube link has been posted. If you're already watching this on YouTube, you can actually just come right back to the same YouTube link, and we will be you'll be able to watch this recording over and over again. And then somebody's asking, where is your chat located? Our sales and support staff, Jeff answered this in GoToWebinar, but we are actually in Salt Lake City, Utah. All of our sales and sales and support staff are right here in Salt Lake City. So we are all grouped together. We're not spread out all over the world or anything like that. Okay, so I think we have a good list here. So let's go ahead and just cancel this exploration. We'll take a look at what we have so far. All right, so this is a list that we have so far. So we have 12 different results here out of the S&P 500, giving us buy signals right now. So let's just take a look at one. So let's open up Delta Airlines here. So we'll just double click here. And I'm just going to move this over to the other side here so we can come back to it. Okay, so here's Delta Airlines. Okay, so I know that this has a MACD buy signal. So let's actually put our MACD indicator on here so we can take a look at it and see what's going on. Okay, so here's our MACD. Now, if you're not familiar with the MACD, this is, again, a trending indicator. It's using different moving averages to supply us buy and sell opportunities. It's using the difference between a 12 and a 26 period exponential moving average. And then on top of that, we have a 9 period exponential moving average, which is our trigger line. So when the difference of the two moving averages crosses above the signal line, that's an opportunity for us to buy. Okay, so if you're not familiar with it, you want to learn more about indicators, we have a great tool in MetaStock that you've seen a little bit of called the Expert Advisor. And this will give us buy and sell alerts based off of the indicator that we're looking at. So right now we're looking at the MACD, so I can just put this indicator on our chart. And there is today's buy opportunity. Again, I'm not recommending that you buy this. This is just interpreting the indicators in the software. So we have a buy opportunity right here. Now, Jeff has also shown the expert commentary. This is a great window that walks you through what's actually happening on the chart and helps us identify why we're taking this trade and what's going on with it. And a couple of things you may not know about the MACD as we go through this is there's actually different ways to identify trades with the MACD. We have the buy and sell alerts based off of the crossing of the lines. And we can also have the MACD go overbought or oversold. And we actually have this great feature in MetaStock that will highlight the bars for you and actually tell you when that's happening. So I can come back here and see that, oh, MACD is in an overbought range. Prices may continue to move higher for some time. Wait for prices to move lower before considering any short positions. So you can see as it went oversold, it really did just kind of rocket up and continue up before pulling back. So that we have a great combination here of MACD buy going into oversold and really ramping up. Okay, so there's some great ways to use the MACD. But the question we wanted to answer here, if we go back to our list, let me pull this back up, of the MACD is, okay, I have 12 different stocks here that are giving me buy alerts. Well, how do I know which one is the best one to take? How do I know that if I go in, I don't want to take 12 different trades at once. What we want to do is we want to actually look at how to identify which opportunity is set up the best. So that's what we're going to do next. But I have a couple of questions here. I'm thinking out of the box here. Why do not MetaStock scans an hour ago? We will believe you rather than watching the paint dry. Sorry. I'm not sure. So I think, again, when we're screen sharing and we're doing this screen sharing, it does slow it down just a little bit. So I apologize for that. Let's see, so where is the histogram? So if you want the MACD histogram, you can apply the MACD histogram. We also have a great template set up. I'll just answer these questions while they're here. So you can come in here, you can see all these different templates. You have the MACD histogram right here. So you can apply it as the histogram version if you prefer to do it that way. Okay, looking forward to catching this session. Thank you, appreciate everything you guys are doing for those who are starting. Okay, great. All right, let's go ahead and move on to the next section here. So when we're talking about identifying which one works best, what I want to do is I want to actually take and say, how did my stocks perform? What is the best performing stock using the MACD? Okay, I have 12 different opportunities, but how do I know which one's the best one to take? And that's the approach we're going to take now. So we're going to jump into what's called system testing. And system testing lets me take a strategy and put it against a list of stocks or a single stock and see how it's performed over time. So what I'm going to do is I'm going to take the MACD and I'm going to put it against that list of stocks that we had our opportunities on and see which one actually performs the best. Okay, so I have MACD, last exploration result right here. We've checked all those stocks. So these are the ones we're going to test. Now you can tell the system tester whether you want to trade long, short, or both, okay? Now, what I'm going to do is I'm going to trade long only on my backtest. Why would I do that? Well, I'm trading long because that is the type of signal I have. I have a long buy signal, so that's the way I want to test. You can test short or both, but I want to see how my long trades perform as I go through this, okay? You can tell the system tester how long you want to test over. So you can say, I'm going to go over the last 1 year, 2 years, 3 years, 5 years, 10 years, the last 250 intraday 1 minute bars, whatever it may be. So this is all customizable again. So I'm just going to look over the last 5 years to see how it's kind of performed in different trading markets. So that's what I've got selected there. I'm going to test daily. And let's go ahead and look at our options here. Now, these are kind of all set it and forget it kinds of things. You don't have to go through this on a consistent basis. If everything that you're putting in here is selected and the way you want it, you can just hit start the system test. You don't have to go through all this, but I want to show you these examples. Okay, so reporting, don't worry about this. We can kind of leave this as is. Now we can come in and we can say how much of our money we're willing to trade. When we talked about, when you've listened to some of the others earlier talk, some of the other presenters, they've talked about risk to reward. How much are you willing to risk for how much reward? And that's kind of the way the system tester works and helps us understand what's going on. Okay, we're not really, and there's different ways to do this. One is I can say how much of my equity I'm willing to risk. Okay, so if I have 100,000 in my trading account, I can say how much I'm willing to risk of that. Now, I have in here as a default percent of available equity, 15%. Now, am I really going to risk 15% of what I have in my account in a single trade? No. Okay, the reason why I have it set this way is the math is kind of easy. So if I have 100,000 in my account and I'm willing to risk 15% of that, I'm willing to put $15,000 into a trade. Okay, so if I have that 15,000 and my account then goes up to 200,000, now I'm risking 30%. Okay, so that's kind of the way the math goes. You can say that you're only trading a specific number of units. So if you're trading 1,000 shares or 100 shares or 10, whatever that is, or how much you're willing to just put in as a fixed cost. Next, you can put in commissions in here. Now, most of us are probably nowadays paying $0 commission. We're not really paying a lot of money in commissions, so that's defaulted to 0. If you're trading on margin, you can put that in here, and then you can also put in your trade execution here. So when we talk about realistic market prices and trading the market, what we're talking about is if I'm trading on a daily bar and I want to get into that trade and I have a buy signal, well, when am I really getting into the trade? On a daily bar, it's at the end of the bar going into the next day. So that's what realistic market prices is. It's not getting you in on that current bar. When you get the signal, it's waiting a bar to get you in. Okay. And then if you want to, you can account for slippage and these types of things as well. So let's go ahead and click OK. And now we're really ready to start our system test and identify what would be trading best here. Okay, let's see if we have any questions while that's testing here. What somebody asked, does MetaStock import TradeStation easy language and indicators and strategies? No, but again, as Jeff said in there, they are really easy to create. We can even help you with that. Margaret says, I don't feel like this is dry. Joe Duffy was just teaching the importance of patience in trading. The pace of Kelly's demo is absolutely fine. Thank you, Margaret. Appreciate that. Is there a coding language in MetaStock like Easy Language? Yes, we do have a great Easy Language type of thing that you can use. And I'll show you some examples of that here in just a few moments. But let's go ahead and look at our results here. So now what I've done is I've put the MACD against those 18 stocks, and I've identified what the best opportunities are. So let's rank this based off of percent gain, and I can see that some of these perform very, very well using the MACD, and others have not performed well using the MACD. So let's just take a look at what my results here. So Freeport FCX was my top performing one over that 5-year period. Over that 5-year period, using my rules, I would have made a net profit of $23,000 with a 23% gain. It traded 208 times over that period. Now, you need to think about this as a trader. If I look at something that trades 208 times over 5 years, is that something that matches the way that I want to trade? Do I want to be in and out a lot? Do I want to be something that I'm really more buy and hold longer term? Or am I that short-term type of trader? So this helps answer that question. So we had 208 trades. Of those 208 trades, 104 were winners and 104 were losers. They don't usually end up 50-50 like that, but that's a really interesting number. Think about that. 104 trades were winners, 104 were losers. What that tells me is that my winners were big and my losers were small. Now you can ask me and say, hey, is there a way to put stops in as part of this? Because this isn't accounting for stops. This is just saying, hey, when the MACD says buy, buy. When the MACD says sell, sell. And you can go in and put stops in as part of this. I just want to show you how the raw system works in itself. So let's go in now and let's look at a little bit more information. I'm not going to dive into all of this. There's a lot of information here, and we have great training videos to take you through this. I want to show you the things that I look at the most when I'm looking at system testing. Okay, so we've looked at those profitable trades. I can see that my average profit per trade was $744. My highest profit was $5,500, and my lowest profit was $524. So my average loss was $516. Now again, this isn't accounting for how you put in stops. If you're putting in stops, your losses are going to be a lot less than this. This is just really to help us identify how the system works overall. If you are just trading the indicator as it said to trade. And I don't recommend trading that way. I really recommend using stops and identifying those things. But this gives me a good indication of how it would perform if I just followed it along. Over here, I like to look at this risk-reward index number. So the closer this number is to 100, the better it's been. Basically, this tells me time that it's spent above my equity line. Well, what's an equity line? It's this. An equity line is how well my money is performed in that trade, in those trades over time. So if I look at my initial equity over here of 100,000, we can see that it's grown to 125,000. I did lose money here initially, but overall, it's kept me profitable over the long term. And we can see in the recent market here, my trading it's simulated here has been really, really good. So now does this tell me that, well, okay, now trading the MACD, I'm going to be successful on FCX every time? No. But what it does is it helps me understand that it's performed well over time, so I have a better confidence level in that trade now. So rather than saying, oh, this is great, I've got a greater confidence level in that next trade. Let's look at a few more just to show you what this looks like. Okay, let's look at Southwest Airlines. It's the next one down on the list. Okay, so we've got a great reward risk index. We can see our profitable trades are 770 versus 540. Okay, so pretty good there. But let's go right to that equity line, because this paints a great picture for me. Now, this equity line is something that I really like. In our last equity line, we saw a lot of choppiness. We saw a lot of up and down in that equity line. In this particular one, what we're seeing is a very smooth upward growth. We did have some good drawdown here. We had some losses here, but overall, I'm seeing a very good smooth equity line. The smoother the equity line and the more it kind of parabolics up, the better. That shows us that it's performed very well. Okay. Let's look at Marietta. Okay, we'll go right to the equity line. Okay, so now you can kind of see the difference here again. If you look at this one, most of the time it's very flat, it's very choppy. We've had some okay things happening here, but it's not great, okay? So the equity line can really give us a picture of how well it's traded over time. And that's kind of one of the top things I jump to is that equity line. Okay, so now if I look at, I didn't even look at the stock here, but if I look at this equity line, how do you feel about this one? If you were trading this particular stock and you look at this equity line, are you going to trade the MACD with this equity? Are you going to trade the MACD with this particular stock, knowing the equity line looks this way? Probably not. What we're doing is we're matching the personality of the stock with the personality of the system. We're going back and we're looking at a chart and saying, well, how do I identify which of these types of indicators, or which indicator should I actually use to help me place that right trade? Okay, so there's an example of scanning the market and identifying opportunities and seeing what would work best. So if I was doing this and I was looking at it, I'd go, probably, even though FCX was our top performer, Southwest actually had a better equity line overall to help me identify, to help me have confidence in that trade. I'm just curious, we're going to look at Delta just to see what Delta looks like. Okay. What do you guys think happened right there with Delta? There's something that happened in the market about a year ago. I'm not sure, but so you can see that's why I like to perform a backtest over a period of time, is because it helps me look at how it performs in those types of choppy markets and identifying it. Did we see that type of drawdown with Southwest? We didn't. Okay, so some ideas to help you through that system testing. Okay, so the next workflow I'd like to do is I'd like to take a look at a stock, and we're going to be quick on the draw here. Somebody give me a stock that we could backtest to see what strategy works best on that stock. And this could come from YouTube, or it could come from GoToWebinar. So if somebody wants to chat in a stock that we could backtest, that would be fantastic. And while that's going through, let me answer one or two questions here. How many simultaneous conditions ideas can be backtested? You could actually do a lot. You could actually, so you can do what we're about to do, or through the programming language, you can actually put together a series of conditions that it has to meet to actually place your trade. So the first one that came through was BA. So let's go ahead and put in BA as our test. And what I'm going to do is I'm just going to go through and I am going to select multiple systems here, and we're just going to put it through and see what works best. So we're just going to choose a bunch of random ones here and see what works best. These ones that I'm selecting right now are called the performance systems. These are all built into MetaStock. So these are everything I'm showing is all built into MetaStock. There's nothing that's outside MetaStock. Okay, so let's get things like we want the RSI, we want stochastic pops. We'll add these in. Okay, so we've got a good selection of different types of indicators. Hey, I've got somebody asking for something from the London Stock Exchange. So yeah, we could certainly we can certainly take a look at that here in just a second. Okay, so I've got BA up here as my option. Now I'm going to do both long and short. Now, however you trade, if you only go long, test long. If you go short, just test short. If you do both, do both. So we're going to look at both, and we're going to crunch some numbers here. So we're putting BA against, let's go ahead and put that through. So we're putting BA against 79 different trading systems. Okay, so it's going to churn through and it's going to tell us how these perform. Now, it looks like one of them that I selected was an optimization one, where it goes through a lot of different variables to identify which variable actually works the best. So we'll take a look at that too and see which one, how that looks. But so we're almost through. So we just tested 79 different trading strategies on that. And let's see what performs the best on BA. Okay, so now instead of looking at a list of stocks, we're looking at a list of systems. And these are all against BA. Let's rank these by best profit. Okay, so on BA, what it came back with was the projection oscillator. So we had a 28% gain over that 5-year period. Okay, we had 390 trades over that period, so a very active, a much more active system. And we had 190 winning trades versus 200 losing trades. So we had more losing trades than we had winning trades, but it's still my best performing system. Now, again, the thing that we want to do here is we want to go and look at that equity line to see how it performs. Because if we've got a choppy equity line, we just want to throw it out. I just throw it out the board. That's how I use the system tester. I don't spend a lot of time digging through all, if I've got a crappy equity line, why do I want to spend a lot of time with it? Now this equity line, if we look over that 5-year period, didn't really do much. It was kind of in and out. And really, when was it that it got really active? It was back in that choppy market that it really had its best performance. Okay, so this can kind of help you show that, okay, when the markets get choppy, this system performs very well on this stock. And then it's been kind of flat. So let's kind of take a look at the next one down, the percentage crossover 3% system. Okay, so here we have that slow, steady equity line. We've got some great bumps in here, and it's kind of going up on that slow, steady pace here. Okay, so we can kind of start to see a picture emerging here of, again, some strategies will work very well on certain stocks and others won't because of the personality of the stock and the personality of the indicator. Okay, we look at this equity line. I had a few good trades. Other than that, it's kind of flat. So we're using the equity line to help us to determine which ones actually perform best. So let's see. So William is asking, does your system tester consider slippage? Are exits based on limit or market orders? Does it trade after hours or just normal hours? Okay, so some great questions from William there on the system tester. So let's kind of break those down. Does your system tester consider slippage? Yes, you can go in and account for slippage. You can do a point slippage or a percentage slippage. So you can put that in as part of your criteria. Are exits based on limit or market orders? Whichever you want them to be. So you can change that based off of how you're trading. Okay, so it's a really flexible system tester and being customizable to the way that you trade. So great questions there. And then does it trade after hours or just normal hours? Okay, so typically it'll look at normal market hours, but you can pull up the after hours charts in MetaStock and look at those if you have the real time. All right, let's do something from the London Stock Exchange. We'll just pit those same systems. It was, what was it? MIDD.L is what Margaret was asking for. Let's take out that optimization system and just run it against those. Okay, and this time I'm just for a difference here, we'll just do longs only. Okay, we're already through that result. And it looks like that might, let's see if I have access to that data. I might not have that on my account, so apologize here. Let's MIDD.L. Oh, okay, yeah, that looks like it's an invalid symbol there. So I apologize, Margaret. If you have something else, I'd be happy to look at it, but I don't see that symbol is there. And then William is also asking, do you have a continuous custom contracts for system testing futures? Yeah, let's take a look at that example. So let's say you were doing gold as an example. So what you would do for a continuous contract, you would put in GC for gold, and then we do a little C1. That's how we would chart it. So that's going to test a continuous contract over 5 years of gold. And we will just do both long and short since we're doing a futures contract. Now, one of the things that you want to consider when you're doing a futures contract and back testing though, William, is in our trade options, typically equity, because futures are traded differently, we want to come in and we want to select a points only test. So we're just going to go ahead and select that for our future test. And then we'll go ahead and run that same scenario and have it go through. All right, we're almost through that one, and then we'll show you the results of this. Then we have a few other requests, and we only have a few more minutes, so we'll see what we can do here. Okay, so here's our example of our futures test. So let's just we're going to look at net profit here based off of points. So you can see that the PS Chandy forecast oscillator system, it has been our top performing one. We can go in, we can look at the equity line, and there you can see your equity line. Now again, futures, you can do all this, you could do 5 minute, 10 minute, 30 minute, whatever you want to look at. Somebody had asked, what does the formula language look like in MetaStock? If I come over here to system, you can see there's an example of our formula language and what the formula language is doing. This particular one, it's using the forecast oscillator. It's using a close of a 14 period, and it's being greater than a cross of so on and so forth. So you can, it's very easy to build these. It's got a wizard to help you kind of know what to populate and what to put in. And we've got great videos showing you how to actually use these different things. Now, I want to talk about a difference in system testing. I appreciate all these questions. These are actually great questions. One of the things that we see with system testing is, let's just look at gold here. Let me go back to my chart. So if I pull up GC, the gold continuous contract, and I wanted to look at that system that was actually being looked at, I think it was the percentage crossover 3% that we used. So we could go in and we could put that system onto the chart, and it's going to highlight when to get in and when to get out for me. Now, if I've back tested a group of strategies against a system, and I know a system works well, the patience part comes in while you're waiting for a trade. Because we know that the system works, so we can see great trades here as it goes through. We can see these great trading opportunities that it's taken over time, but I'm waiting for a next one. In this particular example, we actually have one that's set up. So we actually have a trade set up that's come in there. But oftentimes, you may backtest and you may be in the middle of a range and have to wait for the next trade opportunity. Whereas where we scan the market, look for current opportunities, and then go through and test which ones actually meet my criteria, though that's a workflow where you can identify current opportunities. Let's see. So now one other quick scenario. There's a lot of different scenarios that we can do in the system tester. Somebody's asking for a London, or let's actually do this. We're going to do one last example, and then we'll wrap up here. So what I'm going to do is I'm going to do another example with the MACD, since we've talked about that. What I want to do now is, let's just say I'm trading the FTSE 100. What I can do is I can take the MACD, and I like the MACD as an indicator, and I'm trading the FTSE 100. What I can do then is let's just go the last 2 years. So I'm going to put the MACD against the FTSE 100 and see which stocks the MACD works on best within the FTSE 100. So that's another way that you can use the system tester. So there's a lot of workflows, and I've dumped a lot on you today. But what I want you to understand is whatever workflow that you want, it's going to help you identify the best ways to identify trades with that. So let me just jump in some questions here. Do continuous contracts smooth so that historical prices are not really exact, or can you set them to switch contract X days prior to expiration, etc.? William, that's a good question. There's actually a couple of ways you can roll contracts. You can roll based off of expiration, and it depends on what the exchange offers, but you can roll on expiration, you can roll on volume. So when volume gets greater, you can roll on volume and open interest. You can roll based off of the next contract forward. So there's a lot of ways to do it. I will give my email address here at the end, so you kind of you can reach out to me if you have specific questions. I'm more than happy to answer specific questions. Okay, so this is the London Stock Exchange. I had a question to do this for Saudi. You can do the same thing on the Saudi markets. MetaStock offers all of this data, but just jumping in, it looks like testing the MACD. It looks like Flutter entities. I'm not super familiar with the LSE, but you can come in and you can do that same analysis and go through it. Okay, so we've talked about our workflows. Just again, we do want to offer the ability to let you try MetaStock. So if you don't have MetaStock and you haven't tried it, MetaStock is really powerful. There's a lot of stuff we didn't even get a chance to cover inside MetaStock. These are just a few of the workflows. And MetaStock really allows you to get in and do things and customize it to the way that you want to do it. So people have been asking very specific questions about, well, can it do this? Can it do this? Can it do this? And typically the answer is yes. We've set the system tester up to be a powerful way to help you identify the best trades on whatever it is you're doing, okay? So again, you can scan the markets, test your trading ideas, statistically forecast probable price movements. If you have those YouTube recordings, go back to yesterday's, watch Scott Brown's about the forecaster, learn about that. You can get commentary, signals, and it all starts at $59 a month. It depends on whether you want end of day or real time. We have the two different versions. And if you go to that metastock.com/conf promo or call 1-800-882-3040, you'll actually see the different versions of MetaStock and the trials that you can take. And you can also see all the extra add-ons that you've been seeing, like Joe Duffy's Scoop system, the Vince Vora Victory system, Steve Bigelow's system. All these different systems are all available on that page as part of our special offer for the conference to try MetaStock, see how it can help you in your trading. I can tell you traders all over the world use MetaStock. I've been with them all over the world. Technical analysis is a powerful thing, and it's something that we should be using in our trading, especially in today's markets and the way that today's markets act, because fundamentals are really hard to trade right now, and technicals are so critical as part of it. Now, a couple of things that you get when you get MetaStock. You not only get the software, but you also get free unlimited support. I could probably ask everybody in this room right now, if they have MetaStock, what they think of MetaStock support, and it would be an amazing answer. We do surveys every week about how our customers feel about the support they received when they contacted us. And our support sits at about 98% satisfaction rate, which is unheard of with any support company that you call. Our support team is fantastic. You also get free unlimited access to recorded training. We have a great book that we've put together called Unleash the Power of MetaStock. You get that, and then you also get somebody who will call you and help you get set up with MetaStock, walk you through some of these workflows, and help you understand how to use what you're doing. And you can do that by calling 800-882-3040, visiting metastock.com/conf promo, or you can visit metastock.com/sales chat. My contact information just really quick. Let me just put that up here. If you want to reach out to me and if you have questions, I didn't put it in the slide, but I'll just put it up here. My email address is kelly.clement@metastock.com. You're welcome to reach out to me for any questions you have about the presentation today or feedback about the conference or anything like that. And I'm getting answers. Support is amazing. Thank you, Barton. Miguel, the best support team in the world. Thank you. Great questions. Is data from MetaStock downloaded locally or is it cloud hosted? It's actually all in the cloud, but you can download it if you want to. And it looks like we've gotten most of the questions as we've been through it. Jeff, I know we're short on time. I'm getting feedback over in
All right.
YouTube. That was a super awesome presentation. Thank you, Greg. Jeff, back to you.
All right. First of all, before you go, I need you to pick another number between 1 and 10,000. Oh, God. 10,600.
All right. Let's go with, we're going to go low number this time. We're going 569.
Okay. All right. 569 would be way down in the spreadsheet. All right. Thank you very much, Kelly. I'm going to figure out who the winner is real quick. So let's see. Great presentation. Greg Lewis really enjoyed that one.
I'm glad he did.
I'm sorry. It takes a while. I thought I had a faster way to get through this spreadsheet, but it's a big number. Like 569 would be a USA winner. A person by the name of Gary T.
Oh,
USA.
Congratulations, Gary. What's Gary win today?
Oh, let's see. We're going to give him 3 months of Magic Trader, 3 months of MetaStock, and 3 months of MetaStock Zenith. So
wow.
It's about a $1,200 value. Magic Trader will be presented a little bit later by a gentleman by the name of Peter Dalal. It's been a very popular add-on. The people that have tried it really like it. So we're going to give you 3 months of that. We're going to give you 3 months of our MetaStock program. You may have heard of that, Gary, as well as 3 months of the MetaStock Zenith service. So congratulations on that. I will be in touch with you when I get a second to let you know how to claim your prize. So thank you, Gary, for registering, and congratulations on winning. So in any case, and thank you you can thank Kelly. He picked the presentation for you, or he picked the number. All right, I'm going to take everything back.
All right.
Good job, Kelly. Very much appreciate it. Very quickly, we're going to talk a little bit about our Stocks and Commodities sponsorship. They do a great job. We love them, and we very much appreciate kind of the work that they do. And so thank you for that. You will get a free issue if you registered today or yesterday or a week ago or whatever. If you're on this list, you'll get a free issue. If you're not, they're going to send a little bit of a link through the chat to YouTube to show you how to register, so you can get that free issue, and you can be on the list of the next people that are going to be in the drawings coming up. So as a reminder, we're going to be doing a premium class on Thursday with Steve Bigelow, Jeff Tompkins, and Vince Vora. They're all going to be talking about things that they're really good at, like top-rank candlestick signals, finding high probability trades, and trend lines and technical formations. These three are awesome. They're going to spend 90 minutes each just talking to us, giving a premium class. And these are awesome. I really like taking part in them. I'd recommend you come with us. It's only $450 for 3. It's $150 a session. So $450 will get you all 3 of those really good, well-known experts. Give us a call, 800-882-3040 or metastock.com/sales chat to go ahead and get registered for that. And we can help you get set up. Our next guest today is Tom Busby. Tom is a gentleman that I've known for a long time. He's I really like Tom. I would qualify Tom as a Southern gentleman. He started trading. I like the story, and hopefully he'll tell it about like having one of the first. I think it was a Reuters newsfeed. It might have been a Bloomberg newsfeed, but that's really how it was. Really, one of the first people in I think Texas to get it, if I remember the story right. Very nice guy. Super nice guy. We like him, and it's been a while since we've had him in here. So Tom, how are you?
I'm doing fantastic. How are you doing?
I'm
Long
good.
time no see, huh?
Yeah. Was it Bloomberg or was it Reuters?
No, it was a Globex terminal from the Chicago Mercantile Exchange.
Oh,
And
I was wrong either way.
yeah, it was I think one of 50 in the world. Way before electronic trading was fashionable, I had one, and it was quite an experience having one of those suckers.
Yeah, I remember the story. I just didn't remember the details. Details I don't too good.
Interesting. Yep.
All right, we can see the non-expanded view of your screen.
Okay. Perfect.
And so if you go ahead and make it full screen, it'll be perfect. And I'll go ahead and get out of your way, Tom.
Okay. Just Adam, get me moving.
So yeah.
Okay.
Yeah, I can see it. We can just see the side view on it. And I don't know with the view you're in how to kind of make it expand it full screen. But we can see the 4 chart patterns every trader should know.
Okay.
And market size. I just don't know how to, from where you're at and docs, I don't know how to make that full screen.
Adam, do you know how? Does that make it bigger doing that? Is that bigger?
Not exactly.
Can everybody see that? That's the question, I guess.
Yeah, everybody can see it. I think you can go through it. We'll just be able to see what's coming up. I think we're okay.
Yeah, no problem. All right, well, let's get started. And what I like to do, if we could, if everybody will type in, where you're signing in from. I always get a kick out looking at the different places. That's pretty big.
Now it's just totally gone.
Oh, the screen's gone?
Yeah, totally. I just see a big black bar.
Smaller screen's fine. Just do the smaller thing. Everybody can put on their glasses.
Try. Somebody says right click and try full screen. I'm not familiar with Google Docs. So in any case, I don't know how exactly, but I just think you should move.
All right, let's get going because I think time is a very, very am I ready, Adam? Okay. All right. I think years ago, when I first started in this business, one of my frustrations was having what I call trading tools that I could use to help me make money. And I'm not very, I would say I'm very, very limited on computer skills. And so that's why I was getting Adam to do all this stuff. And even over the years, I've really tried to stay with trading. And then Adam, has been with me a long time. He gets me all set up and ready to go. So the gist of it is the software we developed, though, and I always tell people this, it was developed by traders, not programmers. And that was a big difference to me at the time, and we called it the roadmap software, and we still use it. I can't trade without it. It helps me analyze what I call the high probability trades. And I guess my longevity in the market is really the biggest statement towards it, because you can see trade after trade that we do, and it's just very simple. I always wanted it to be simple. I didn't like complicated, and I think Wall Street at the time and still try to complicate things. And when you're trading, you've got to have something that presents to you a decision, and that decision is: should I buy the market? Should I sell the market? Or should I stay out of the market? And those are the three main decisions that you have to make as an investor and as a trader. And so that's the way we designed our software. So there's risk involved in everything we do. And, to say that every trade you're going to make is going to make your money would be totally untrue. But what the beautiful thing about what we did, we sort of framed every trade inside the pattern of trades. And it makes it really nice for somebody that's just getting started, or somebody that's very experienced. Because I was exposed to what I call the forerunner of all the computer software with the Globex terminal. Now, for those that don't know who I am, a little bit of background here. I'm Tom Busby. I was a former Air Force officer. I got out of the Air Force and went to law school. And then while I was in law school, got involved in the market. And I am an active trader still to this day, still a member of Chicago Mercantile Exchange. I trade, futures, I trade stocks, I trade options, I trade everything. And I have 3 books: Winning the Day Trading Game, The Markets Never Sleep, and Trade to Win. Now, if Adam can do this, he can give you the audio version of my first book, Winning the Day Trading Game. People tell me it's one of the book will help you. If you go through it and listen to it, you'll be better at this game of trading. And it's a pretty neat thing. Now, in my opinion, market timing, everybody says that you can't market time. And they still, they're still spreading that around after all these years. We can teach you how to be a great market timer. I'll trust you. If you learn what we have and use our software, you'll be better than 50 to 60% of people that ever try to get the direction right. Direction is very important, okay? And we have an early look at direction using a 24-hour market that allows us to get on the right side. Today was a classic case. The market was correcting in the middle of the night. It corrected in the morning, but now it's just went into a buy signal, and the market should push higher. And we'll see if that happens while we're talking. So S&P is about 47. Now, there's so much information. So what I thought, I said, well, how can I sort of analyze all the information in the world and come up with direction? And so I created what I call the 7 sisters. It consists of the E-mini, biggest market in the world, 500 stocks. NASDAQ, very hot market. The Dow, traditionally, one of the core indexes. The DAX, the German DAX. I followed the DAX, and in fact, I was very fortunate that the Eurex exchange, when they came to America, chose me to introduce it to retail traders. And I did that for a period of about 2 years. And then I taught classes in it for about the next 20 years. And, but, I always call it, you got to learn how to dance with the DAX. Of course, gold, everybody follows gold. Crude oil, it's really the ingredient that goes in a lot of this, the economy, and you have to know what crude oil is going to do. So we follow crude. And then, of course, interest rates. And I'll just put this as an aside. I think the bond market is probably in my career, one of the greatest shorts that you'll ever have an opportunity to short over the next 8 to 10 years. And that's the bond market. Okay. If you look at Seven Sisters, see where it opened the year at, see where it opened April at, and currently, you know, you watch the market and as it deteriorates. I'm short bonds as we talk. Now, here's some stocks. And there's so many stocks to follow, but I like to follow stocks that are going to pay me. And my subscribers like that too. So here's the stocks that I consider that will pay you. Oracle. Now, Oracle has been a stock that's sort of been under the radar. And if you look at Oracle right now, Oracle is breaking out. And this stock, and this is my opinion, I believe will go to about 110 over the next year, year and a half. So if you look at Oracle, I'm actually long. I bought some more before I started today. I'm long some options on Oracle. And but this stock itself is a stock that's entering what we call a roadmap buy signal. And this buy signal is a long-term signal. And if you like a stock that you buy low and sell high, here's your one right here, Oracle. And so you'll see it go up. In fact, I sort of think something's going on behind the scenes because I haven't seen it move like this in years. So Oracle. Another market I trade constantly is called the SPY. That's S&P 500, largest market in the world. It is the most traded market in the world. And there's a lot of strategies with the SPY. I've got a new program I just introduced called the Moonshot Program. And I think we're up 100%, with that program. 100%, that's right. And I call it Find Time for a Dime, where you buy options that are 10 cents and then you take advantage of those short-term movements over a period of 48 hours to 72 hours. So this is an innovative program. If you like to, if you want to learn more about that, you just have to contact us and all that. But it's on the SPY. So now Sabre. Here's a company I told people that they could buy the stock at 10 and sell it at 20 this year. You can see we're about halfway there. Sabre is a company that has done just about everything right in the last 6 months, especially during the pandemic. They're a transactional company, which means that as travel and people come out of the pandemic, their business is going to go up. But I think it's good for $20 a share. I'm long Sabre, and I'm like halfway home. I'm looking for $20 a share on Sabre. I think that's a conservative view. Now, here's one that you hear a lot about, the home building industry. Lumber has gone from about $300 a board foot to $1,000 a board foot. Lennar is a company that's taken advantage of that, and they're very good at what they do. This stock is breaking out. My first target will be about 110, and you'll probably see this stock this year, maybe 120, 130 area, but I think it's a good trend to latch on to, okay? 110 will be the next stock. Now, this is one. Who's familiar with utility companies? Utility companies, this stock has averaged a 10% total return for the last 10 years. We have a white paper on XLU with a strategy that we custom designed, and I'll give it to everybody that showed up today if they want it, but it's really a great strategy. This has weekly options, and you can work XLU to death. It's a very stable stock. The stock this year is forecast to make it to 70. And as it makes it to 70, you can do puts and calls all the way up on this one. But I had one guy last year, I think he told me, with a very small account, ended up making about 55,000 on XLU. And, he's been with us a long way. He has a roadmap, and he's able to do the setups. Now, Bitcoin. Last October, I told people, I said, I think 2021 will be the year of Bitcoin. It's going to go mainstream. And I knew that following the S&P because the S&P companies had identified that they were going to acquire inventory. My guess, and this is just a guess, throwing a number out there, it's about 60,000. We've made that call about 20,000 that was going to break out, and I think you're going to see 100,000. And you say, well, why? I probably don't know all the reasons. I can just tell you I've been trading for a lot of years, and that's my target. It's probably conservative. I'm looking for Bitcoin. So I found out there's a couple stocks that I could trade that were very lucrative to trade. We bought Riot at $10 a share. And if I'm right on Bitcoin, you're probably looking at $100 on Riot and Mara, two companies here that we follow on a daily basis. And I think we traded Mara this week, made some nice money on Mara. But that's a couple stocks that might help you. Now, what I like to do, and I always try to do this at a presentation, I've been trading a long time, over 40 years. 40 years I've been doing this. So I must love it, right? And I come up with these, what I call insights to the market. Here's a few that might help you. Insight number one. You'll hear this word a lot, but it's a pivot number. I can tell you that today's pivot on the S&P is 4069 or 4071. 4069. Above that pivot means we should go higher this afternoon. It's the key to whether you're going to be long, short, or out, knowing the pivot number. And we have it calculated inside our software, so you don't have to do all the work I used to have to do to get these numbers. It's right there in front of you. Now, I wanted a picture of when to buy and when to sell. So I created buy zones and sell zones. Investors Business Daily is always talking about a stock going to a buy point. Well, I was there before they were. We started about the same time, and they're right. There's certain areas that when a stock hits that buy area, it just goes, and it goes to its target. That will increase your odds of success, knowing buy zones and sell zones. Now, always play the strongest stock in the group. You know, you hear a lot of people talk, well, what about this stock or that stock? I use a little bit of the Livermore technique, which is sectorize things, and I look at the strongest stock in that sector. Why be in the second rate when you can buy the strongest store? So that's what I do, and it seems to work. Now, and here's something that will help you also. You get married to things. You know, you'll make a play, and it goes against you, and you'll stay with it, and here's what happens. You got a small loss, then the loss gets a little bit better, and you say, well, it's going to come back. Never comes back. It always gets bigger. So I got a rule that I do. In the last 15 minutes of the market, I will scan my portfolio, and I start pitching things that I'm not making money in. It's a simple rule, but it keeps you on the right side, and it helps you sort of erase some bad judgment calls throughout the day, but eliminate those losers. And I use the short-term method of every day. You can use a week, you use a month, but you ought to have that built into your plan. And Peter Lynch had the same idea. He said, selling your winners and holding your losers like cutting the flowers, letting the weeds grow. Losses are telling you your judgment was wrong. Take it and move on. A small loss is a lot better than a big one. Now, here's one that you see a lot. You see rapid changes in the last hour of trading. What I do, if I see a rapid change, a big percentage move in the last hour, I will take my hands and put it in my pocket. Have patience. It's a good time to stay out of the market and watch. And you watch that first hour the next day before you get in there. And, you know, if you think about today or yesterday, we had a rapid change in the last hour. And so the smart move was stay out the first hour and wait. And you'd have been fine if you'd have done that. Now, here's one that people have problems. I've done it. If you take a profit on a stock and find out you got out early, I get back in. It's okay. I mean, goodness gracious, if I'd have took the philosophy that Apple had topped out 18 years ago, think about that. I've been in Apple hundreds of times. And speaking of Apple, I've been short Apple this first quarter, but I'm about to change that move. They got earnings coming up. If they stay above 126, I'll probably buy Apple. Okay? But there's an example. Take a profit on stock and get back in. Now, you have to have caution in this market. I tell people all the time, cut down the number of stocks that you're dealing with. This market is very brutal. You're seeing corrections of 20, 30% of leading stocks. No one can hang with those. So I would say focus on a smaller number and make sure you've got your exit point before you ever enter. That's very important. Caution. Now, mid-cap and small stocks are performing better than the big ones, and that's typical this time in the bull market. And speaking of this market, we're on what I call the sugar stage. The sugar stage typically lasts from 6 months to 10 months. If you do the math on that, about October, you better get careful and you better plan, because they're going to have a judgment day. And we've had it over the years, but I think it's going to happen this year, that judgment day. So be prepared about October, especially if we make a new high in August. Now, employment and inflation are the two items you got to watch. If you notice, they're playing down the word inflation, but I've been looking at gasoline prices. 30% up. 30% up in 2 months. Don't ignore that. Don't ignore that. Employment. Employment, we've got 1 million people out of work right now, and employment is something you better keep your eye on. Could be the death knell to this particular market. Now, 5 factors that every one of you face. I faced it. Let's talk about that. When to enter a trade. First, you got to get the trade direction right. Okay? I sort of helped you there by saying, hey, we're above the pivot number. Market's trying to push higher. Trade the direction of the overall market. That means Oracle, which I'm long, has gone up about 10 cents on the option I'm in since I've been talking. And the first hour range pointed higher. And we're breaking out on it. So it should pay me when to enter. When to exit? When will I exit? Well, as long as it stays above today's opening, and I'll give you that number, 72.50, I'm going to be long Oracle. Oracle 74.58. And if it goes up today, and as long as it doesn't go back below that opening, I'll be long tomorrow at Oracle. Now, times to trade. People don't think about this, but there's certain trend times. 9:30 to 11:30 Eastern time is a trend time. 1:30 to 2:30 is our midday trend time. 3:30 to 4, that last hour trend time. And then at night, you have 8 o'clock to 10. That's where the Nikkei and the Hang Seng have started trading and setting the trend for Asia. It's right there, 8 to 10. Then you go to bed, wake up the next day, and you have your trend in Europe. And that's from 4:30 to 8. These trend times will help you keep with the trend that's identified during those times. There's 4 of them in a 24-hour market. Risk. Now, everybody has different risk tolerance. You know, the market determines the risk. You don't. That's the thing you got to learn. Every trade is based on how much it moves, when it's going to move, how it's going to move, and where it's going to move. So when you enter, and I'll just give you this, a short course. What you should do is take a set sum of money, $200, $500, and make the same bet every time for risk. You'll do a lot better. You don't know which trade's going to work out the best and which one's not. So you want a level outlay of your cash into the market and never trade without a stop. always know where you're wrong. Now, reward. That's why we do it, right? Always have a target in mind when you enter a trade. Oracle, my target's pretty simple, $77 a share. It goes to 77, I'll exit these options. Now, if I get halfway to that, okay, then I'll probably take some profit off. You don't have to take everything off at the pinpoint high. Sometimes you don't get a chance. And then my stop that I have, I got it right now at 72.55. I'll raise it to 74.55 if we go above 76. And I know that just like that. Know where my target is, I know where I'm wrong, and I know when my goal's been met. Okay? Know that before I ever take the trade. These are the 5 factors. Now, what I did, this is what I think was a great contribution. I developed this software to help me overcome those 5 factors. All of those are affected by whether you're winning or whether you're losing. And I developed this software to help me with that. And I made it down to 4 simple patterns. You got to memorize these 4 patterns. Let me show you what they look like. This is the fun part. The buy signal. When it goes into the buy area, in this case, we call that the penetration bar. Then it's confirmed. That first bar that moves in that buy area tells us direction's up. This is where you enter. Buy signal. Now, over to the left, you got a metrics. You got where to take your profit, where you're wrong. You got everything you need right there in front of you. And you can do any market in the world. That's the beautiful thing about it. Now, the buy failure. This is one of the best signals you'll get where it goes into the buy area and then fails. Failure occurs at the bottom of the penetration bar. That simple. That's what you look for, because that's where you'd be wrong if you went long, okay? In the buy failure. Now, the sell signal is the opposite of the buy signal. When it's going down, goes into the sell area, and then confirmed, then it goes to the target. Now, a day like today will pay you if you get a sell failure. Let me show you what I'm talking about. Sell failure. Goes into the sell area, can't go any lower, reverses, goes higher than that penetration bar, and then it usually goes to the target, top to side. Probably the lowest risk, biggest gains are on sell failures and buy failures. And that's what you look for. Now, if you want to get involved with us on the roadmap, it's pretty easy. I believe that this software is a must. Anybody that's ever got our software will tell you the following. They became better traders, because this was our thoughts to give you that process of the trade. And it's right here in our software. Now, I wouldn't trade without it, and nobody that's ever listened to me or traded with me would do it either. Our success is based on time of day, time of week, time of month, key numbers. I gave it to you when I was talking about the S&P, okay? And directional indicators to get you on the right side of the market. It helps with all of those. Now, the whole program we built is a roadmap package. It's more about not software, but the strategies that you need. Is a whole course in all the different things a trader needs. Okay? It includes how to look at the market. That's the 7 sisters, and what to do with each of those. It covers entries, exits, targets, things to look for on news, things to do after earnings. It's got it all. Now, this is the module that I tell everybody you spend your first 30 minutes going through, which is the 67% accuracy module. That's where the patterns, and gives you the ins and outs of those patterns. You learn those 4 patterns, you'll be fine. Now, trade management is a part of trading. Wow, this Oracle just keeps going up. I love it. Okay. Covers profit, risk, and trade management. Pretty neat stuff. Now, you get access to our complete roadmap package. It took us about 25 years to put this thing together. And it's really so streamlined now with the technology. Really sort of neat. Now, we have support. And here's the thing that got me with software. You get software, then you lay there, you never put it on your computer. That's not the way we do it. You get your passcode, one of our guys takes over your computer, and he asks you how you want to trade, and we got different packages and profiles. We load that for you. It takes about 10 minutes, okay? 10 minutes. Our customer service group, we spent a lot of money over the years to make sure you didn't have the hassles I've had with customer service, okay? Pretty neat stuff, really. All those people there know their stuff. They're all traders. The roadmap software, the roadmap trader course, the accuracy module, the management course, the whole trading suite where we have different things like our horse race. The horse race is something that alone is worth a fortune learning that style of trading. And then, of course, full technical support in our software. Our package is 1-year license. And we also have another secret weapon. It's a 24-hour trade room. You have access to experienced traders day and night. And these people are all tested and trade worthy. They got good stuff to offer. Every one of them. Different focuses and things to do. Our global trade room, like I said, is open 24 hours. It starts on Sunday night, goes through the week. You find, execute orders. We have moderated training each and every trade day. These are live training things going on in opportunities in stock, futures, and options. We organize all the data. We hang out at news. We hang out at earnings. We basically hold people's hands during every market condition that you can think of. And our top ideas day in and day out. That's our trade. Trade Zone 1 goes from 8:30 to 10:30 Central Time. Remember that first hour in the morning. Trade Zone 2 is that middle of the day. Trade Zone 3 is closing out the day, wrapping it up. We've been doing this for years, folks. Really pretty unique package. Now, other sessions, sometimes we have pre-market opportunities, especially if you got a big announcement. Night Owl, we plan every night the next day. We have a plan, the numbers, our software, all that stuff, and we constantly train on options. So if you're new to options, this is where you can learn options the right way. Now, we have 2 options you can get involved today with the software. Option 1, this is 1-year access, $497, and we give a money back guarantee. If we don't do what we say, we'll give you your money back. Frankly, I don't think anybody, I can't remember the last person that took us up on that deal, but there you have it. That removes it. Get involved. Now that's option 1. For those that understand the power of what I just talked about, we have a 2-year option. The 2-year option includes the global trade room and 2 years of our roadmap, and that's $997. They got it limited. They always limit it to 50 because that's how we can process 50 people through the pipeline. Option 1, $497. Option 2, $997. And it's pretty straightforward. Now, Bill here, let's talk about my accuracy. Yeah, you'll get used to it. And but that's what I focused on for 40-something years. And I take pride in the fact that I'm going to get you on the right side of the market and teach you how to be on the right side. Pretty neat thing to put together. Now, Alan here is a long-term client of ours, very excellent trader. Alan okay, really likes to bounce off what he's thinking against what we're thinking, and done quite well over the years in South Florida. Now, package 1, option 1, 1 year, $497. Option 2, $997, 2 years, roadmap plus trade room. So, folks, that's it. And that Oracle's still popping. All right. Okay. Let me answer any questions. And if somebody could read me the questions, I'll be glad to answer. And I don't really see where the questions pop up. I don't see any. See me talking.
Are you looking for questions?
Yeah, is there any questions? I can't see any on my end. Can you read the questions?
I'd be happy to. I'm here to help.
Yeah.
So, well, we don't have a lot of them though. If you have some questions for Tom, go ahead and send them through. Sammy said, "I like Tom's optimism," and I said, "He reminds me a lot of Zig Ziglar." Maybe it's kind of the accent or the optimism, but you do. So, and I mean that as a compliment.
Well, let me tell you something, and I just want to address that. If somebody's negative, I run, because I've never seen anybody that's negative make money in the market. And you got to be, what I mean, negative attitude. Hey, I got to be around positive people, or I don't function well. Yeah, we got scanners for all different types. We got, I'll just, over here on the right, I'll read. There's so many scanners. It's something else. We got the DTI code. We got a 5-star. We didn't show you that. It goes through and shows you all the different things. Okay. It's pretty neat.
One of the questions we did have is, I would like to ask Tom if he has ever used volume profile and fixed range, and would you recommend it?
Yeah, I have used volume profile, and what we did, we came up with our own take on it over the years. But it's a very good. I think it's very, I think it's something that Stoudemire was the one that came up with it back on the early exchange days. It was for bonds, and 30-minute blocks. See, I use 30-minute charts, but volume profile is something everybody probably ought to learn. And I know it didn't hurt me to learn it.
That's the questions we've got, really.
Okay. All right. Well, what I would tell you, get the roadmap, try it, and if you don't like it, we'll, like I said, we'll refund the money. But it's just, I think once you get used to it and you start seeing the track record, I was hoping Adam would show some of the trades we're already done this week. Thought we had a slide on that, but give you an example. We were in Mara. I think we had a 70% return on it. I was in the SPY. We had a 100% return on that one. I got the Oracle trade working right now, and I'm up a little bit on that one. It's just developing. But we have what I call a lot of scholarships created by using this software. I won't trade without it. It really is everything. And I wish that I had a better, that's XLU. We got a white paper there that will help you. That's going to 70. That'll help people. But there's so much that you can get overwhelmed with. What we try to do is just keep it simple. Just simple.
All right. Sammy wants to know if you think Bitcoin will take over gold.
Yeah, I don't know. Gold's been around for thousands of years. Bitcoin, it's the shiny object right now, Tammy. Let's see how they develop it over the next couple of years. But you will see things like you're seeing where people are taking salaries in Bitcoin, and professional athletes are starting to take bonuses and stuff. I think we hadn't seen the upside, or we hadn't seen the top in it. More to go.
Okay. All right. So that's dtitrader.com/roadmap.
Yeah, and one of the things that if you do get the roadmap, this is going to be sort of neat. Mentioned Bitcoin. Coinbase is going to be going public, and what we plan to do is have a live trading demonstration to a Coinbase stock when it goes public, and that's a Bitcoin. I have a Coinbase account. I don't know if you're familiar with it, but the whole point is, if you do sign up today, you'll be invited to that. And if you ever traded live with me, I wish I had some people here would tell you. I think you'd learn a lot, and then you walk away better. Now, I told you when we started that I thought the market was trying to push higher. Once it takes out, S&P takes above 69 is bullish. If it'll take out about 73 and take out the high after that, then you're going to see it go higher. Silver went into a buy today for those that trade silver. And Oracle. Don't forget my Oracle play. There you go.
Okay. All right. Thanks, Tom. I appreciate it.
Great seeing you after all these years, and I enjoyed you and your customers. Thank you.
All right. Thanks, Tom. Okay. Yeah. All right. Very good there. Let me go ahead and switch back here real quick. We do have a little bit of time, so I'm going to take advantage of it. Let me go ahead. One of the things I kind of would like to do is kind of maybe go back into MetaStock and show you maybe just a tool that you are not aware of or maybe haven't taken advantage. And this is one of the tools I call a hidden gem of MetaStock. So let me go ahead and open up MetaStock real quick since we've got maybe 10 minutes. And I'm going to basically show you a system that's built in. One of the things, this is actually one of the hidden gems, but I don't usually have a lot of time to talk about it, but I call it a hidden gem in MetaStock. A lot of people like to look for stocks that maybe break out of support or resistance area or a trend line. And as part of the hundreds of indicators that are built into MetaStock, we actually do have what we call the dynamic trading tools. And they all start with DT. I'm just going to find them in our indicator quick list right here. So you see DT resistance, trend line up, trend line down, etc. These are all automatic, and they'll automatically kind of draw support and resistance levels on a chart for you. And one of the things that I'm going to actually, I had a programmer include a template that actually automatically includes a template that you can apply to a chart. They'll automatically draw these for you. So I'm going to go ahead and do that. Let me go ahead and click on View Expert Commentary right here. I'm going to right click. I'm going to click on Apply Template. And what I'm going to do, the name of the template, I believe we just called it Dynamic Trading Tools. And you'll find it right here in your list. We started including this default template. I think it was in MetaStock 16. It might have been 15, but as long as you've got like one of the later versions of MetaStock, this will just automatically be included. And all I did as part of this template was just put together all of these really, really cool drawing tools. So if we look at this on GE, you're going to see some lines that are automatically drawn on here. You'll see kind of this upward trend line. You'll see kind of this thin dotted line that's a bit of it's a minor resistance area. You'll see this long-term trend line that's kind of pointing up here. You'll almost be able to see it because it's a little bit thin right here, but I'm just going to make it quite a bit thicker. And you can see it right here on the chart here now. It's a minor support resistant level. This is a major support level. Now, the thing I like about this is these are automatically generated, so there's no objectivity to it. And obviously, like a lot of people like to trade breakouts of either trend lines or triangles and things like that. And so, of course, not only do you get the template that'll put everything together for you, but you'll also be able to do a scan for the breakouts. So obviously, if I was watching this and I saw this big, huge breakout of resistance right here, this might be a really good time to go in and buy GE. In fact, that might be a signal that you wanted. You have this pretty good resistance area. It gaps up on its way through and then just rockets up. But what if I wanted to be able to find this stock right here? Well, we do have a scan for that. So all I have to do is I'm going to come in here. I'm going to come into the scanner, and the matching scans are all going to be called DT. So right here you've got DT. And here they're labeled: support and resistance long-term, support and resistance short-term, trendline breakouts long-term, trendline breakout short-term. Let's just do the long-term breakout. This, and I'm going to just do it as we've been doing on the S&P 500. So let me go ahead and move top drag trend down. I only really care about this one. And let's go ahead and run the scan. Okay, so now it's going to go through that S&P 500. Again, it's going to reject a huge number, not as big, and I'll show you why. What this is going to look to do is actually kind of show you how long it's been since something has broken through that longer term support and resistance level. So we'll go ahead and show that as soon as it comes through. Okay, and it's about done. Okay, I'm just checking the time. We do have plenty of time to kind of show this. So here we go. What we've got here is this: the scan that we ran was the support and resistance long term. So it's looking for long-term support and resistance. I've illustrated the long-term resistance right here with these bigger lines. And what we've got here is we've got the close price, 3M. We've got the company name, the close price. This 21 means it broke up above long-term resistance 21 bars ago. So since I'm running a daily scan, this 21 days ago it broke up. The volume on it was about, it'll show you the up volume was about 16%, and that was symbol MMM. Okay, this is just one of those things that I love about MetaStock, but I can actually go in here. I can sort based on the breakup column or the breakdown column, and I can very, very easily see if I'm looking for stuff that has broken out recently. I'm just going to look for a smaller number. It looks like Facebook broke above a longer term resistance level. It just barely did it 1 bar ago. We've also got Visa. Let's take a look at Visa. I'm going to go ahead and open this up on a chart. We'll take a look at kind of how this looks. Right here, we've got the chart of Visa. I'm going to go ahead and apply that template. This doesn't look good. I'd probably look at Facebook instead, but I'm going to go ahead and take a look at it anyway. Let's take a look at dynamic trading tools, apply the template, and there you go. So right here, you can see where it's finding that longer term resistance area. Here you can see that yesterday it broke up. This has been holding. It stayed above that today, but that's how you can find signals that are breaking out of congestion areas, like breaking up through above support, down through resistance. Very, very cool part of MetaStock, and one of those things I can show you when we have just a few minutes to talk about something. Again, you'll be able to see breakouts above support, resistance, through trend lines that go up and trend lines that go down, and any of those levels that are actually kind of found will be automatically drawn for you. So this is actually something that they developed quite some time ago. But I just put together the templates because it's one of those things that I like to show in MetaStock. And now we include all the templates so that you can kind of go in and see exactly what's going on. With this one, I would say if I was like looking at this one, I'd probably look at Facebook. And the reason is this was a pretty good long-term resistance level, but we still have a little bit of upper head resistance where it turned around right here. So but let's just go ahead and look at Facebook real quick. So I'll go with FB.O. Okay. And there you go. Here, this one looks a lot better to me. This one also broke out yesterday. If we're looking right here, this is where it found that longer term resistance level. Here's where the breakout occurred on a big day. It's still up above that level. That might be something that you want to take a look at. If I was looking to play this, which I'm not, the first thing I'd want to do is figure out where my stop is. And so if I was looking, I'd probably put it down below this area. If this area falls again, well, then it's no longer support. It's going to act as resistance again. So it's really pretty cool scan. There is a matching commentary as well. I'll just go to View, Expert Commentary. Oh, I don't have the expert attached. So I'll do that real quick. DT, support and resistance long-term. Go ahead and click on close. And we'll just go back a couple of days. You can see where it says that there's a broke above the upward resistance. This is a bullish sign. The previous resistance of 299, blah, 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 kind of gives you some more detail. Again, the things I love about MetaStock, the reason it's been voted #1 in its price category for 28 years in a row is it helps you find stuff, it helps you understand it, and it does a really, really good job of doing stuff like that. So there you go. There you go. There's a little bit of one of my hidden gems, so to speak. Let me go ahead and go back into the presentation here.
Hey, Jeff.
No! You
Sorry,
need to stop doing that.
There.
Yeah, but that's okay. What's up?
You were probably going to cover this, but I'm getting some questions on how people can get to the page for the Prime conference for day 4, the extra conference. I was wondering if you could spend a minute or two to show people how to get to that page.
Oh, absolutely. We can do that. Let's see. Let me go to a slide that kind of talks about that. So we do have the Prime conference coming up. We're going to have Steve Bigelow. Thank you for your interest, too. Appreciate it. We do have Steve Bigelow, Jeff Tompkins, and Vince Vora all presenting premium conferences. One is top-ranked candlestick signals. Jeff Tompkins is teaching his high probability trade signals, and Vince Vora will be doing trade lines and technical formations. All 3 classes are available. The cost is only $450. If you saw Steve Bigelow speak yesterday, or Vince Vora speak today, or Jeff Tompkins tomorrow, these are really, really good presenters. They're very thorough. They know what they're talking about. And I absolutely love how well they go through things. So our conference special is $450. We'll get you that. There's a couple of different ways you can sign up for that. Just give us a call. The phone number is 800-882-3040. You can visit us online. Our sales guys can kind of help you answer any questions you've got about it. MetaStock.com/sales chat will get you there, or you can go to metastock.com/traders/conference-prime, and I'll go ahead and type that in the chat in just a second here as well. So those are the 3 ways that you can get. Thank you for that question. Neil H asked a question in chat: is there an indicator or strategy development and backtest language like is available in TradeStation's easy language? So Neil, TradeStation does have, MetaStock does have a very good formula language. I would say, to kind of compare and contrast, easy language was based on I think an old version of Pascal, if my memory serves me right. So it might be called easy language, but it's rather complicated to kind of work with, in my opinion. But I'm not a programmer. We designed our programming language for non-programmers. So if you've had any experience with Excel, all of the indicators are available in MetaStock. You can actually reference them in the language. I've had a lot of people that are very, very good programmers that say they like to code. I was talking to a guy maybe like 6 months ago. He was just like, I can code in easy language. A lot of times I like to just open up my MetaStock program and just hammer out some code because it's so much easier and I don't have to put as lot of thought into it. It's just way easier to put together. So when I'm kind of feeling a little bit like I want to joke around a little bit, I call it easier language, but that's not the name of it. We just call it, we don't have a really fancy marketing term for it. It is an easy language to write for, and it's really, really good. Also, one of the things that I like about our system tester, without getting too far off the path, is with a lot of system testers I've seen out there, you can create a trading idea and you can test it against one stock, and you can test that same stock against many trading ideas and see how well it works compared to your other trading ideas. But if you're watching Kelly's demo today, you actually, with MetaStock, you can take a single system test or multiple system tests, and you can test them against a whole universe of stocks. And for me, the amount of information that you get from that is way more valuable, because instead of just seeing how it performed on like IBM, for example, you can see how well it performed over a broad variety of securities. Like you could do the whole market if you want. It allows you to pick and choose and say, well, okay, this doesn't work with IBM as well, but it really works well with Apple. So it allows you to kind of match up characteristics and the personality of the stock you want. And it's just one of those things that I think offer a lot more value to it. And so that's a really good question. I appreciate it, Neil. And hopefully I answered that well. One of the things I would say is again, and it's kind of sounding like a broken record, 28 years in a row, it's been rated #1 in its price category. And testing is certainly part of that. The ability to test trading ideas, the easily ability to scan markets, those type of things really feed into that. I wouldn't trade without MetaStock, and it's a great software program. So William asks, is the scan finding stocks that break out of support and resistance long-term today? Yeah, I just ran it. So that number that we were showing, just have it up. I do still have it up. This basically, anything that has a 0 basically means it broke out today. Visa, we looked at it, broke out yesterday. Facebook broke out yesterday. So you're running the scan today. It will actually list everything that broke up. And if we go all the way to the top of this, it's showing stuff that broke up over a year ago. So basically, you're probably not going to be interested in stuff that broke out a year ago, but you can easily see stuff that broke out yesterday or the day before within a few days to make sure that it's staying above that level. That's another good question, William. I'd really appreciate it. So the special, excuse me, I'm gonna need to do this. Don't worry. I just a little bit of a cough. I'm sure it's not the Rona. I've already got one of the shots. The special that we're going to be doing there is we're going to give you an extended trial. Okay, so if you pay for a month of MetaStock, you can either do our real-time version or our end-of-day version. And basically, if you pay for a month, we'll pay for the second and the third month for free. Okay, we'll also include access to our Unleash the Power of MetaStock courses. We'll have somebody help you install the program, make sure everything's running. We have a white glove installation support, and I would encourage you to try it. The biggest thing, like let's say you do the end of day version, you'll pay $69 for 3 months access. That's a little bit about over maybe $23 a month, a little bit more than that. That's all you pay for 3 months. If it's something that helps you, it's going to continue to pay for itself over and over and over again. You're going to have access to our wonderful support team here in Utah that can answer any questions you have. I feel like I'm going a little bit overboard, but I'd encourage you to try it. I use it every day. And every trade I make is usually something that I've scanned out of MetaStock. So you can sign up at the link right here. You can call us at 800-882-3040 to sign up. And you can visit with our sales chat at metastock.com/sales chat. So there you go. Alicia says, do you have, and I think I am running close to time, but I'm doing okay. Do you have training videos and manuals for the coding languages that is written? Yes, we do, actually. And I'll show you how to get there just because we have a minute. I'm going to go to metastock.com just metastock.com. I'm going to go ahead and click on the support section right here. I'm going to go to resources. I believe it's right here on the resources tab. There's a collection of custom formulas you can go through. There's a work request here. I actually also have a formula primer, which is a PDF workbook that you can click in and go through. It's really good. There's actually 2 versions of it if you click into it. Formula primer version 1, formula primer version 2. Read both of them. William put these together and he did a great job with them. If you want more tutorials, there's all kinds of videos and stuff like that that are available. So one of the things that we've really spent a lot of time on over the last decade or so is providing good resources, because the tools that we have are so good. One of the things I think we've done is actually provided a lot of resources that help you do exactly what you want in there. So Alicia, thank you for that question. Thanks for your interest in MetaStock. I appreciate it. William says, I have an easy language strategy that I wrote that draws 99 support and resistance lines on a chart. Is there a limit on how many lines can be drawn on a chart in MetaStock? I don't think so, William. I'm not sure about that offhand. If there is a limit, it's a really big limit. What you might want to do is get in touch with us. So if you go to metastock.com/sales chat, they can go in and just make sure that doesn't exist. It's not a question that I know off the top of my head. Maybe I need 28 years with MetaStock before I know that for sure. So in any case, William, thank you for the question. I'm sorry. I do want to get you a precise answer. So get in touch with us and we'll make sure. And thank you again for it. Let's check YouTube real quick. Okay, we're caught up with all of the questions. So time is going great. Again, for that, metastock.com/trader summit 3-for-1. Appreciate everybody for the support you've done over the years. These events are awesome. All of the people that come in, spend time with us, talk to us. And we wouldn't be able to attract 23, 24 people without the support of all of you guys coming and spending time watching them and interacting with them. And so I would just want to say thank you. I appreciate it. Our next guest is Todd Horwitz, who is another awesome presenter, and he's been trading for nearly 40 years. He started out on the CBOE, the Chicago Board of Options Exchange, and we're going to go ahead and bring him on here. How are you doing today, Todd?
There we go. I'm unmuted now. I'm great. Great to be here, Jeffrey. How are you?
Good. There's always just a little bit of a when I say, "Hey, how you doing?" and there's a little bit of a pause. There's always a like, "Uh-oh, am I going to have to make a phone call?" But I'm glad we got you.
I thought you'd unmute me, but I did. I remembered how to do it. I did it all by my lonesome. So it's all good.
Yeah. Okay, good. That's great. I'm going to go ahead and make you the organizer. Do you prefer Todd or do you prefer Bubba?
Anything you'd like to is okay with me. Which screen am I sharing right now? That's what I want to know.
We're seeing a big ol' bunch of charts.
All right, so I gotta move. I gotta switch screen. How do I move this? I gotta.
So under the screen where it says, if you see sharing, you'll see show screen. There's a little bit of a down arrow, and that'll list all the screens that you have available for sharing.
All right, well, I gotta find it. Screen.
Yeah. So do you?
No.
Okay. So do you see where it's on the go-to webinar?
Wait, screen.
Yeah, you found it.
All right. So where am I? But I can't see where my different screens are at because I gotta.
If you highlight it, it'll put a big box around it.
Okay.
So we're looking at the same one.
Yeah. Right. You know what?
Okay.
I can solve that easily because I'll just move over to here. Okay. And it'll.
All right.
I'll make it easy. How's that? And I just gotta swap this out. Hold on 1 second. And
I love your pragmatic approach to fixing that. It worked.
How's that? So now you can see.
Yeah,
now you can see the screen that you're supposed to see. And let's see. Do I want people to look at me and see my webcam? Sure.
If you want to.
Sure. There I am. But you'll be looking at the side of my head, though, unfortunately, because I got to look to the right. But what's up, everybody? Great to be here, and always a pleasure to be part of the MetaStock event because it is a great event, and they got a great product. So always good to be here, and I appreciate it.
All right, I'm going to get out of the way. We see you, we hear you, and we see the proper screen. So it's your turn.
Perfect. All right. Well, anyways, what's up, everybody? It's always great to share some time and share what we have, and I have been trading this is my 43rd year in the industry, starting as a floor trader and going forward. But today, I trade everything just to give full disclosure, and I trade everything every day. But we do have what I like is a portfolio model, and it's the futures portfolio using the minis and micros. I believe that is, we call it the next big thing because we're using a trend trading model that works extremely well, and I will share it with you as we go now. But again, this is all about trend and mechanical trading, and this really comes more down to being able to follow rules and follow what you're supposed to be doing versus trying to outguess, outsmart, or outthink markets. But the first thing we always have to do in this industry is share our disclaimer, okay, which is there's no guarantees. And, if I tell you you're going to make money, which I won't tell you, actually, I will show you what we've done in the past. And I will tell you what we expect future, but I won't make any promises because I think that is a little bit irresponsible because nobody knows what tomorrow will bring. But again, I think it's important to understand. And of course, I did say I've been doing this for 43 years. I'm still a member of the Mercantile Exchange or the Board of Trade, actually. I mean, but it's the same. They're one and the same now, but I have been a member of all three before they became one. And I was a floor trader for over 20 years. And as the markets evolved, we had to go to the screens. And I don't know if you know about floor trading, okay, but there's a huge difference between screen trading or retail trading, which is what we're all doing now, and floor trading. And one of the biggest things to understand about that is that as a floor trader, you are trading strictly the bid offer spread, okay, and trying to capture an edge, versus when you are trading on a screen, you're looking to find the best methods that allow you to make the most amount of money at the highest probability. So that's what we're doing now. And of course, I regularly contribute to all the major networks, as a business, as a commentator on markets in general. But the biggest thing I like to always brag about is every trade that leaves my office, I'm in it. Okay. So I don't share trades, or I don't give out trades that I am not trading myself. And I think that's important in this industry because, of course, if I'm not willing to put my money at risk, why would I want to put your money at risk? So anyways, today we're going to talk about what our objectives are, managed futures. It's the math, our portfolios, and how you can take advantage. And of course, I answer all your questions. Now here I'm on a little bit limited time schedule, but I will get through and you can ask me anything you want. I will be happy to answer. But are you tired of false hope, false promises, and real emotions? And again, to me, I'm always tired. So what I always start out with is I'm just going to show you, these are the portfolios you have a chance to look at today. And these are the returns and the dates that they started. And what those big numbers mean, 45,000, is we're using 3 times. We want you to be able to have 3 times your margin in each account. So it's 15,000 actual cash usage. 3 times that makes it 45. And that's how the portfolios are named. If you divide by 3, that's the actual money you're using at the time. But having 3 times leverage or 3 times margin allows you to withstand, which is the inevitable. Okay. Now, again, anybody who tells you that this does not happen is a liar. Okay. Here's the bottom line. You're going to have drawdowns. Okay. You cannot avoid drawdowns in this business. I've made a lot of money in my years of trading. I've done very well. But there's been periods of drawdown. And if you don't think that's going to happen, you don't belong trading. I'll be straight and right up front with you. Okay. Drawdowns are a part of the industry. They're a part of the business. It is impossible to think that you cannot or get through any period of time without ever having a drawdown. It happens. Okay. Which is why the leverage and the margin is so important, because you have to be able to exist and trade no matter what, and not let the emotion of the money get you if you understand the program that you're dealing with. Okay. So again, drawdowns are a part of it, but we're trend followers. Okay. Now, if you've ever heard of the Turtles, okay, Richard Dennis is a friend of mine. Richard Dennis and I traded together in the 80s. And he proved a very important point, though. And first of all, a good trend following system will keep you in the market no matter what you think. Okay. And that's where many of us get into trouble, is we think too much. And many of us think we know more than the market. And again, that's always a mistake. But what we tie into, and I think we've actually developed a better method than the Turtles, okay, is we've come up with our own proprietary algorithm, which, again, it gives us the trend of the market without emotion, without opinion. It's based on things that I teach, okay, but it does it with no opinion and no emotion. And again, as much as all of us will say to ourselves that we don't have an opinion, we always, somewhere in the back of our mind, have an opinion of what the market should be doing. And again, even today, for example, part of our position is that we're very long the equities right now and have been for an extended period of time. Now, personally, I think the markets are overvalued, but I am never going to fight the algorithm. I'm never going to fight the overall trend of the market, because that is a losing proposition. Okay, trying to fight the Fed, trying to fight the tape, as they call it. It's a losing proposition, but we do have a great algorithm that makes the decisions. Now, one thing you will find out is we do not trade during the trading day. Okay, all of our trades come out overnight. Okay, and they are sent to you very early. Now, obviously, some of the futures markets are open almost 24 hours, but you don't have to make the trades until you get up. You don't have to get up early to get there, because we're not looking for 1 or 2 ticks. We are here to hit home runs. Every trade, when we put one on, is designed to be what we call a mega trade. Okay, now they're not always mega trades, but of course we've done extremely well, as you saw by the results. But mechanical trading, which is what we're doing, and the major reason traders lose money in the long run is because they miss trades, let losses run in the trades they're in, and take profits far too early. Sound familiar? Okay. My method is none of the three, and therefore our odds of winning are greatly enhanced and proven by real-time performance. We cannot miss a major move in any market. Okay. We do not let losses run. We always let profits run. That is because the algorithm is designed to do exactly those 3 things. And again, what I'm talking about is we will hold a position until the trend changes. We are not interested in what we think or what the news is, because you'll see if you trade the news, you lose. It's an automatic, because news is worthless, because by the time you get it, it's already gone. Okay. Now, why micro mini futures? And the first thing is micro minis were introduced to the futures market in 2019. Okay. They were the biggest launch in the history of the Chicago Mercantile Exchange. Now, I think they go back over 150 years in business. This was their biggest launch of all time. Okay. Why? Because it allowed and brought people into the futures market that used to be afraid of futures because of the size of the contract, because of the reduced commissions. They can now bring you and allow you to trade the futures market. And I believe that the futures market is going to be much more equivalent to the options market over time, because of the entry, the barrier to entry is not there anymore, because the size of the account is not, that doesn't have to be that big. So you've got great capital efficiency. You can diversify asset classes, the fees and commissions. And one of the biggest things, now this does not affect our models because we don't day trade, but if you are day trading, you don't have the FINRA day trading rules, which is obviously a pain in the ass. Sorry, but that, if you've ever gotten trapped with the FINRA stuff, you get stuck holding a position you didn't want to hold, but you can't get out because you've made too many trades for the week. Okay, so we do call this the next big thing. Okay, because futures are, they're taxed at a better rate than options or stocks and equities. So there's a lot of advantages that you can create for yourself using the futures market. When you think about it, isn't it better to trade something that is straight price discovery bid offer versus having to deal with the other factors like implied volatility and other things that go on in markets? Okay. Now, we all hear about the secrets, right? There's a secret, this secret. There is no secrets in this industry. The secret is consistency. Because the secret is discipline. The secret is taking all the trades that you're supposed to take based on the model that you're using and keeping your opinion out. Okay, that's the secret. Right? There's no special stuff here. There's no special sauce, magic. Okay, it's what it is. Markets are markets. They're going to trade. Okay, understanding how to trade them is the secret. Understanding how to be disciplined and patient is the key. But those who say that there's these magic things that are automatic winners are not giving you this a straight story. It's not square. Okay, but I will share the secret of success with you as we go through this presentation. Okay, now the first thing in any type of trading is the logic of probability. Okay, now when you talk probability, everything has a probability model. We've all had insurance, right? What do you think they're doing? They're using an actuarial table to give you a probability model, okay, on what your risk is to the insurance company. Well, we do the same thing in our trading. We are using straight probability because trading done properly, okay, is a game. It is you can create your own mathematical edge in the industry. Okay, if you're a game player, chess, bridge, backgammon, gin, the better player is going to win, just as the better trader or the better system follower is going to win. Okay, just a couple. This happens to be from a professor at Cornell. Yes, Todd, very impressive market price analysis. Yours is the best in the world. Most consistent methodology, most rigorous. Drop the emotions. Don't listen to the pundits who comment on casually based on reading the news. And again, this is a fact. This is what I want. Whether you become a member or not, and it was interesting. I heard Tom Busby say he wants to be around happy people. We want happy members as well. Okay, I mean, again, life is no fun when you're around misery. You want to be around happy people that get it and understand it. Okay, now the market, it may not always be rational, but it is always right. Okay, there's many of us who think that we're smarter or we know more and say the market is wrong. Well, guess what? You cannot argue with price action. Okay, if a trade goes against you, exit the position because you're wrong. You got to learn in this industry. You take your losses when they come. Okay, every trade is not going to be a winner. So if you first recognize to take your losses, okay, you are creating the next level for yourself. Okay, and of course we talk a lot about rules. Okay, why? Because as a professional trader, everything I do is based on the rules. We want you to be like chess players. Okay, chess is the one game that there is no luck involved. Okay, you are thinking 2 and 3 and 4 and 5 and 10 moves ahead of what's going to happen. The rules will help you think just like that. Okay, you have to make sure, again, if you can't follow rules, we're not a good fit. It doesn't work well because, again, everything we do is rule-based, determined by, because that's what's successful. Nothing else is going to be successful. And the rules that you've got to be able to follow in our methods to win in algorithmic mechanical trading, you must have no opinion. Okay, if you have an opinion, you will lose money. Okay, if you violate rule number 1, okay, you're going to lose money. A trend is the basis of all profit. If you do not understand that, okay, you should not be trading. And basically, what that's saying to you is you want to be trading with the path of least resistance. If you pay attention to news, you will lose money. If for 1 minute you think you know more than the market, price is too low, price is too high, the market will take your money. It will always punish those with such hubris. Okay, we never sell at the top, nor do we buy bottoms. Okay, that's, as we say, that's a fool's game, trying to sell the top or buy the bottom. Nobody knows where those are at. Again, all we can use is probability to make those determinations of tops and bottoms. But we're only going to get, as we like to call it, the meat of moves. Okay, so when a market is trending, we're going to catch a big percentage of that move. And I know I'd heard, as I was listening to Tom, that they turned bullish silver today. Well, we're still actually short silver and gold and have been so for a long time. Since just after they made the highs, we've been short. Now, again, I'm sure we'll reverse shortly here. But right now we are still short. And again, I'm not going to fight that. That's what the market tells me to do. That's what I'm going to do. If the market is going higher and you're short, you're wrong. Okay. If the market is going lower and you're long, you're wrong. Okay? Again, there's no discretion here. You're either right or you're wrong. Okay. The objective of mathematical trading is to mirror the market. In other words, again, going with the path of least resistance. Okay. And professional traders understand the importance of grabbing an edge in the market. Okay. Because that's, at the end of the day, that's all we can do is to get the edge and then look for the probabilities to play properly. And again, they will over time. They don't on every trade. And here's one of our members who actually states those facts, right? I've been following Bubba for approximately a year and a half. Since I began following him, my account has steadily gone up greater than 100% in the first year. This isn't to say there won't be periods of pullbacks or drawdowns. There will be, and they are inevitable in any successful trading system. They will be stressful when they occur. Hold your positions, follow new trades when provided you don't overthink the process or the value, whatever you are hearing or think you are seeing in the charts. If you follow the rules and stay the course, your rising account net liquidity will be your reward. The few times I did stray from the program, I cost myself money, but reinforced the need to follow the program without question. The biggest temptation will be to book profits on position going your way into support and resistance. I urge you to look at the long positions in the NASDAQ of October 2019 and gold in June of 2019. There are many more. Both approached resistance, and the temptation would be to take the position off and book profits. Both blew through. Resistance went through to book huge profits. Now, what are our objectives? To make money. I mean, again, you may like hearing me speak, you may not, but you're here to make money. Okay. We always are working on keeping the variance small. Okay. We understand. Listen, again, you do this for 43 years. You've had some pretty rotten days over the 43 years. Our portfolios are balanced. Okay. So we always have products that we could have some trending, some not trending. Okay. And again, we'd like to keep the drawdown small. Now, again, there's obviously no control over that, but that's the objective. Okay. That's what we're focused on. But if you've ever heard of, Jesse Livermore, we talk about managed futures with algorithm trading, but Jesse, successful traders follow the line of least resistance. Follow the trend because the trend is your friend. Now, I'm sure you've all heard that before. I know it's hard to believe when markets are doing what they do sometimes, but again, the trend is where the money gets drawn to. And that's what you want to remember. Now, I don't know if you've ever heard the term family office, but we like to create what we call our own family office. Okay. Obviously, true family offices are for the very wealthy who get special deals, they get special financing. There's all kinds of things that go on. And again, God bless, that's good for them. But what does that do with the average guy? And we're the average guy. And we want to make sure that everybody has an opportunity to be extremely successful in our business. Okay. So we have a great chat room with members that help other members, and you will never see any negative comments in there because everybody wants to be positive, because we all know and have been, everybody's in varied states of where they've been or how long they've been around. So they all go through different periods, but everybody understands exactly what we do go through. Okay. And, we want to make that environment because, again, everyone wants to help everybody else because we're all here for the same reason. The key to trading success is emotional discipline. If intelligence were the key, there would be a lot more people making money trading. Think about it. Okay. If it was just intelligence, there'd be a lot of people making money, but it takes some heart, right? Unlike Gonzaga last night, it takes some heart, like Baylor. But, look, trend trading is very simple. Price is everything. It doesn't matter what the commodity stock that you're looking at. Do you realize all markets are the same? All charts are the same. All patterns must repeat themselves over time. Okay. Again, that's a fact. That's not an opinion. Okay. Ignore the news. The news will put you in jail. Okay. That's something dinging in my chair. Maybe like that. Buy when something breaks out of range, and you sell it when the trend changes. Okay. Don't get out before the trend changes, and you got to stick to the system. Okay. And of course, one thing we know about this industry is amateur traders want to be right. Professional traders want to make money. Which one are you? Okay. Do you want to make money? Do you want to be right? Okay. Again, if you're someone who can only be happy if you're picking and making your selections, then you're probably not cut out for us, because again, we are professionals. We are looking to only make money. Now, again, as I say, and I've said a number of times, there's going to be drawdowns. I just want you to be prepared for that. But the secret to successful trading, okay, as I promised I would share with you what it is, okay, is understanding, and whatever method you're using, whether you become a member with me or in your general trading, okay, what you have to understand in the long run is what we call your win rate, okay? Your win rate is the most important thing to understand, because that will guide you to the best trades that you can make, okay? That will help you adjust your positions and understand when the probability is at your highest. Now, our win rate is 66%. We know when to expect a big move in our favor. We also know when to start to expect a potential drawdown. Now, we don't do anything about the drawdown because we cannot prevent it, and we don't know how far it can go. But we do use the percentage when we do go through the drawdown to actually increase the size of our position with monies that we have made in the past, okay? We don't add new money. We use the money that we have earned, okay, to increase the size of our positions. But one thing I will share with you in the world of investing, the world of money, you know what your worst enemy is? Okay? And if you don't, look in the mirror. You might not recognize him or her, but that's who it is, okay? You are your own worst enemy, as I am my own worst enemy. We ourselves are the worst enemy that we have. So make sure that if you can understand your win rate and recognize the enemy, you have now put yourself in a position to be successful, because the keys are consistency, discipline, and patience. Those cannot be bought, okay? It comes from within inside you, okay? And if you take all that information and then you put it into a probability model, which is, again, a game of chance, okay? But again, not all games are games of chance. You know, poker, gin, bridge, backgammon are not games of chance. Those are games of mathematics, as is trading. That's the issue, right? Trading is a game that you can develop the probability and the advantage over the market. And as we said in our rules, the only way that we can really make money is to have an edge on the market. So the edge I had as a floor trader was one edge. The edge I have now is different, but they are both an edge to the average trading person in the world, which makes me a much higher probability person to be successful, which is how I make my living. Okay. What you need is you need a manager. Okay. Now, again, obviously, a manager, you need to be able to manage yourself. But again, it's great to have our models because we tell you the exact trades to make. And you know what's the beautiful thing about our trades is the entry level is unimportant. Okay. The price, we don't care about price because, again, we're not looking for one or two ticks when we make a trade. Okay. Thank you for making the changes to the 72K. You are so successful. You can still take care of the little guy. You're always ahead of the game. I admire that. You are an inspiration to me, an example to follow. Thank you, Jane. Well, thank you, Jane. But here are the ones we're looking at as the smaller portfolios. Now, again, you'll have the access to all of them. And we have portfolios that go from 5,000, okay, all the way up to 350,000. That is your decision. You will get to see them all each and every week, okay, and get to decide where you want to go. Okay? And you're doing the trading. We are making the recommendation. Now, if you're someone who doesn't want to trade it yourself, we don't manage your money, but I can certainly put you in touch. We have a broker that does what we call letter of direction trading, which means that they can trade your account exactly, specifically, our recommendations only, okay? So, but again, we have that available for many, and there's a big portion of our, including me, okay? I have 10 futures portfolios myself. I let CTG Group in Chicago trade 9 of them based on my recommendations. and I have one hybrid that I'm playing with that I trade by myself. Okay. But I let them, even though I know what the trades are long before they're going to put them on, I let them do everything because I think A, it makes sense. B, I don't have to think about it. And it also puts me in line with all of my members so that there isn't any real differences between portfolios. Okay. So these are, but again, you can see here, the 28K is using $9,900 of the margin, basically. Okay. The 17 is using about 5,700 and so on. Okay. And we want it to have the proper amount of leverage, because if you don't, that leads to losses and an emotional drain. But the importance of being able to withstand anything that happens is where it comes down to. And when you get over leveraged, you get in trouble. And if you don't believe me, just ask Bear Stearns, Lehman Brothers, AIG. That was the issue, which is why they were allowed to go bust out, because they were so far over leveraged. Okay. Now here are the results. This year, okay, the 28K is up 12.4%. The 17K is down 4% at this point in time. Again, I'm always going to tell you the facts and the truth, because I send out the results each and every Saturday. Okay, full, real, and where the results come from, they come from the broker. So if you're auto trading, they will match yours. But here's what the portfolios look like. Okay, this is the 28K, which trades 15 different products. Okay, these are all minis or micros. Okay, because there is a difference. There is a mini crude and there's a micro S&P. And so the difference is the size of the contracts, but these are all calculated out to be balanced. And in here we're trading the currencies, we're trading the grain markets, natural gas, okay, gold, silver, and the indices of the S&P, the Dow, Russell, and NASDAQ. So again, what we're doing is we're balancing out, because as you haven't noticed, the Russell's been under pressure. Well, then the others have been going higher, and that'll rotate back and forth. And in fact, as I said, we have certain positions on. You can see what our positions are right here. Okay, these are current positions. Okay, what we have, and as we do, we send out, and these are the dates in which these positions were entered. Okay. Now we went through a rollover, which is an expiration of a futures contract. Okay. Then we might have been in longer than it shows here, but you'll always see the date. And when you see the highlighted, those are what we call mega trades. Okay. And mega trades are just simply trades that have, and in this models that are profitable by more than $500. Okay. So right now I've got 2 open mega trades. We just closed a bunch of them, but again, that was because the trend reversed. This is the 17K, okay, which trades 11 markets. Okay, and basically the 28 has everything that we trade. As you go down, we take out some of the bigger variances, because this all goes back to your capital and how much capital that you want to commit to the program. Okay, because again, I don't want you coming in without 3 times leverage. So I need you to pick the portfolio that works best for you. Okay. But you can see, and every week this is published. Okay. And exact results, no fudging. And of course, the older ones, as they build some time, you will see equity curves that go along with it. Okay. And here's the small 5K. Okay. And this is just another model, and you can see the equity curve, we're well above the mean. And of course, we use that red line to be able to add on to our positions when the time is right. Okay. And, as you look at some of the other potential models that we have, again, I'm just going to show you the extension and how old they go back. Now, the micro minis only go back, a couple of years. That's all they are. But the grandfather or the granddaddy of all these, or the birth of these portfolios, all started with our 350K portfolio. This is, again, a live portfolio, okay, that this started in 2014-ish. Okay. This is a return without pressing or anything else. Its raw profit since 2016 is 514%. Okay. Here is the equity curve, again, that you can continue to see. You'll see this on every single thing that we put out, because we want you to understand the exact results as well. Okay. And this used to actually be the 226, but when they had those big margin hikes, we had to make some adjustments. And of course, we had to make the numbers work correctly so that we made sure we had 3 times the margin. Okay. But these are things that we do and look at, and the different portfolios you can choose from. And here's some questions that somebody had sent me about these models. I have a margin account in IB. Could I trade in this account, or would it be preferable to open a separate account for futures? You can trade in this one account. If you can track it, you can trade it. Okay. I think it's up to you. You know, I prefer separate for myself because I can track the individual by itself and don't get confused. But again, that's up to you. If I open a separate account trading 128K, how much should I fund it with? You fund it with 28K. The name of the portfolio is the amount of dollars you want to fund it with. I have not traded futures before and have no idea how margin works. Margin is a good faith deposit that is determined by the exchange and then the broker. Okay. You'll find that, you know, some of the equity brokers, their commissions are a little bit higher. Not commissions, but their margin are a little bit higher because they're really doing futures as an accommodation, not as a business. But again, it's up to you. I'm in the Central Standard Time Zone and not really a morning person. So when you're with your alerts coming out around 3 or 4 a.m., would I be making trades? I wouldn't be making trades at 8 or 9. Would that be okay? Of course it's okay. Again, we're not concerned. You know, I've got members worldwide. Okay, Japan, China, you know, California, it's another world, you know, Hawaii, South America, Australia. So, you know, not everybody's up at the same time. It doesn't matter. Again, we're not worried about whether you got in a little bit better or a little bit worse. It makes no difference. Okay. If I decide to use CTG to automate trading, what is their cost? Their cost is within reason of what auto trading is. It's under $10. Okay. If I start out on your monthly plan, can I switch to annual later? Of course. Look, I'm very flexible with everybody. Look, I want people to be happy. I want you to be able to make money. I want you to enjoy trading like you've never enjoyed it before. And can you advise them when you think is a preferable time to initiate the positions? The time you initiate the positions, if you become a member today, you put all the positions on tomorrow, unless you don't have an account yet. Okay. Again, we don't know when they're going to change signals. You get in. Worst case scenario, they change the next day. So what? Again, we're not worried about when they're going to change or when they're not going to change. We're not using an opinion. We're using our algorithm, which is a straight mathematical model that accounts for price, volatility, and every other factor that is involved in the market except our opinions. Okay. Every morning at about 3 a.m., go out either the new trades and an update. So you know exactly if we're making a trade, it'll tell you here are the trades we made. And if we're if there is no trade, it'll just say no trades, none. Okay, and that will happen. You get that every day. Okay. Plus you get a text update every day as to what we're doing. Okay, so email and text. Every Saturday morning, you will get a full report. Okay, first of all, we'll give you a little write-up of what happened during the week. You will get the exact results of all the different portfolios. And there's 11 total different portfolios that you can choose from. Okay, and every result is published every Saturday. I mean, there is no negotiation. Of course, we also do training because we know that some people will get confused or not sure. So at least twice a month, we have training sessions, plus we have recordings of old training sessions. And again, it's all our concern is to make sure that we help educate you to make it easy, fun, understandable, and allow you to make money. Again, that's what we're about as a company. And that's what our members are about, because it's about the happy place, Happy Gilmore, the happy place. In the meantime, if you would like to join us and become a member you can. And of course, you get daily texts and updates. You get a weekly portfolio with the profit and losses, training sessions live and recorded, letter of direction trading available. For those who become members today, I have an options course. I did 6 hours, okay, of recordings from beginning to some complex stuff, okay, that will be yours for free. I've written 2 books on options that you can get that will be included in your package if you become a member today. I'm going to take 50 people today. And if you want to try monthly, you can go to bubbatrading.com/micro, okay, for $129 a month. If you want to come for an annual, okay, it's bubbatrading.com/micro year, okay. And again, I will take 50 people that will get the options course. You will get the training. You will also get my Monday night strategy call as part of your membership and any other things that I do. So again, we love happy members. We want to have become a board. And again, it's bubbatrading.com/micro or bubbatrading.com/micro year. And certainly if you have questions for me, fire away. And you can also email me, if you have questions or whatever, but I'm always here. You can trade these in an IRA. Yes, you can. Okay. There's a company called Midland that does handle the IRAs, and it's done. You can do that through CTG or on your own, but yes, IRAs are fine for trading futures. They are acceptable. They are usable. So yes, you can use them. And again, I'm here for questions for you at any time. And you can also email me anytime at bubba@bubbatrading.com. I will be the one answering because I am, when it comes to anything trading, I am the customer service department. And typically, your answers you will get will be within 10 minutes of when you email me. Okay. I respond relatively quickly because I know how important it is. And if you've ever been stuck with a problem and not being able to get a hold of somebody, it's pretty damn frustrating. So, again, it's my objective and my goals to help you navigate and make sure that you're happy with what you have. Do I have scanners for this? Well, we're using our own proprietary algorithm. So we run overnight. I run the program. It spits out trades if there is any, okay, or it says none. And so it's using what the algorithm is using. It's using our proprietary logic going along with things that we know mathematically that are a part of all markets, okay, that happen over and over again. It also accounts for volatility when volatility rises, which is why we do not trade during the trading day itself, because we don't want to be swung or swayed by emotion of the market. And we don't want price to go too far and get whipsawed in a market. So we only make trades after the market closes. There is never a trade issued during the trading day, because again, the worst thing you can do is get caught in an emotional swing, okay, especially if a market is topping or bottoming, and you could be on the right side before the emotional swing came in and be switched to the wrong, and then of course it goes the way it was supposed to go. So again, you have to be very careful about that. Okay, so let's see.
We do have hey Bubba, I have not a lot of questions, but I do have a question from our YouTube audience.
Okay.
Steve wants to know, how much margin do you need to trade stocks?
Stocks is different. If you're trading stocks, okay, you need, depending on the size of your account, you need about 50% per margin. There's different sizes depending on your account, but I do have this same model using options for equities, okay, because again, some people don't like futures, but you cannot really, you don't get the same margin availability in equity markets as you do in the futures markets, okay. And again, the big deal, the other big deal is the FINRA part of it. So you need a rather sizable account to recreate this using equities. But margin is typically around 50%. Okay. But if you have a smaller account, usually margin is higher.
All right, that's the majority of the questions we have from our YouTube audience. I
Okay.
do need you to do me a favor, though, if you would.
Yeah.
Can you pick a number between 1 and 10,682?
Yeah. 5,847.
Okay. All right, that's a next prize winner for our next prize. We do have a
sir,
question.
as always, I appreciate your audience and you, and it's always great to be a part of your group and presentation. And if anybody has any questions, feel free to email me at bob@bubbatrading.com. I'm always available, and always enjoyable to be here. Thank you so much.
Yeah, absolutely. Looks like another question popped in the GoToWebinar if you want to look at it real quick.
Sure.
It was from William.
Australia, can we watch recordings at 2 a.m. here in Brisbane? Yes. You can watch recordings anytime you want. Again, I've got a lot of members in Australia, just for full disclosure, okay? We've got a big following in Australia because, again, you don't have to worry about it, and you can use any of our tools you want. So, yes, you can watch anything. You always get recordings, okay? That's one of the things I do, and you have on-demand access in your membership to all the training recordings you've ever done. So the answer is yes.
Okay, very good. Thank
Okay.
you, Bubba.
Thank you very much. I gave you some time. You can share that great product of MetaStock again.
All right. Yeah, thank you very much. Always good to have you.
Thanks, buddy. Appreciate it.
I'm going to
Thanks,
check
everybody. Nice to be here.
All right. Thank you, Bubba. Okay. All right. Very, very good. Let me go ahead and do this. I'm going to go ahead and share my presentation here. All right. So as we had him do, we went ahead and picked out the next winner of MetaStock, or for MetaStock, that I want to congratulate from the USA, Daisy A. Daisy A, I'm going to reach out to you a little bit. The prize that you won this time is, you might have heard of it in the last couple of days, MetaStock. We're going to give you actually a copy of MetaStock Real Time and MetaStock Zenith. We're going to give you 3 months of that. You will need to pay any exchange fees that you want if you want to get real-time data. Otherwise, everything will be delayed by 15 minutes. It'll give you access to Forex, futures, stocks, stonks, anything pretty much that you want on a delayed basis. It'll give you the full MetaStock program, which you may have heard has been rated #1 in its price category for more than 25 years in a row. It's going to allow you to scan markets, test trading ideas, use the forecaster that Scott talked about yesterday, the commentary, the alerts. In addition to that, since it's a real-time version, you're going to get the MetaStock Zenith program. As that part of that, that's a product that's been developed for over a cost of $1 billion by who used to Refinitiv. They used to be Thomson Reuters. They spent $1 billion. It's probably one of the most robust news services available. It's backed by 2,000 reporters in 200 different news bureaus, covers a couple 100,000 different instruments. It's a great platform. Like I said, they spent $1 billion on it. It's included as part of that subscription. 250 times 3, it's a $750 value. No strings asked. I'll just send you some login details. I'm going to need to collect a full address from you so we can get that set up for you. So you're going to love it. I hope you use it. Make sure to take advantage of it. We'll even have somebody help you install it. So for those of you that want to get MetaStock, if it's your, let me do this real quick. Hi. Okay. So for those of you that want to get MetaStock, you can do that. It's $250 per month. We'll give you 3 months for just the cost of that first month if you want. You can also do an end-of-day version at $69 per month. You can give us a call at 800-882-3040. You can visit us online at metastock.com/sales chat. It's been a long day. And they can help you get set up for that as well. So if you're new to MetaStock, thank you for joining. I really appreciate that. I hope you enjoy it as much as I do. I wouldn't trade without it, honestly. Do want to thank our sponsor, Stocks and Commodities Magazine. They've been supporting us for a decade, and we really appreciate them. You know, they've have over 1 million subscribers. They're quite helpful in terms of helping us get people to the event. And, you know, they've done 17,000 different articles. If you registered for the event today, then you're going to get a free copy. And if you go register, if you're watching on YouTube and you go register for the event, you'll get a free copy of the magazine as well. So also, anybody that buys anything MetaStock today is going to get at least 5 months of Stocks and Commodities, absolutely, as part of it. And if you spend more than $300 at MetaStock today, you get a 2-year subscription for free. So they are great. All of the guys over there, Jason and Ed and all the people we work with are just fantastic and phenomenal. So I'd recommend it. Let's go ahead and see. My questions got a little bit kind of messed up here. Let me, Long says, great presentation, talking to Bubba. Bubba did a great job. He does that. He always does. So in any case, okay. I do want to remind you, we are doing a premium conference tomorrow, Thursday. It's got Steve Bigelow, Jeff Tompkins, and Vince Vora. It's going to be awesome. It's 90 minutes of each of them talking about their patterns. Steve Bigelow, well, they all do. They all do a really, really good job. Last time we did the premium conference, we had Steve and a couple of other presenters talk. It was phenomenal. These guys are going to do a great job. It's $450, so it's about $150 per session, 90 minutes for each session, and it's going to be a good time. I encourage you to join. The feedback that we got from the last conference was just incredible, and I think you'll enjoy it. I hope it's going to be worthwhile for you. To take advantage of that, 1-800-882-3040 or metastock.com/sales chat. So there you go. In any case, let's see. Are we doing okay? I wonder if Ken's going to be okay if we start you early. Ken, I know you're here already. Are you okay if we go just a little bit early for you? He might not be all right with
Absolutely.
that.
Yeah. Absolutely. Yeah, good to be here. I had to unmute myself. So hey, good to see you, Jeff. It's been a while. Yeah.
How are you, Ken?
Hey, doing great. I've been busy. Did 36 trades today. It's been a hectic day.
Woo!
It's a great time to be trading.
I haven't even looked because we've been busy. Obviously, is the market up or down today?
Sideways, a little bit up. So
okay. That's what I decided.
The answer is both, up and down, right? It goes up, then it goes down, then it goes up again. It can be frustrating if you don't have the right patterns. So good time to be trading.
Ken runs Day Trading University, and that's just daytradinguniversity.com, right?
Well, yeah, we morphed into trademastery.com a few years ago. So yeah, it used to be, you can still type in Day Trading University, but as so many people that do swing trading, I also own Swing Trading University, but I said, hey, simplify. So it's trademastery.com.
Trademastery.com.
We're 32,000 customers, yeah.
Great, that's awesome. And I'm sure it's great. Let's go ahead and make you the presenter. I've been working with Ken for a number of years. He has a very, very energetic, let's say, presentation style. And let's go ahead and make you the presenter. I can see all of your charts. So
all right.
That's a good start. You are welcome to start or go as long as you want, or even stop 5 minutes early if you run out of time. So, or if you run out of things to talk about. But we'll plan on having you go till about the top of the hour. Does that sound decent?
That sounds great. Yeah, I'm looking forward to being here. It's really outstanding to see the level of work. You're such a dedicated person, Jeff. You're one of the hardest working guys I know in the biz. So MetaStock's lucky to have you. So great to be here.
My boss is listening, so keep going. No, I'm just kidding. I'll get out of your way. Thanks, Ken. We can see you. We can hear you. The charts look amazing to me.
They are amazing because they are MetaStock. So good to be here. Hey, let me ask you a quick question. I asked you this a year ago. What's the shortcut? I always get them on the job training here. What's a shortcut way to zoom into the chart without clicking on the plus button?
Do you have a wheel mouse?
I sure do.
My favorite way to zoom is you hit Control and scroll. So highlight a chart.
Okay.
and then hold down the control button, like any chart will work. Just make sure one of them's highlighted. And control and scroll.
Okay.
I believe it's control and scroll. Yeah, just it looks like you're right-clicking. Okay. So you hit cancel there.
Okay, well, I'll try it out. So.
Yeah. Just hit control and mouse up. Middle mouse up. I don't think it's working for you.
There we go.
Yes!
Yay! All right.
Now you know my favorite mouse keyboard shortcut. If you control and scroll for everybody that's in the audience.
Control and scroll, it even rhymes. So
there you go.
All right. Well, let's go ahead and get started. It's a real thrill to be here with everybody. We're going to look at how to trade ETF and stock breakouts with MetaStock. I do encourage all of you to ask me lots of questions, and I'll go through and answer questions live on the fly as we go. As always, all information is for educational use only. You may have seen me all over the place. I'm a columnist for stocks and commodities. I only got an honorable mention this year. I got first place a couple of years ago. So for my articles, you may have seen me speak at the Money Show events, featured in Market Watch. I'm a guy with tax return proof. I really trade. How many of you think it's important to learn from people with P&L or tax return proof they really trade? Because a lot of people in the trading education business that they talk, but they don't really trade. I think it helps to learn from a guy who really trades. So authenticity counts. And I only have a couple of PowerPoint slides. We're going to blaze into the charts momentarily. Today, I wanted to share with you lessons learned. I've been trading full-time since 1999, so 21 years. As Jeff had mentioned, I started off with Day Trading University, and then now we're grown, and so now we're TradeMastery.com. You're going to look at some of the best moving breakout charts, volatility patterns, how to avoid false breakouts, how to trade gaps, how to position size and scale, various patterns like acceleration ramps and candle patterns, and open range breakouts. So that's pretty much our thing. How many of you guys are glad that we don't have commissions to pay anymore? Here's a quick P&L proof of my Fidelity account. I paid 33 grand in commissions, did 9,000 trades in 12 months. That's proof. I'm a real trader. So I'm a guy who, I live, eat, and breathe trading. I love this stuff. So let's take a look at some of the patterns and get underway. One of the first things I want you to look at is consistency. One of the ETFs we can focus on first is CUT. This is a lumber ETF. It went from 17 to 34. It doubled over this past year. And if you take a look at the patterns, the main thing to look for in consistent patterns is directional trend strength in a narrow channel. So this is a beautiful channel, right? It's been going up and doubling. If you want to avoid false breakouts and the frustration associated with them, you need to find the right kind of charts. Okay, so if we take a look at recent price action, I love these MetaStock charts. Look how crystal clear they are. They just pop, right? Anyway, one of the patterns you want to look for, if you don't see a hammer time, ba, ba, ba. No, anyway, there's a hammer after a base and it ran up. We got a bearish engulfing. It pulled back down. No signal for the pivot there, though, a bullish lower shadow. This guy ran up, sideways, up again to new highs. One of my, excuse me, I do a lot of broadcasting. One of my favorite patterns to look for, and we'll look for examples of it throughout the session, is a two-candle pattern in which you have a small whole body followed by a larger whole body in an existing uptrend. And that usually gives you permission to blaze away at it, to go ahead and buy it. So that's one pattern to look at. Another is, now this is not technically a hammer, because a hammer has to come at the end of a downtrend. But if you see a bullish lower shadow after a uptrend in a window and a gap down, that's a good place to buy in a new high breakout. One of the things I want you to pay attention to, and we always love these kind of charts, right? Charts that have consistent buying day after day and week after week. One of the things to keep a keen eye on in your MetaStock charts is look for the ratio of green to red candles and make sure that you're focused on charts kind of like the air to fuel ratio in a car. I used to be a corporate statistician for the Ford Motor Company in Dearborn. I'm a total numbers geek. In Japan we say otaku, or numbers guy. One of the things you want to look for is the ratio, kind of the mix of green to red candles, and simply give favor to candles that have more green than red on them over the time frame that you're looking at a trade to set up. Let's look at some other charts. We got plenty to focus on. So that's an ETF. Lumber with infrastructure opening. I'm not going to be a talking head, but things like lumber, steel, copper, right? FCX. U.S. Steel is a good example of an infrastructure play. I thought I'd cover those because they're particularly timely. And I trade these. These are the ones that I like for infrastructure reopening. Are going to be things that are used at home builders. Are up a lot, right? The XHB ETF. So wood is in short supply, so that's why the price of lumber is doubled, and the ETF that goes along with it. Cut is one. Believe it or sometimes they have a good sense of humor. Cut is one. It's curiously the long ETF, and so is wood. So wood, WOOD, is one ETF, and CUT is another one to play lumber. There's likely still plenty of upside to go in those guys. We take a look at U.S. Steel. Take a look at the pattern here. Aha, the magic pattern. I want you guys seriously to remember this. I just showed you proof. I did, what's like 8,000 trades in a single year. I'm a real trader. I'm obsessed with trading. It's what I live, eat, and breathe. It's kind of sad sometimes when you think about it, but I do well, so I love it. Wait, small followed by a large whole row body candle. That's a really good momentum pattern. And that's part of what I call, when I speak at money show events, and I'm a featured speaker at money show events, I call these an acceleration ramp. That's where you have a steady uptrend. You can see a steady uptrend, then it hockey sticks into a sharp angle breakout. People, be smart. Ask me some real questions, all right? Ask me your toughest trading questions. We got a whole hour together, so that's a long time to me. I trade quickly. So ask me questions. But look for this pattern, a small followed by a large whole row body candle. Now, don't obsess over it. It doesn't need to be 1.6 percentage, 1.6 times, anything like that. Just kind of eyeball the charts and look for charts in which you have a small followed by a large whole body candle. The trick is, this is a rider downer, right? If you've got your favorite Mont Blanc pen, you want to write down, a rider downer is make sure that you have increasing volume to go along with price action. You always know about the importance of volume confirmation, right? I'm a price action trader. I don't pay attention to news. I don't pay attention to talking heads. I pay attention to money. I pay attention to unrealized P&L. I pay attention to price. I'm a hardcore price action trader. That's all I care about. Price is the ace of the deck if I had a deck of cards. And I even have sound effects. The king is volume, right? So price action is the ace of the deck. Volume is the king of the deck. And when you're looking for a volume confirmation, with this particular candle pattern, I really want you to eyeball the chart and make sure the volume is at least 1.5 times the previous day's volume. And it was here. You can see it ran from 13 to a high here near 24. The first sign of trouble was here. Now, let me ask you a question. Let me ask a quick question. Before we continue on, type in how many of you are day traders, how many of you are swing traders, or how many of you are like me and we do a little bit of both. Type in the word day, swing, or both. This is the audience participation part of today's session where you, or at least keyboard in D, S, or B if you're lazy. Day, swing, or both. Type in and I'd love to hear what you guys do. What kind of trader are you? Hey, Long, how you doing, man? Don't everybody type at once. Let's start seeing those. Type in the word day, swing, or both in the chat box, and that will let me focus energy on the type of charts to cover for you today. Wow, okay, here we go. Both, swing, both. Hey, Will, hey, Tom, Teresa, Eric, Gabby, Rashad, Michelle, Talindra, Ed, Stock, Ian. Hey, Ian. Michael, William, Bruce. Okay, we're seeing both, swing, day. Mostly both and swing, just eyeballing the data set. So we don't have any day trader only types. We don't have any, we have both and swing so far. A few day traders. Hey, And you can use this pattern too for a setup for a day trade the day after a wide range bar. So when you see a small fall, and again, I have lots of patterns to cover, so we're going to move on. But this is one of the most important ones that's not covered for active traders out there, right? So that's one I always like to cover in my money show appearances, and I believe it's in I'm sure it's in one of my Stocks and Commodities magazine articles. You may have seen my Trading on Momentum column every single issue, and it's an honor and a pleasure to work with both MetaStock and Stocks and Commodities. Anyway, that's a really good setup. And I just saw this off the top of my head because I know these patterns. I hadn't planned and prepared to know where's that going to be. I'm not a PowerPoint jockey. I'm a real trader. I can go through the real data set and see what's going on. Anyway, memorize that pattern. Got it? All right. More to come. What else do we have going on here? When things are sideways and flat, much like today's market, not worth trading much. But when you see a wake-up candle, kind of like a wake-up call, ding, it's alive. And you probably missed that day, even the day or two after. But if you come in on the chart and you see this in your handy-dandy MetaStock charts, you got a big candle following a small candle. That would be a buy signal if it's a large volume candle on the breakout. Now, how do you know about reversals? Well, obviously, you can use candle patterns like shooting stars or bearish engulfings, neither of which we have here. So what else do you have? You have horizontal support and resistance. Always useful to use a combination of Western technicals and candles, because you don't see, this is not a shooting, I don't think that's quite a shooting star. I think you need to have twice the whole body height of the shadow to qualify. It is a bearish upper shadow, and you do see those, but the pivot patterns they jump out. And one of the things you want to look for is breakout patterns and trade in and out of the trades for momentum. Hey, good there, Bob, on both day trade and swing trade. Question from William, do I ever use case on range bar charts trade? No, I just use candlestick charts. I've used candle charts for 2 decades. It's like the difference between black and white and color TV. Why watch black and white bar charts when you have color, more information communicated in the candles? And look how beautiful these charts are on MetaStock. They're so good. Anyway, takes my breath away. They're so clear. One of the things as an active trader you really want to focus on is clarity for decision making. And if we take a look at some of these charts, that is, all I want to do is just a zoom, baby. We've got to zoom in. And thanks to Jeff for the heads up on how to do that. It's been a while. Anyway, this is another example of that kind of a pattern. You have a large signal candle at the right side of a bullish cup. That's another pattern I pioneered 21 years ago in Top Traders, and other people have since copied it. But when you see a extended bullish cup pattern and then a large green candle on the right side of it with a horizontal resistance breakout above it, that's a long signal. And that's something I taught traders back in 1999, I believe it was. One of the very first candle combination patterns I saw. You have a Western technical of a bullish cup. Looks like the letter U, right? Upside down A, like a V or an extended U shape. If you see a large candle, especially with a high volume like we have here, you can see the MetaStock charts are around 40,000 shares. Not to a light volume on this instrument, but the range is great, right? The trading range on this instrument is phenomenal. Anyway, taking a look at the patterns here, how can you tell when things are running out of steam? Well, it's difficult. One of the first things you look for, if you don't have a clear-cut candle pattern like a shooting star or bearish engulfing or a tweezer top, the other thing you can look at is simple price action on the most recent 2 or 3 candles. So let's say you've been trading this to the long side and you're long and right for once. Hey, it ran from 24 up to just under 50. This chart illustrates a concept that I published in the Stocks and Commodities magazine called Don't Buy Nines, right? And one of the world's top, I won't mention his name out of privacy, but he ran a back test on this and he said it was correct the majority of the time. He's one of the world's most famous chart pattern experts. I'll leave it at that. And he saw my article and I'm grateful to him for running a back test. And he said he found it was correct to well over 50% of the time. Don't buy nines. And I like to give counterintuitive or things that are not taught in Trading 101 stuff, because I'm a real trader and I want to give you the benefit of all the lessons learned and all the thousands of stop losses as well as the thousands of wins I've made. One of the things you should never do is buy anything with a number 9 in it. Just remember that. For proof, go back, you say, WTF, what's he talking about? Don't buy a 9. Well, what is that? Well, for proof, go back over your last 50 stop losses and see how many of them had a 9 in them when you bought it. Or just randomly go through any 30 of the top most active, highly volatile charts and scroll back to the last few months of price action. You say, oh yeah, he's right. Sell something with a 9 in it, right? So there's no, we had kind of a bearish upper shadow, but that's not super strong for reversal play. It's not a bearish engulfing. We don't have a shooting star at the high, but we do have bump, 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 bum, brrr, boom, a 50. I like that. One of my favorite plays for swing trading is trading within decade values. I might buy 41 and I might sell 49, right? So that's playing within a 10-point range. For day trades, I like trading within 1-point ranges. So if I buy like 11.1, I'll sell 11.9. So remember that. That's time proven and tested over thousands of real money trades. It's more often than not a really smart idea to tighten up a trailing stop as something gets close to, in this case, 49, right? Always, one of the next topics we're going to look at is how to avoid false breakouts, because it's frustrating. This is one way, is don't buy anything with a 9 in it, because that means the trade is usually what I call late cycle. It's a mature trade that's been running for quite some time. And also 9s just simply look expensive, right? 1 looks cheap, 2 looks cheap. Remember, this is a psychology-driven market. And I just saw that on this chart just off the top of my head. I have so many patterns I share with you. You could throw up any chart and I could teach you the patterns of how to exactly trade that instrument. You've been doing this a couple of decades, you figure it out. Anyway, signal candle, boom, shakalaka. He shoots, he scores, the crowd goes wild. But hey, we're up at a 9, so sell that freaking 9, right? Boom. So given what I just said, where's the next trade? Kind of what one of my colleagues, Alan, would call the difficult right edge of the chart. Where would be your entry and where would be your exit target in this Calix Networks, whatever this chart is, CALX? Where would be a long and where would be a exit target? And we're going to cover stop losses and risk management as well. In general, you may have seen my Stocks and Funnies article on the topic. I use 2 days of price action. I go long above a 2-day high breakout, and I start scaling out or stop out of at a 2-day low breakdown. So if yesterday's range was 30 to 32, and today is say 32 to 33, I'd go long over 33, but stop out if it drops under the previous day's low. That's risk management for swing trades. But where'd be the entry? Hey, thanks, Robin, saying this guy is intense. Well, it's late in the day, right? And I've had my handy dandy caffeine pill. I don't drink coffee this late, but I had a little caffeine, so helps animate things. Anyway, the point is the trade round trip would be between 41 and 48.49, right? So second chance trade, not a trade recommendation, but if I bought at 41, my stop loss would be usually 2 points or a 2-day low, whichever hits first. So if I buy right over 41, my stop loss would be at 39, and my exit target would be up at 49, right? That'd be the second wave of the run up. Now, what if it keeps running? What if it stalls and drops? Okay, great. What if it keeps running? Well, scale in over the 50. Here's one of the lessons learned from millions of dollars worth of real money trades with P&L proof that I actually do the trades, right? I'm a real trader. One of the things you've got to do is look at every single trade should be seen as an adventure. It's not just a journey, it's an adventure, a sequence of 2 or 3 trades. That's a life changer. Make sure you test it out. Remember, learn from those of us who are real money traders, not people who talk about magic chart patterns. Chart patterns, the least important part of your trading. The most important thing is range. The most important thing is risk management. Second most important thing is range, the volatility, the directional volatility, right? The chart patterns are important, but more important is understanding what charts are worth trading in the first place, how to manage your risk, and how to look at your trades, like I said, as a sequence of trades. all of your trades should be seen as a 2 or 3 sequence event. Instead of putting on, and even a famous talking head who says "booyah" a lot, "bye, bye, bye," says, he's mentioned this on his show too once, which I'm grateful for. He's exactly right. Instead of doing, say, 500 shares right off the bat or 300 shares right off the bat, break it into pieces. That way, if the first one's wrong, which they often will be, your stop loss cost is minimal. You can scale in or build the trade over time if it works out. But you're going to find that at least half of your trades, and this is very true, anybody who claims to do more than 50% winning trades is lying. Ask for tax return proof. You'll get all kinds of excuses and no P&L proof. The percentage of winning trades is very unimportant. Ask any floor trader on the CBOE or anywhere. What counts is your net P&L, right? Your net profits. So I'm fine if I take 8 stops and 4 wins, as long as the P&L from the 4 wins outdoes the stop loss cost on the 8 losers. So you're going to take more than half your trades are going to stop out or go against you for the rest of your life as a trader. That's the bad news. The good news is, with proper position sizing, scaling, legging into a trade, whatever you want to call it, that's how you make it as a trader. You get my word on that. It's important you look at your trades as a sequence of events, 2 to 3 trades in a row. So let's say, hey, I bought the breakout, and I got stopped out, darn. I bought the breakout again, I got stopped out, darn. And I bought the third breakout right up there, and I got stopped out, darn. Well, that's not good. What you want to do is buy the first breakout, get stopped out by the second one, maybe stop out on that. The third one's a charm, and now that you know an exit signal, you exit with a win. So you may have 2 stops, the third one's a charm and it's a win. And to add, it adds a little spice to it. If it keeps going up, you scale in. My biggest winning real money trades over my career as a 21-year, I'm 57 years old, but over the 21 years I've been a full-time trader, my biggest winning years, my biggest winning months and weeks and days have all been a combination of doing what my colleague Tom Sosnoff says, trade small, trade often. He's brilliant. He's right. I say trade wide, not deep. He says it better, though. You throw a lot of darts and look at your trades as a sequence of trades. Now, when you're looking at your MetaStock charts, the signals should jump out to you. I mean, it's just right there. It's so clear. I love these charts. They're crystal clear. And there's so much depth and flexibility behind the MetaStock platform. They have the most in-depth and detailed options and things to set up all your charts of any platform out there, and they're outstanding. So lots to look at. Let's take a look at some more charts and more strategies. Everybody with me so far? Back when I used to do webinars, or I'm sorry, seminars at the MGM Grand in Las Vegas, of which I've done many, I remember telling the guys at the port car share to buy your stock when it was $6 a share, like a decade ago, right? Anyway, something like that. They came back and they're like, hey, Mr. Calhoun, thanks. Anyway, MGM is a good breakout chart. Let's scroll back through some of the passage of time. One of the biggest challenges you'll face as a trader is navigating ups and downs. My advice would be don't bother trying. You're not going to ever get it, right? I mean, I'm a former corporate statistician, quality engineer, full-time trader. I've been doing this for decades. One of the things you want to look at as a trader instead is balancing your risk management. So let's say you're looking for a pivot play. Here it was. This was and I bought this right here. Unfortunately, I sold right there on the pullback. But anyway, back in March, we scroll back to the passage of history. Last March, MGM stock tanked from 35 all the way down to $6 or $7 a share. That was a buy signal. I told my traders long over 7, right? And this guy ran all the way up to currently up near 41. Now we have a minor gap continuation. Let's take a look at some gap strategies and how to avoid false breakouts and more. There's more to learn, right? There's always something to learn. The first thing that I look at when I eyeball the charts is I love how clear these charts are. I just can't keep saying that. Anyway, that is a bearish engulfing, right? Bearish engulfing. After an uptrend, if you have a large candle, especially if it's a red candle, well, it's an engulfing pattern anyway. The point is we're near a top here and a pullback. Maybe that's not a bearish engulfing. That's almost a bearish engulfment, but the point is it's at a 40. The first thing that you do, step number one, in looking at whether or not a chart is tradable, is always look at the range, because that helps determine your risk reward. If the range is like a $2, $3, $5 range on a multi-month chart, that's not good. If it's a $20 point range like MGM is, that's much better. So the first thing that you want to look for when you're scanning for charts and qualifying them, right? If you're qualifying, in engineering we'd say a qual test or something. You're looking at qualifying whether or not the things, if you're scanning and trying to find out whether or not something's worth trading in the first place, always give preference to charts with the biggest trading ranges. And by that I expressly do not mean the stupid under $10 charts. People that trade charts under $10 would probably be best advised to consider something else, because they're pop and drop one-hit wonders. You got these idiots running chat rooms that front run low float under $10 stocks for day trades, and they blow up all their traders' accounts, and only the guru seems to make money because he front ran everybody. Just say no. Stop the madness. There's got to be a better way. Do not trade stocks under $10. So when I mean big ranges, I don't mean something that it went from $1 to $3 and now it's 20 cents. Derp. Don't trade those. Trade things that are more consistent, even if it means smaller share size. Even if you have a small account, I'd much rather see you trade 10 shares of an MGM than 100 shares of a $3 stock for the same capital, and so forth and so on. So really what you want to look at as an active trader is the range of the instrument. The bigger the range, the more consistent the range. Like CUT, for example, the wood lumber ETF that doubled in price in a consistent 45-degree angle breakout trend over many months. That's how you do it, right? And you scale in, you feed the kitty. You feed the winners, starve the losers. When you're at a 2-day high breakout, I always scale in. When I'm at a 2-day low breakdown, I always scale out. And that's an important strategy. Hey, thanks. Tom was saying, this is fun to watch. My job's not just to entertain, but to inform and educate and to teach. So, bye. Anyway, tell me any questions. Some examples, a question from Bruce about how can you show some examples of scaling in and out? I could open up my Fidelity broker account, but I don't want to do that right now. I could though. I mean, I would go ahead, Jeff.
We do have a question from YouTube. Not a lot of them, but
let me know those. I can't see those, so let me know.
Yeah. What are your rules for trading? Are you just trading the chart patterns? Do you consider yourself a day trader or a position trader? So there's 3 for you. 3 questions.
Right. I don't know what the word position trader means. Anything longer than a week or 2 would be an eternity to me. So I trade always within a 1 to 2 week time frame. I do both day and swing trades. Winning day trades, what I'll do is if I buy something, I'll go over the rules in a second. But here, it begs a good question. For those of you who trade both, and many of you said you do, both swing and day trades, you can never let a losing day trade turn into a swing trade. You can never, ever do that. You bought it and went down, you said, oh, let it go, and I'll turn it into a swing trade. That's like adding to a losing position. You never dollar cost average down. That's stupid. What you do instead is, if I have a winning day trade, and this is a really good thing to test, honestly, test this out. Let's say I buy something at, say $15 a share in the morning, and by the end of the day, it's up at $16 a share. I will usually sell 80% or so of those shares for winning day trade because I want to book profits. It's not enough to just get a winning breakout. The whole trick is kind of like the movie Heat, and you're like robbing a big bank called the Casino of Wall Street. Your goal is to get out with the money, but without getting shot up. So what you want to do is, let's say I buy 11, it goes up to just under 12. I'll sell 80% of the shares, and I'll often let the other 20% ride for a swing trade into the next day if we close at a day's high. So that's how to combine day and swing trading. I always use no more than I use a 2-day low for a stop out and a 2-day high for a scale in. So rules. There's many of them. I'm a 100% rules-based trader. There's quite a few dozen of them, but the most important rule is make sure that you visually scan for charts with big ranges. Now, I'm just going over swing trading charts today because you can extrapolate for some intraday patterns as well, but these are especially strong. These are especially strong patterns and correct trading methodologies, and I want to give you the foundation for doing this the right way. So, rules of engagement: make sure that you've got a big range. For example, at least a $10 or more range on a 30-day chart. Make sure that it's in a current uptrend. Don't try and bottom fish. Make sure that you scale in at a 2-day high. I always say, thou shalt buy 2-day highs and thou shalt sell 2-day lows. That's the most important thing I found in my own real money swing trades is always feed the kitty if it's a winner. If it ends at a 2-day high and it's above where my cost basis, I will scale in a little bit. I always mandate, that's a mandate, a trading ethical mandate to myself is thou shalt buy new highs if I'm in the money in a position. Because otherwise I've left money on the table countless times. How many of you have done that? You bought a small position and it ran up a gajillion points with you, but only a very small trading. You kick yourself for not having bet more or traded more. The way to do that safely and smartly is every couple of days scale in. It's another quick tip on position sizing and scaling. This is a valuable tip too, tested with tens of thousands of trades. Do not scale in the day after your initial trade, because often it does an A-shaped parabolic curve and bites you in the rear. So space out your scale in trades. At least if I buy, say, on Tuesday, the earliest time for a swing trade I can add to the winning trade is on Thursday. Now, if I buy on Tuesday and it takes out a 2-day low, either that same day or Wednesday, I have to scale out, right? You scale out it's the first sign of trouble, but scale in only every other alternate day. That gives the market time to do a random reversal or up and down shakeout. So that's an important lesson learned from real money trades. Any other questions, Jeff, from the YouTube folks? And great to see all of you out there in YouTube land. I wish there weren't so many dang commercials, but gotta love it, right?
That's it for the questions so far from YouTube. But if you have them, let me know, and I will break in.
Sure thing. All right. A question from Ann talks more about setting stops, please. Yeah, sure thing. Let's say we buy right here this would be a likely place where I would buy right above a horizontal resistance. Where would you guys stop out? Where would be the stop out? And again, it's under the previous day's low. And I either scale out 80% or so of the shares. I used to do only half the trade, and I found out that didn't really buy me anything. So either I close out the entire position, or more often I'll sell maybe 80% of the shares if it bites me in the rear and I get along. So let's say we bought at 33, I would stop out right here near the loss of the 31. So if I buy here, the stop loss would be right under the aggregate 2-day chart. But let's say I bought here, and the next day it gets in trouble. The next day, oops, this is in trouble. It wouldn't be a stop out unless it loses the aggregate 2-day low. And you do a kind of a trailing 2-day pattern. So once you look for a breakout, you do a 2-day low. Now for intraday trades, there's 2 different ways you can manage stops. And I've done entire multi-day seminars on the topic. So I'm trying to compress a couple of decades into 60 short minutes. For more, be sure to see my Trading on Momentum column and Technical Analysis of Stocks and Commodities magazine. Dozens and dozens of articles I published for over a decade in that fine magazine. So highly recommend you take a look at those. But for intraday trades, one of the things you want to look at is 2 different ways to manage stops. One is 2 different ways to day trade. This is a game changer. There's 2 different ways, many different ways to day trade, but my 2 favorites are open range breakouts. That's classic scalping the open between 9:30 and 10. So if I buy it, say 9:30, something that's like $20 a share, let's just round, and I buy it, say $20 a share, 20. I never buy the whole number. So if I buy it $20 a share at 9:30, 9:35, and it runs up to almost $21, I'll sell it, take the money, and run at the 10 o'clock or close to 10 o'clock, or 8 to 10 minutes or 20 minutes or whatever the open range breakout length of time is. So that's the first type of classic day trading 101 stuff. The other less talked about, but I think more valuable way to intraday trade is all session long. For the first type, you have to use stops of maybe 40 cents. So if I'm trading something that's $15 or $20 a share, I'll use a 40-cent stop loss on intraday trades. The other way to trade is all session long, where you put on the trade at somewhere between 9:30 and 10, and then let it ride all day long and try and cash in either lunchtime if there's a lunchtime reversal, or preferably at the end of the day if it's one of those guys that cycles up and down and ends the day up at a high. And for that one, you put a stop under the opening price, under the 9:30 low. So let's say I buy it, say 9:35 at say 2020, and it opened at 1950, my stop loss would be right underneath that. So two different ways to day trade: scalping the open for the first half hour, and the other way is to let it ride all day. And I encourage you to experiment more, especially if you've got less than 10 or 15 years. The last thing you should try and do is try and day trade thousands of shares of low float under $10 stocks. That's bananas. That's for gamblers and morons and stupid people. Don't try and scalp under $10 low float stocks. That is almost guaranteed to blow up your trading account. And none of us want that. It's in all of our shared interest for you guys to be active and at least break even, and hopefully making some money as traders for years to come. That way you can work with MetaStock, you can work with Trade Mastery, or whoever else that you want to work with. So it's in our shared interest to keep you guys from blowing up. So let's move on to gaps, and hit me with all your questions. I know this stuff, so I know how to trade. For swing trades, thou shalt never buy the day after a gap. So I would not, or the day of the gap. And I usually don't trade the day after the gap for a swing trade as well. So what's today? Today is Tuesday the 6th. MGM had a gap up day. I would not be buying this tomorrow, but I'd be buying it at the earliest on the 8th, say if it breaks over 43.44. So when it comes to swing trading, gap stocks, don't ever buy the day after. Don't buy the day of the gap, because often they do a mean reversion pullback or a gap fill the day of, so you don't want to do that. Neither is the day after the gap good, because often that's a resting or consolidation day. It just plain isn't too exciting and doesn't go much of anywhere, because the street's trying to digest that gain and trying to figure out their strategy for the next move. So if something gaps up like MGM did, say on a Tuesday, you wouldn't buy until Thursday or Friday if it takes out new highs. So good point.
Okay, we have a couple more questions in YouTube that I'll give to you and let you answer in whatever order you prefer.
Sure, sure.
Marcel wants to know any high probability patterns to avoid the false breakouts? Question mark. So are there any high probability? And then the second one is, what about trades that come out of a consolidation and start making 3-day high low or 5-day high low as we work the swing?
Okay, false breakouts. The first tip on false breakouts. These are beautiful charts, man. I just hats off to MetaStock. You guys have this crystal clear, but you have to have the skill to know how to trade too. I mean, that's kind of two-sided. You have to have the tool, and it's great to have the world's best tool, but you have to have the training to go along with it. And so, whether you're learning from me or other people, and hopefully from a variety of people, what you should do is, and this has been a great shindig that I'm here in Colorado. We use words like shindig. It's a great, I used to live in Hawaii, and I'm from California. I'm a UCLA graduate, but the point is, there's a point in there somewhere. You want to be able to trade the best charts and combine, kind of listen and see where trader, kind of like a Venn diagram where there's overlap between multiple subject matter experts. At least that's something, and then give weight to those people who are authentic and have tax return proof that they're real traders, right? That's my idea. This is from a while back, but anyway, avoiding false breakouts. One of my favorite topics. The first rule is don't ever buy an obvious resistance area, like a whole number. For example, this illustrates too the whole thing about don't buy nines, right? I just saw that for the first time. It's not right. You sell nines, right? You sell the 39. You don't buy at a 9. So that's one tip I mentioned earlier, was don't buy right under an obvious resistance area. Okay, so for example, right under the place never to buy is right under previous day's high. If something previous day's high is here The guy chopped around, and today it's going up here. That'd be a really stupid place to buy it. Also stupid to buy would be right at the high. Also stupid would be buy would be right above the previous high. And that's where traders get in trouble. You guys are too quick to jump the gun and get in. To trade, I always trade at least 20 cents or so above a whole number, the nearest whole number breakout. So on this chart, I would not buy this for a day trade. I mean, you could scalp in over 36.5, but for a swing trade, I wouldn't touch this till at least 40.2, maybe 40.5. Not a trade recommendation, but just a lesson learned. This is Freeport McMoran, my favorite copper instrument. I trade this. I trade FCX. Anyone else trading Freeport? Copper's in great demand by not only the country of China, but infrastructure here in the US of A. So copper, steel, concrete, lumber, all those construction-related things, Caterpillar stocks, CAT stock, right? It's pricey, but anyway, to avoid false breakouts, don't buy into resistance, don't buy nines, don't buy at the obvious resistance. I won't call that dumb money, but that's what the street, that's what, if you ever had, I had market makers and specialists and prop shop guys in my seminars for years, my live in-person seminars, and their whole way of looking at trading is completely different than the way that the educators who only know chart patterns and that's all they talk about trade. You do not buy one of the biggest disservices that the trading education industry foists upon traders and causes you guys to lose is the whole concept of magic chart patterns and buying as soon as it flashes a buy signal above resistance. You'll get killed that way, and you've probably suffered that way. I always say what I'm about to say at my Money Show live appearances, and I always get a room full of chuckles and all that kind of stuff. I always tell traders, if you conceal your trading losses from your spouse, if you hide your trading losses from your spouse, you'll probably have a problem trading. So stop the madness. There's got to be a better way. One of the things to do is to avoid false breakouts by having, and I covered this in one of my stocks and commodities, multiple of my stocks and commodities articles, is have a safety buffer or a shield. If the high is 40, you don't put a buy stop 40 order in because odds are it'll go up a little bit and stall. For stocks, $20, just a rule of thumb, stocks are 20-ish or less. I use 20 cents above the whole number to go in. Stocks that are priced $30, $40, $50 a share, I use usually 40 cents or so before I go in. So for a swing trade, and keep track of this, right? Be impressed. FCX, my long trigger for a swing, my official long call, not a trade recommendation, would be 40. Consult with a registered investment advisor before making any trade decision. Blah, blah. 40.4 would be the earliest I'd go for a swing trade long. This would be a really stupid chart to buy right now because you don't have an edge. It's consolidating after a pullback, and it's going to run into overhead resistance between 37 and 40. So that's another quick tip for avoiding false breakouts. There's more to it. Another is if price is going up, but volume is going down, kind of like a less than sign. If price action is going up, but volume is declining, you're likely to run into trouble. So make sure that you have volume confirmation before you look for an entry as well. But this is a beautiful chart, right? What's not to like about this guy? From October, it ran from 14 to almost 40. That's FCX, one of my favorite charts out there for swing trades. I've been calling this long for my members in my live room for quite a few months. And again, you could scale, how to say, when you're looking for successful charts, look for charts that if you could go back in time, if we could get in a DeLorean or a TARDIS for the fellow Doctor Who, the Whovians out there, time and relative dimension in space, from Doctor Who, go back in space, could you have made a boatload of money had you traded it? Give preference to charts for which the answer is yes. I like doing a background reference check on a potential employee, if they can still do that. Were they absent a lot? Were they productive? Did they get along with their coworkers? Did they know their stuff? Did they innovate? Were they leaders? Or did you always have to babysit them? What kind of employee was it? Ask yourself, what kind of chart was it? And again, you can't trade where it went. You can only trade where it goes. So make sure you have charts that have clean, focused directional up, nice tight ranges, big range, and a tight channel, 45-degree angle breakout. That's the best swing trading type of chart. And that's why I've been calling Freeport long since October for my members at Trade Mastery. Hey, Jeff, any other questions out there? And no, Tom, sorry, I don't trade options. They're complicated. It makes my head hurt when I think about all the strangles and Greeks and all that kind of stuff. I'm an old-fashioned price action trader. If it goes up, I buy it. If it goes down, I sell it. It's how to do that that counts. Let's see. Can I talk about day trading open range breakouts on the inverses? Yeah, sure thing. Usually what I found in trading ORBs I was trading those today. I was trading UVXY and TZA was strong, and SRTY, which I was trading today multiple times. SOXS was especially strong today. Semiconductor inverse, SOXS. I was trading that today. For ORBs, you want to look for a 2-day high breakout. Usually, it's not a good idea to trade inside range, though I often do. For trading your inverse ETFs, I've traded them for over a decade. I was even trading VXX on the flash crash day profitably. The original flash crash back 15 years ago or whatever. So many thousands of real money trades with inverses. ORBs on them, they're a little different of a critter. For inverses, I don't have time to go into a lot of detail, but typically it's buy the dip, sell the rip. So if you have an extended move to the downside and then it starts to pivot, that's usually how you trade your inverses. Lesson learned the hard way. Don't buy inverses on gaps up, even though normally you always want to buy pre-market. I often buy pre-market. Don't buy inverses pre-market gaps up. In fact, it's the opposite. Usually you buy gaps down that start to fill in the inverses pre-market. So never buy. I kick myself over and over again because I can't fight the temptation, and sometimes frequently I will buy small gaps up because I'm hardwired that way. If you're trading stocks in the pre-market, small gaps above the previous day's high that continue up are perfect, and that's what you do want to trade if the chart looks great. But inverses, not so much. It's the opposite. Let's see. Other questions? How do I scan for potential trades? Hey, Jana, I'm sorry. Well, one thing I look at is leaderboard scans, and there's frequently out there. For example, in my Fidelity account, I use Fidelity and Interactive Brokers. There's always a leaderboard of the most actives. So I look at the most actives, and I also have a core watch list of stocks that I trade routinely. So that may be things like this guy, FCX, or US Steel, or the cannabis stocks like Tilray and Afria and Aurora Cannabis and the MJ ETF. A lot's out there, but I scan mostly using the leaderboard scan in my Fidelity account with Active Trader Pro Workstation. I sort on the most actives each morning. Now, what that'll often produce is a lot of this random, what I call random gap or cheap stocks, and those are usually horrible to trade. The biggest favor you can do yourself as a trader is don't trade cheap under $10 stocks. They are terrible to trade. They pop and drop. And there's very dishonest young men making YouTube videos saying they made $100,000 in a single day. The SEC will surely take them down, but if it sounds too good to be true, I can't believe anyone would believe that some guy says, and they believe that, I had a $30,000 day. No, they didn't. In a demo account, maybe, but don't believe it. If it sounds too good to be true, it is. Be deeply cautious and skeptical when it comes to choosing who you learn from. Make sure, first of all, that whoever you learn from must show proof that they're a real money trader and not some BS PowerPoint artist who, hey, look at a chart pattern. Now, what counts is, proof that they actually trade, right? I did almost 9,000 trades in 1 year. I put that up against any other educator in the entire industry. Who else can prove they did 9,000 real money trades and had the commission load to pay for it, to demonstrate? So that's one of my pet peeves. Authenticity is really important. People who talk about trading don't have the complete skill set because chart patterns alone are far from enough. The most important thing you need is money and risk management skills. And people who only talk about chart patterns don't have that because they don't have the experience, right? So that's important. On the ORB, do you account for pre-market high-low? Yeah, absolutely, Rob. One of the things I look at in pre-market is, the gold standard for the very best chart pattern is previous day 45-degree angle, current day pre-market small gap, not a big gap, not an inside gap, but current day gap slightly above the previous day's high. So previous day ran from 19 to 20, and it looked a little something like this. Current day, you want pre-market to run, say, from 20.2 to 20.4 in a 45-degree angle breakout on an uptrend. That's the gold standard for the best day trading setups in the world out there. It's not some random, there's nothing in the previous day's chart, and today it ran from $1.50 to $3, and now it's back down to $1.60. Those are horrible to trade, so don't trade those. You want charts that go a little something like this. Mr. Gibby, any other YouTubers out there? You guys, our time sadly is about up, so hit me with your best shot, guys. I know how to trade. Give me any questions at all that are smart. Please don't ask questions like, does this apply to Forex? No. Does this apply to options? No. Does this apply to futures? No. This is for trading stocks and ETFs. Yes.
The only question I have right now on YouTube is in Italian. I can't read it.
Arrivederci. Sei bene. I like cappuccino.
No, thank you. I can do that. Cappuccino, I know. Venti means large, I think.
That's right. I can never remember all those dang Venti, and just give me the biggest one you got. I don't want to remember the names. I don't want to learn a different language to order my freaking coffee, but don't get me started. But okay, thanks. Hey guys, here in GoToWebinar land. Wow, big turnout. Let me know if any questions, any other ones, but lots to learn from. Let's look at some other patterns. Here is Marathon, MARA, the ticker. This is a Bitcoin play. Mara and Riot, RIOT, there's two really powerful charts. Look at this guy. I'd started calling it long from members back, I think it was $13 or $14 a share on this initial breakout. Now it's schwang. Wayne's World, party on, excellent. Boom, flawless victory. Trading combat. I played too many video games. I'm an avid musician. I'm a tenor sax player. If you want to see me playing some badass tenor sax, go to tradingjazz.com and see all these cool YouTube videos I made playing tenor sax. The Pink Panther one is the best, but I digress. The point is, great chart, right? This guy is now, again, it's hard to navigate the ups and downs of the charts. It's good to put on a trade on a breakout, put a stop loss under support, let it shake and bake, scale in up at new highs.
We do have a couple questions now coming in. RDW25X wants to know, what about the 3 and 5 day high low?
Let's see, I don't want to pull up that exact chart, but if you have any questions about the charts here, I mean, I could type it in and all that, but I only got a few minutes left. I don't use 3 day high and lows. I use 2 day high and lows. 2, 1, 2. I don't use 3 and 5 day. I don't care about 3 and 5 day. I care about yesterday's range. The reason is OHLC algorithms are used by high frequency trading mathematicians in Wall Street. So previous days, the PD OHLC, prior days, open, high, low, close, is critical for the setup for the current day's chart. So I use the 2 day high breakout or the 2 day low breakdown. Okay, next question.
Marcel wants to know if there are any patterns for trading short.
Yeah, just the opposite of what I've been saying. If you have a small, just turn it on its upside down. If you have, the pattern is in a downtrending, descending chart. If you have a small followed by a large whole real body red candle, so a small red candle followed by a larger red candle, you go short underneath the support in an existing downtrend. So yeah, that's a good question. All right, any other question?
Yeah, back to GoToWebinar. Tom and Jana both want to know if you use any trend lines or indicators.
Oh, trend lines or other indicators? No, I use price action. You should, well, not to be a smart ass, but you don't need no squiggly lines. Squiggly lines, like my colleague Tony would call chart spaghetti. You don't need squiggly lines. Sometimes I'll use the 50, the 100, and the 200 simple moving average line, but not too often. The main thing is price action and the range of the chart. The more experience you get as a trader, the less you're dependent upon squiggly lines to make your decisions for you or do your thinking for you. As an active trader, the goal is simply to find out charts that are likely to make you money. And instead of obsessing over squiggly line signals, because those will stop you out more often than not anyway, I want you to focus a lot more of your energy on a sequence of trades and position sizing and risk management and trade management. That's much more effective. Ask any professional trader, will tell you the same thing. It's not about, success as a trader is not about squiggly lines and magic indicators or magic systems. It's all about risk management, range, volatility, and direction and consistency of the trend. So here's Mara, boom, look at that. Biggest range candle in months today in Marathon Digital Holdings, a Bitcoin play. And again, go ahead, Jeff. I can tell you're chopping at the bit.
Yeah,
You got some questions. All right.
You're fine. Waleed says, are you offering a subscription service? Question mark.
I'm glad you asked that. Go to trademastery.com. Yeah, I run a live room trading the open for 21 years. I'm one of the longest running, thousands of members over the years. Or 32,000 people have joined my various services over the years at trademastery.com. I run a live trading room Monday through Friday, 9 till 10:30. I'm usually there at 8:30 in the morning because I'm a workaholic. So I'm usually there at 8:30 in the morning and I stay till at least 10:30 or 11. So we go through specific trigger points for traders. But yeah, I do offer a subscription at trademastery.com. Just click on the chat room link. All right, next question.
Ram wants to know, how does your book swing trading work versus day trading? I'm not sure what that means, but maybe you do.
I have no idea. What does my book swing trading work versus day trading? Well, I outlined some of the differences. Swing trading, we're looking at 2-day highs. In intraday trades, we're looking for the day's biggest range runners. I think, like EYES was one today. I think RMO was another one. We look for the biggest range instruments. The main focus on day trading, again, is charts that had a previous strong day and are currently gapping or breaking out above the previous day's high, or random gappers that are moving up and move up sharply. So yeah, we cover both.
All right. And Ryan wants to know if you take live trades in your room.
Yeah, sure do. Yeah, I don't trade all the alerts, just as a heads up, let's see. But I do take live real money trades, and I frequently show P&L proof with my Fidelity account. Here's for example, here's one thing that my live room members get, what I call an answer key. I have specific tickers and specific entries that my traders get before 9:30, or I update them throughout the session. So I called snap long of 56.2 out of 57. We have swing trade alerts, and that's a daily answer key updated every single day, 5 days a week before the bell. So not to sound like a commercial, but yes, I do often do live trades. I don't live trade every single day, but I do trade many days. In general, here's another quick tip. The time to not trade is when the stock market opens inside the previous day's range. Like today, you always want to trade out days, meaning above the previous. So when the S&P is above the previous day's high, follow the SPY, the spider's chart, so that gives you pre-market trend and direction and gap of the S&P market. Focus your energy on trading when the market's above the previous day's high or below the previous day's low. Same thing for swing trades. All right, next question.
Okay. Let's see. Teresa wants to know if you recommended the best moving average.
The 200. The 200 is the strongest. The 50 often gives false breakouts. So I use the 50, the 100, and the 200 simple moving average. The 200 is the strongest. The 100 is also kind of in the middle there. The 50 SMA is marginal because it often has false breakouts. But on a 3-month, 90-day chart, I use the 50, the 100, and the 200 SMA.
Jana wants to know, what are your parameters for determining the average true range?
Main thing I look at is previous day's trading range. So I don't use an ATR indicator because I have all the chart. I look at the range. So I look at the previous day's range, and that's a good one. Let me cover a little bit about my service here, and then we'll come back to more Q&A. But one thing here, look at 3 large increasing height green candles. Now, here's an audience participation question. Is now a good time to buy Mara, M-A-R-A, or if not, when would be the earliest? I used to teach at private universities MBA programs for years, so I'm a brick and mortar and also for Fortune 500 companies as a quality management consultant for companies like Ford Motor Company and Sheraton and others. So I've got all the quant. I'm a quant. I've got all the quantitative background. Anybody see the TV series Billions on Showtime? It's great. I'm one of those. I'm a quant, right? I'm a total numbers guy. Let me see if you've been paying attention there, Padawan. Tell me, Grasshopper, where would you go long in marathon? In marathon, MARA. Where would be the earliest, given what I said about not buying nines, hint, where would be the earliest you'd go long in MARA? Hit me with your best shot. Don't everybody, yes, it's not a good time right now. You can click on Ken on tenor sax if you want. Anyway, it would be somewhere over 60. Like somewhere over the rainbow. Somewhere over the 60. We don't go long now. Now would be a stupid time to buy. It'd be a wise time to tighten up a trailing stop on MARA. That's the difference between a professional's approach and an amateur's. And to add more specificity, you'd want to see a bull flag or a pullback and then buy right above the high. So that'd be somewhere over, say, 60.4, somewhere over the 60. And personally, I'd wait till 60.40. The correct setup would be it runs up to just under 60, pulls back, because again, like I say, we sell nines. So this is a good place to sell this guy up here near 59. You'd want to see a pullback and then a punch on through to the other side and buy over 60.40. And pay attention to this one and let me know how that works out. We've got just a couple of minutes left in today's broadcast. And again, thanks so much to Jeff Gibby. The time flies when I do these shindigs because you guys make it interesting for me, so I appreciate it. I do run Trading Open live room. I've run it since the year 2000, so we're 21 years in business. I'm not going to scroll through all the information. We've got a cool video, explainer video that tells you what it includes. I limit it to just 250 traders because I don't want to have thousands of people. Like say, I'm a one-man band, so I don't have time to do all that. I do this. I have examples of recent winners on my Instagram feed. And there's much more. But anyway, the point is, my Trading Open live room is a really good place to get your feet wet for both swing and intraday trades. It's only $29 for a 2-week trial, and it rolls into only $149 a month subscription. Money back guarantee on the trial, so completely risk-free. The other thing you can do, if you're cheap, and that's fine, I get it. I'm thrifty as well. Go to trademastery.com and sign up for my free Saturday Trading Week Ahead events, and you can learn with me free every Saturday for life, for as long as at least I'm alive and doing these. So you can sign up for the free Trading Week Ahead events that are Saturday webinars. Okay, that's the way to learn from me for free initially. And then if you want to upgrade to the chat room, which meets 5 days a week, Monday through Friday, you can do that. You can type in tradingtheopen.com or go there, trademastery.com/live. Hey, Jeff, any other questions before we wrap up? It's been a pleasure, though. Thank you very much to you and the team at MetaStock for inviting me here. Yeah, you too, man. You're great to work with. You're one of the best people in the industry to work with, so I appreciate it. There's very few people like you out there, so it's good to work with somebody who's Jeff Gibby's extremely conscientious and hardworking. Like I've said for years, if I ran a trading software company, I'd try and hire him away because he's Jim. He's an ace, a good guy. So, any other questions? That's the truth. I'm very honest. So,
I appreciate it. Thank you, Ken.
Sure.
Great job too. I think we got all of the questions. Tradingmastery.com, and you can
Trademastery.com.
So that's what I meant. That's what I typed it wrong. I'm glad you said that. Trademastery.com, and you can be entertained like this every day with good trading advice.
Thank you very much, and thanks to MetaStock and the team for having me, and thanks to all of you for taking a little time out of your day to learn with the madcap ramblings of a veteran day trader and swing trader, and I hope that I can be of service to you folks and MetaStock moving forward in the future. So thanks so much for having me. It's been a privilege as always, and I look forward to working with all of you in the future. Bye for now.
All right. Thanks. All right, just 1 second, guys, while we get resituated here. And I hope you're enjoying it as I kind of get everything kind of moved over. How are we doing today? We're kind of getting towards the end of the day. Let me know in the comments how you feel like today's gone. I'm kind of interested to see. Do you feel like it was a good day? Let me know. All right, very good. Let me go ahead and share my screen over here as well. If I can, it's not letting, let's see, make me the presenter. Okay, show the screen. And there you go. There's Ken Calhoun again. So, very good. Let's see. All right. Hope you're enjoying everything today. Hope you can see my screen. And let's go ahead and turn on my microphone for just a second as well. As we talked about here with MetaStock, we do have the ability to look at charts and all of that kind of good stuff, test trading ideas, scan markets, forecaster, and the software itself has been rated #1 in its price category 28 years in a row. So I'd encourage you to go ahead and get a trial for it. You can basically, the way our trials work is that it's an extended trial. So if you buy 1 month, you can get your second and third month for free, and it'll allow you to find out why it's been rated so highly for so many years in a row. So a real quick shout out to our sponsor, Stocks and Commodities Magazine. You know they're awesome. They've done a great job supporting us and kind of helping us with the event today. Our presenter to kind of our closing speaker today, our keynote, if you would, speaker is a gentleman by the name of Peter Dalal. Peter has worked with us for a number of years. He actually, when we, I want to say about 15 years ago, maybe a little bit longer than that, he created a product called Forex Traders Advantage, or FXTA, with MetaStock. It was a hugely successful program, and he developed that. He's kind of been working on his trading theories, and now he's came up with a program that he's going to show you today that's called the Magic Trader Program. The Magic Trader Program, just to kind of give you a little bit of an idea on that, is a program that we launched just a couple months ago, and it's been very, very well liked by the people that have tried it. And so I'd encourage you to kind of pay attention to what we've got to talk about in this last hour. People, like I said, it's had a really, really strong following. People that like it, try it. And what we'd like to do today is to get you interested enough in the product to give it a go. So in that case, let's go ahead and bring you on, Peter. Peter, let's see if we can get everything working for you. How are you doing today?
Right. How are you, Jeff?
Great. How are you?
Fine. Good to hear your voice.
Yep. Your audio is coming through well. I just sent you the screen control.
Okay.
And I'll sit on here and we'll make sure that everything's working for you before we set you free. Okay. I can see one of your kind of long monitors.
Yeah, we got to change that. Which one you see?
Do you remember? Do we see the one that says copy of all disclaimers are available? Is that kind of a notepad that just went away?
Yeah, so we have to change that screen.
Mm-hmm. Do you know, so where it says sharing on your console, there's a little down arrow. And
yeah.
If you click on that down arrow under screen, it'll give you the different options.
How about that?
Let me look at it. Okay, now what I'm seeing is your slideshow, and if you just hit slideshow, start slideshow, you'll be good to go.
Okay.
So see where it says slideshow right there? Yep. Mm-hmm. I feel like I'm playing hot and cold. Right there, yep. From beginning.
All right, how about now?
Perfect. It looks great. It looks great. I'm going to go ahead. I'm going to get out of your way.
All right, welcome everybody. My name is Peter Dalal. I appreciate you all coming in here. Can you move this, what do you call, can you see it?
Mm-hmm. Yes, your slides are going well. They're advancing.
They are advancing? Okay, perfect.
Yep.
So we're going to get started.
Okay.
All right. First of all, I apologize. I have a bunch of disclaimer as per the advice of the lawyers, but I will make it very quick. Copy of all disclaimers are available on our site, which is themagictrader.com. Also, you could reach out to Jeff. He could give you those disclaimers. And it is also available on our Facebook group. So having said that, I'm going to start putting some important points on those disclaimers so we could finish it up earlier. The entirely of the contents in webinar training today is solely for education purpose only. No recommendations are being given to buy, sell, or hold any securities. All trading decisions will be your own risk. Please consult your investment advisor or a lawyer or your accountant for any kind of advice resulting from today's discussion. Past performance is not indicative of future results. I'm not a security attorney, neither I'm an investment advisor, or neither I'm an accountant. Trading spot OTC stocks, commodities, bonds, mutual funds, ETFs, notes, foreign currency, cryptos, derivatives, options, they are all fall under securities, but we going to talk them as a market vehicle or instrument throughout the discussion. And they involve substantial risk, and you could lose all your money. And trading is very risky. And there are risk factors which are also involved, which controls a lot of risk. And also we're going to talk about those inside the software. So they also bring unpleasant or good surprises. If you don't have any extra capital you could afford to lose, you could also not should be trading those instruments. Later on, we're going to talk about the risk management, which we strictly follow in a live trading. I'm going to talk about that a little bit also. And you must have aware that you are risking your capital before you pull the trigger. And there is no SIPS trading system ever been devised to guarantee you any kind of profits or losses. CFTC Rule 4.41 also gives you some ideas that these trading systems or any results generated from there are fall under stimulated or hypothetical performance, and that have certain inherent limitations, right? And those limitations can make you lose money. An actual performance record, these results do not represent actual trading. So what you're going to see on a chart doesn't mean that actual trading is being done that way. Also, because these trades have not actually been executed, these results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Any testimonials may not be representative of the experience of the other clients. Testimonials do not guarantee any future results or performance or success. Hypothetical simulated performance results have many inherent limitations. No representation is being made that any account is likely to achieve the same profits or losses which are going to be discussed here. In hindsight, trades looks good. That does not mean they are always looking good. We're going to go to the next disclaimer, which is for the option, because we're going to be showing some of the symbols on a chart which has option symbols. Options involves high risk and they are not suitable for everybody. So here we have phone number of the OCC. You should go and call them up and get a copy of characteristics of the risk of the characteristics and risk of the standard options, and there is a supplement also available. They will be glad to send it to you. Now, Magic Trader from get-go is based on a patents. So we have a bunch of patents. We have patents pending, and we are also in continuous examination. Also, we have a lot of trademarks, service marks, and the logos also are registered. So we would like people to respect our privacy, and we also want to make sure that you understand MetaStock has been given all exclusive rights for anything regarding to Magic Trader. Now, this felony act came in last year, so any streaming or copyrighted material is a felony now. So please try to follow for Magic Trader also. Now, my company has a few more things to talk about it. The Magic Trader software falls under simulated trading program in general. Magic Trader is also subject to the fact that it is designed with the benefit of hindsight. No representation is being made here that actual account results will be same as shown on the chart. Hypothetical results may not be adequately take into consideration of the all market risk, and you could also face a loss or margin calls. Many traders are unable to survive several consecutive trading loss or margin calls. So that's why risk management is very important in trading, even with the Magic Trader. All right, FTC regulations, we also follow them. And basically, they require us to tell that we have patents and all the trademarks. So we are earning some money from MetaStock. And we are also supposed to remind you that Magic Trader also is falling into the category of hypothetical results because it is a software. So FTC requires us to disclose that. And this is the website for the FTC. You could go there and check it out. And also advertisement of Magic Trader is also based on FTC regulations. So having said that, we finished the toughest part. So lawyers are happy. Today, we're going to talk about fundamentally how to trade with Magic Trader. And it is true, Magic Trader has a lot of information. It is designed for every kind of traders. So it looks like it has a lot of things to do, but we're going to boil it down to the basic things. So anybody who is coming into the system can learn with knowing few things. And it all goes back to the colors and symbols, which we all know how to recognize. So it is also true that Magic Trader was kept in a way that we do not need to do too much technical analysis. Rather, it is done for you in a form of symbols, colors, lines, things like that. So we're going to go over with a couple of slides, very quick, couple of slides. I'm going to take time so people understand the bottom line is how to trade with this software, even though we have so many things out of it, right? Only few things you know in a couple of steps, you will be fine trading with Magic Trader. That's what we're going to talk about today. I'm going to say a little bit in a few sentences. I've been trading more than 30 years, investors to prop trader to institutional trader, money manager, all other happy stuff. And I've traded many markets in the last 30 years. As Jeff mentioned before, yes, I did started with no experience developing my own add-on with the help of Reuters back in 2003. And we wound up also developing Magic Trader, which was a massive, massive undertaking. and it's been around in real time since 2006. One point, I had a couple of licenses, such as Series 7, 6, and 63, and currently I have Series 3 and 34. I'm not the only inventor. My daughter played a big role helping me to develop Magic Trader since she was very young. So a lot of credit should go to her. She kept low profile. However, all the symbols, colors, combinations, everything was done by her. And currently she is having same licenses I have it, Series 3 and 34, and she's working for one of the known company to you guys, Goldman Sachs. Now, today, as I mentioned, my goal is to simplify everything. And we cannot cover every single thing, but what we're trying to do, we're trying to focus on a few things today, which can help you get pinpoint entries as well as pinpoint exit. Also, we are going to be talking about bullish side rather than bearish side. If I have a time, I will cover those. So basically, at least 3 ingredients I want to talk about it, and at least 1 magic catalyst today. So I will tell a little bit about it because this is going to help us understanding the charts. So when I designed this software, what I figured out, being an institutional trader, that actual action happens in a market when people really believe to pull the trigger. And massive number of people believing to pull trigger gives an opportunity to get at the low risk because they all feel it. So how to track that? So we created 2 lines, which are specially designed. It looks like moving average, but they are not. They are kind of specially designed 2 lines, which indicates when people believe to pull the trigger in a bullish direction or bearish direction. Those are the 2 lines, right? Kind of line in a sand. One works as a line in a sand, and one works as a kind of trailing stops. So as we go along the trend, you know where to put the stops. That's about it for design basis. Now, this is where I'm going to take some time to establish the basis, how we're going to identify those opportunity in trading. So let's talk about bullish side. So in the bullish side, there are major 5 components. In that case, first line, which is a thick line, which is a direction line, which indicates we're going bullish. So when you see on a chart, this vertical line, you believe that software is indicating we are going to go long. All risk going bullish is less. It's not telling there is no risk, but less risk in going bullish side. Now, the second ingredient is having 3 components. 3 components such as purple line, blue line, and 0 line. They all have their functionality. Rule of thumb, when these 2 lines are parallel and above 0 line, this is a 0 line, we consider as a bullish fever in the market. Now, we have entry spike, how to enter in a trade, right? So this is like a right away entering the bullish side without doing all the technical analysis. So that's what this triangle shaped dotted line indicates. Pure health, later on I'm going to show you the health indicator. In that case, all this what is inside that, if you put a juice together, this says vertical line, that means health indicator good, the internals are good, so it's good to go kind of things. Now, horizontal time risk. Magic Trader has discovered 8 dimensions which market trades, and this is one of the dimensions. So what it means, the risks which are related to the time, we are trading the security shown by horizontal line, which has a color in there. And that way you could recognize those risks which are based on time. Same thing applies for bearish believers, but it is in an opposite color. One major difference is the dotted line is above these two lines, and blue line is below that, and below the blue line is the purple line. That's the basic difference. Now I'm going to go and read the book from the back of the cover. So say for instance, now question is, what is ingredient? Ingredient by theory is a component part of any combination or mixture, or is an element. So in this case, the major, there are 5 elements going bullish, 5 elements going bearish, and they could have a subcategories. So in short, Magic Trader has a 5 such ingredients for bullish believers and 5 ingredients for bearish believers in order to analyze any security and make a pinpoint entry decision or exit decision using the same ingredients. So what we're going to do, we're going to have a series of discussion in the same fashion. You're going to see them over the chart, but we're going to be focused on 3 of them today, and I'm going to detail little at a time. Now, besides those 5 ingredients, or maybe you take 3 out of 5, what we're looking for, a pinpoint entry where there is a additional good risk are accumulated, and we add to those 3 or 5 ingredients, that gives an extra booster to the trade entry or exit. So by definition, in entry or exit selection process using Magic Trader candlestick spectrum, I'll show you the candlestick spectrum, what we call as a spectrum, adding clustered specialized risk colored candle. It is very important to notice clustered specialized risk, and that will give you a confidence to pull the trigger besides those 3 or 5 ingredients. And those specific or specialized risk colored candles are known as magic catalysts to at least 2 out of 5 ingredients. So we need at least 2 of them plus one of the color candle. So in this case, bullish side should be these 2 candles plus black candle. These are all 3 are catalysts. So one of them we have to add to the ingredients. So we putting more odds for you or anybody using Magic Trader for having low risk when you enter or exit. That's how it works. So in short, bullish believers has these 2 major catalysts, plus you could use one of these, which is a neutral believers. So one of these means, in this case, this black candle, which we're going to show you in a few minutes. And bearish believers, suppose you're going short, you could use the same black candle, but it is a fill candle. Plus, this is a indigo bar, indigo color. It looks black, but it is indigo. And this is a golden bar. And that's what you need to learn in order to use Magic Trader. Keep it simple. And if you have gone to high school or you have gone through the experience of recognizing color, this is where you have to focus on, not everything else on the charting system. Now, what I did, as I said before, we're going to narrow it down. So we today going to focus on bullish side of the trade. Again, they all same, right? But I made some notations here, such as The value of this purple line, I put +4. So when you see in a chart, it has to be +4. Then blue line +1. So you're going to see on the chart, and this is that 0 line. I put ABC. So this spike, the entry spike, has a 3 dates, right? We're going to talk about it at one point, but I want to have everybody digest that this spike has a 3 dates, regardless what time frame do you use in charting system. So whenever it is, I'm going to show you 3 dates on the chart. Everything else is same, and we're going to focus on those 3 plus yellow bar, right? That doesn't mean that if yellow, but in a scanning, there is a turquoise bar, right, is not acceptable. Minimum 2, I prefer minimum 3 ingredients plus one of those. But if you have in a scan, these plus that or plus that, and we have seen any combination of that is fine. So I just want to clarify, minimum we need 2 of those out of 5, 3 is more preferred, and one of these or more. That's how we're going to do interpretation today on the chart. So what I did is to make you first experience about the chart, I picked up one chart, has those black candle, so which is also showing you that this is a candle which is not filled. That falls under catalyst category. Also yellow bar, which is also catalyst. That's even better. Also, I want to indicate here that there is a horizontal risk neutralized. So you could use that in your analysis. So I just want to give you the first look of this chart, how it looks like, right? We're talking about all this stuff. So basically you have 1, 2, right? And this spike 3, but you consider 2, doesn't matter to me. So I would be taking entry with the yellow bar, 1 catalyst, or I could be taking here at the close of the day or opening of the day. So I could get full benefit, and usually the results are obvious. Same thing in opposite direction. The spike is there, right? The bottom of the spike is there, vertical line is there, and ribbon is there. So we could take a short trade. The results are obvious, and the black candle is filled. That's even better. And the neutral ribbon is there. So risk is in our favor going to bearish direction. That's what it tells. So now what we're going to do, we're going to go straight into the, hold on a second. What I will do, I want to open up a chart for MetaStock. All right, so I want to discuss those ingredients. Everybody can see the chart, Jeff? You could see the chart, right? All right, perfect. Thank you, Kelly. All right, so let me explain those 3 ingredients as well as yellow bar, right? So as you can see here, we talked about pure health. Now, pure health, I will say a little bit details. Pure health is based on this health indicator. In health indicator, there are a bunch of lines. So health indicator was designed to see internal health of a security. So instead of you doing interpretation, right, the juice out of that, if you want to make decision based on that, it is with this vertical line. So it is a pure health. The name itself is indicating you that health is okay, right? We don't have to worry about all these veins and whatever is working inside our body. So security body, how it functions internally is shown by major components here, but we don't need to worry about everything. So in that case, this is a good point to enter. as I said, this ribbon or horizontal time risk is based on a timing. So as we go, time passes in trading, it increases the risk in trading. All the risks are low on this side. As we go on the right side, it increases the risk. That doesn't mean that you cannot take entry here, but you have to understand that risk is high. So that's how they work together, pure health, and you have a pure vertical decision based on a health, and vertical risk is also in your favor. So one can take those two, and yellow bar, which is a catalyst. We added more cluster risk in there, which are in favor to go long. Now let me explain one more thing here. These are those two lines I was talking about, which we designed based on believeness. So when people believe that we're going to go along, we are using this line in our favor. Unlike traditional kind of moving averages people use, these lines are designed and you could go earlier, not at the cross. Cross is better always, but you could go earlier into the trade using these 5 ingredients and be confident about it. And that's how it is simply designed. Also true that these 2 lines are custom made for every time frame. So that also indicates that they are not moving averages. So we are basing decision on magic lines, we call, right, in our trading. And they are very helpful in making quick decisions without worrying about 50 days, 30 days, or whatever it is, right? So me being a trader, I wanted to have to the point and producing the better results. And I learned this thing from institution side. So now let's apply this in a couple of locations. So this way you get confident. Also, as we talked about that, we're going to talk about only 3 ingredients. As we are on this chart, I would like to bring to your attention, which we discussed where to find it. This is that vertical line. And you could see MetaStock technology is so great, right? We could see what it is even though we don't know. So here you get direction line recognized. Now, we also talk about those 3 elements. So 0 line is somewhere here, right? So I could draw it, but right now, let's do that way. I do believe that 0 line is somewhere here. So long story short, this is that 0 line we were talking about. The 2 lines are parallel and they are above it. That's what you need to know, nothing more complicated. So let's go in a couple of places here. The principles are same, except for instance, and we are going to show you how to find them. So hold on to that, and I'm going to give a little bit some surprise to a lot of existing customers. Not because of me, because of MetaStock. So long story short, we're going to apply the same principle, right? We are above this line, right, which is a magic line, plus we have bull, right, and we have a simple pure health indicator in our favor and the ribbon, and the results are very obvious. And this is how it works. Now I'll bring it to your attention. There is, even though I'm not putting much time, you could see here the indigo bar candle is there, vertical line is there, this ribbon is red, and 2 lines are parallel and below 0 line. So I look at here in a few seconds and I make decisions. And here direction line was telling me going down. And this is the entry spike, right? On 221, and the leg is also to vertical the time it is ready. So basically 228 week, you could enter at the open, because this technology allows you to see this leg as it forming. And then we're looking for an excuse to enter below the magic line, just as above red line here, same things apply. Now, as we are here, some of the things I want to bring it to your attention, where to put the stop. We generally put below this red magic line our stops, right? And when I'm shorting, again, this is my way of protecting the entry. So if it goes above it, I'm out here. So this is as simple as that, nothing major. And you could see here, as you go down, you could also move your stops. So that question is been answered. As I mentioned before, that I'm going to talk about risk management. How by risk management? First of all, my stop. And I'll give you very simple example how to risk manage. Suppose I have $100,000, but at any given time, I can't afford to lose 10,000 out of that, because I need 90,000 for my retirement. So I take that 10,000 as my base, not to lose money. So everybody should be clear, 10% of 100,000. So I'm not going to risk more than 10,000. Now, how many security you want to trade? So maximum, say, like you want to put 10% of 1,000. So say, for instance, 10% of 1,000 is $100. So now I cannot risk more than $100 in each symbols which I want to trade, because some people like to trade 100 stocks, but you cannot handle more than 10 stocks. I prefer 5 stocks. So say, for instance, we're going to be doing only 5 stocks. So 1,000 divided by 5 means we are going to do $200 risk in each security. Now, good thing about it, the current brokers allows you to trade 1 stock. Now, you could now trade up to $200. And further that, I'm going to put 200 in there in one shot? No. I'm going to take 50% of that. So I'm going to risk at any given time $100. And I do laddering. So it is true that when it pulls back, you have a chance to add more stocks or whatever you're trading. So that risk management allow you to further take the opportunity on a pullback to add another 50, 60, whatever dollars are there. This is the way I do risk manage. And there are people in this audience, they have seen me trading live, same way, but a little bit different on options. So it is nothing like making too much complicated about risk management. You could read thousands of books, but common sense approach I use every day in a trading, and I teach those in our live rooms. And this is the only way I could trade, and I feel better. So I have an opportunity to take the advantage of the market. Suppose you have 20,000 or 100,000, you could use the same scenario. So we talked about how to put trailing stops, how to risk manage, and there is nothing much to worry about it. And this software is a risk-based software. So we're going to go one more scenario, then we're going to go back to slides. We got to talk more. So here you will see over and over and again, same kind of setups are happening all over the place. So now let's see basic way of thinking. First of all, my direction line is good. 2 lines are parallel, right? And I'm looking for excuse to get in because my pure health, right? Pure health is my first excuse. Okay, looks good. Here it looks good. Now, oh, there is no yellow bar. It's okay. You see on the left a spike and a black candle. It's a no brain required here. It close above it. It's a black. It's a catalyst. So we have everything matching in that area, right? If you don't want to, you want to be perfect, right? So let's go here. Here is yellow bar, Here is the vertical line, pure health. Here is the ribbon. Those are the three things will make you feel good. If you want to have eyeball, two parallel lines are there. Yes, they are there. So why not? And things are very clear after that, because you don't know this thing, what is going to happen. At one point, you got to put faith in the software. And I'm not going to go too much in details about the options, but symbols are already there and they're telling you the story. Here is a bull, here is a YB4, and it's a call option. Here is a BEBUNE call plus, so that's a black candle. So this is where bulls are taking control. So you could see in a real time that bulls are taking control from the bears. And we have no problem taking some risk. And if you want to be extra precautionary, right, Peter said you need one yellow bar, but black bar is okay too, but we were not ready here, right? We had a spike, so I could use that as an entry point. An exit point, people say, oh, you talk about only entry, how about exit? As soon as you see some signs, such as forming of this spike, especially on a bigger time frame, I'm out. I don't wait for direction line. I even, as soon as it closes below it, right, below the red line, my stops are there, or pullback, we call pullback here, I'm out. And that's how I am trading actually. Very simple way, not a big project. We don't need a lot of technical analysis. It is kind of technical analysis, but it's condensed to make your trading decision quicker. And this came from traveling with Kelly, Jeff, and everybody. In the nighttime, I got to spend 3 hours doing technical analysis, and I was frustrated. So let's go and talk about a few things here. So as we talked about it, pure health, horizontal time risk, right, and yellow bar can help you moving quicker. Now, what we're going to do, we have MetaStock did some scans today, and this is one of the surprise. They were nice enough to help me, even though it was impossible to program all this stuff. They gave me a surprise this morning, right, rather in late morning, and I created slides. So these are the way you could find those things, right? And we're going to go on actual scanning in a few minutes, right? So we're going to talk only about bullish side, and we're going to scan few things so you could feel good about it, right? So all 5 ingredients are there and catalysts are there, and you could also use that information to pick up some good trades. So let's go back in here, and we're going to use the scanner. So as we are there, so I will make it easier, right? On 1127, let's see the indexes. And this is one of the things retail guys are missing. I came from institution side, so I always looking to do majors. So either ETFs or indexes, I'm always scanning them. The reason why, if they are not lining up, other things are going to fall apart. So let's see on 1127 what transpire here. So I'm going to find 1127. The reason why we're doing the exercise, because we use the other one, I want people to see if it works or not on a scanning business. 1127, right? So we got to move here. Okay, as we talked before, you want the opportunity, right? Based on what we talked about it. So we're going to pick up the date 1127. This is the weekly charts. It says here weekly on top. So we're going to mimic that date right into the scanner. So we break into that scan. So here is those 2 new scans. One is for bullish and one for bearish. So let me give you preview of that. So basically, we're going to take out this bearish today out, and we're going to base our decision on that. So we're going to do weekly chart. This is the date, and we have this automatically came in here. I'm not using any filter, so we could have good idea. And I have this major. So some people don't know how to do it. So it is in a custom online data space here. So these are the custom ones. So I will show you what we scanning. So what we scanning the majors, and that's how I establish my entries. So instead of worrying about all stocks, right, I want to see if the majors has something lining up. If they are, then I'm going with them. That's how I make decisions. And then MetaStock has each major, what stocks are included there, and then you could trade accordingly. So let's see, we were talking about NDX, right? So it is there, or QQQ, it is there. So we're going to scan it and find it. So let's get out from here, and we're going to scan it. Hold on a second. This is the scanning results. So we're going to apply on a QQQ. So as we talked about it, right, we have direction line missing is fine, but we have health, right, HEBU. So two lines are parallel, at least it tells you, right? Then green spike is there, that health is good, and ribbon is there, and my yellow bar is there. That's cool, right? So we are going to look for it. So MetaStock has such a good way of doing it. So we're going to open up charts for multiple time frames. So let's go there. So 11/27 is the date. That was a weekly scanning. I guess this is that thing. So what it was telling, two lines are parallel, which is here true. We have direction line missing, right? There's no direction line, is fine. Now, if you want to wait for direction line, you could still go there on this one. And I want to give you an idea, another feature, which just giving as a bonus here. Magic Trader has also forecasting capability, and it also tells you the risk, what is involved. We're not going to go into, but today webinar, at least understand that it has a forecasting capability. It was there, this one took an opportunity. And you could see here, and it was telling that we're going to go high, and it's telling you earlier. So results are very obvious, and plus we have all the ingredients. So that's even better. So here is the deal. We have HE-bull, which is these two parallel lines, then spike, which is this date I look at completion. But the beauty about this spike business is that this start telling from 1 week in advance. So this is the date it will start showing on your scanning, 11/20. So I am prompted that we're going long. So I have whole week to make decision. That's the beauty about this magic. Actually, spikes are designed by MetaStock, but we tweak it to make it work for Magic Trader. So we have spike, then we have pure health, which is right here, and we have a ribbon, and we have a famous yellow bar. So that gives me a confidence. And the bull came in. The bull is telling me I could buy you on a call option. That tells you the story for trading options. And it was telling way before right here, but health wasn't ready. But you could get a sensation that, hey, something else is happening. And then you wait for the right entry. That's how I am trading. I know I could enter there, right? I could get in. But look, there was a pullback because we did not have pure health and this ribbon was not green. But at least when you scan and there is a yellow bar, put down in your notebook, wait 1 or 2 weeks and see if it lines up. And that's how you keep track of all these things. So you don't have to do too much work. So that's how it is. So let's see what else is looking good. So NASDAQ 100, same thing, but I want people to start seeing something. NASDAQ 100, right? It did not show that. And this is why I keep them there, right? So what else is cooking if you are following just NDX, right? So I want people to start seeing things now. So now S&P 500, let's see what they were doing, right? This is the SPX index, and SPY is a spider, which we use it, right? So here, there was no yellow bar, right? So what do? So we have also 3 of them matching, right? 1, 2, and 3. So I prefer, or I will wait. So let's see what transpire at least. So these are the practical things you're going to face while you're using this software. So always try to open the chart. If you don't open the chart, you will have issues. So let's go there. So this is the SPY. 1127. Let's find the 1127. $11.27, right? Now, if I had to make decision, this is what I do, right? So here is a green candle, which is fine. Now I look at it on the top. Direction was there. We were not there. Okay. 2 lines are parallel. It's okay. Pull back. We pull back and we're going back. So we are above 2 magic lines, then pure health and both. So I will not miss the trade. So this is what people need to understand. Basics, right? Basic is 1, 2, and 3 ingredients are there. And on the left-hand side, there is a direction of all clear, spike all clear. We got blessed that we missed the boat. Yellow bar was also there, but we were not there. We did not scan that day. It's okay. You wait for a pullback and see if it lines up, and we're good to go. And DX is going higher, so why are we waiting for it? So this is how simple it gets. So now what I would like to do, because we are also having few minutes left, so I would like to have some kind of questioning coming to us. Jeff? Are you there, Jeff?
Hello?
Yes, Jeff.
Hello? Oh, wow.
Yes.
You got super loud. We did have a couple of questions here that were coming in through YouTube. I promised Arun I would ask this one. Let me find it real quick. He wanted to know. Okay. Where did this question go? I swear it disappeared. Okay, so we have a different question. Najuna wants to know, I am long SPCB. Do you have any projections nearby? So SPCB is the symbol that he wants you to look at with Magic Trader.
SPCB?
Yeah. Sierra Papa Charlie Bravo.
SPC for Charlie Bravo. First of all, I am not recommending anybody buy, hold, or sell any securities. I could analyze what I see on chart, but they got to have a practice to use Magic Trader. All right. So I want to be very clear and follow what guidelines are from SEC as well as CFTC. I want to be front with people. So
I agree.
you're in
And
position.
when we look at stocks, we don't know anything about how much money you've got, what
Yep.
your risk tolerance is, all that kind of stuff. So, but we'll tell you what we see.
We're going to analyze it as far as
Mhm.
Magic Trader is concerned, but that doesn't mean that you got to get out whole or buy more.
Okay.
Okay, so right away, what I see here, right, the trend is slowly moving up, but there is a pullback, right? That's what I see on a monthly. Then I right away look at it weekly. Where are we going? So yes, there is a green candle, fill one, and it's showing that we're going down. So basically, 3 weeks is getting beat up, right? And health indicator, right, is not in line to stay long, right? So basically, most likely, it is looking to go in here. Now we
All right.
go, right?
Go ahead. Sorry.
This is the place it want to retest. This is what you call an orange line. Now, let's look at daily and 60 minutes. So here, it is also looking no good. Look at here, put plus plus, bear came in, we are below magic lines, and there is a vertical line telling us we are in bearish territory, and health is lining up. Look at this here, -4 and -1. And here also red vertical line. So things currently looking no good for being bullish. And that's the way I look at this picture. And look at the health. Health is in a negative side. So 1, 2, 3, right? 3 spikes.
Okay. I mean, that's pretty clear. Arun asked a question earlier about the pure health indicator.
Yes.
And he wanted to know if the pure health was calculated on the basics of many indicators. Like, is it a mix of major indicators? That was the question I was trying to find initially. Because I promised I'd ask you.
If you pay attention what I said, pure health is a juice of all these things. It's based on this health window, we call health window, and this is a spectrum. So this is based on a bunch of those.
Right. William wants to know if you run these primarily on weekly charts, or what primarily do you look at when you're looking at charts? And I think you're looking at it right now, right? The time frames you like to look at.
Yeah, I like to see first monthly few times a month, beginning and in the middle of the month. So that gives me the story. And I look for basically magic lines, where they're going. So in this case, right, you could see it be going down and nothing close above it. So I don't care really how I feel to go long, right? And if I go long, I'm playing counter cycles, right? And then I know I can't be greedy. I take the counter cycle, this thing, to short the hell out of it. That's what I do. And people think I'm crazy. I'm not, because that's the way institution works, right? Or on a counter cycles, they go because you need an uptick, right? You know the rules. So I get better feel that way. So you do laggering, right? So what happens? You short, then more short at upticks, right? Uptick could be. This is what I would people to also realize. Magic Trader comes with these universal levels. I don't use Fibonacci. God knows how many years I've not been using. So how I know where it's going? Look at here. It's going to tell you where it's going. Now, I know it's going right here. Right? In this case, from the top, 1, 2, 3, 4, 5, right? How many lines are there? 1, 2, 3, 4, 5, and 6 lines. All right, so let's see where it goes. So 1, 2, 3, 4, 5, 6, $1.36. I don't trade this stock. I do for training the people who comes in my alert room. So I'd like to be like them, because I helping a lot of small traders, right? Because I had enough from institution all these years. So this is a time for little guys. So I like to show them I don't like demo. So we make an agreement with these people. I will be trading 1, 2, 5, 10 stocks. So this way they feel that they could do it too. And also 3 trades a week can follow these what do you call restrictions from day trading things. So they could do practice on a live thing, right? So here, for instance, I was a small trader. $36 is my goal. That doesn't mean that it's going to go there. There's no guarantee. I could give it to you, but that's the plan. And magic line, not magic zone lines, we call them, are being calculated way in advance. This is the difference between Fibonacci and us, right? Look at here. It tells you where before it comes. So look, it bounced right off. How the software knew in advance a couple of weeks ago. That's MetaStock secret, not mine. All right, so I'm just kidding. That's the part of the design we came up with, and this is one of the invention. So let's see if there is another one we could answer like this.
Yeah, we do have, let's see, William wants to know if you would look at the DIA real quick. And
DIA.
while you do, well,
okay.
DIA, yeah. The Dow ETF, it used to be the only thing I would trade. While you're doing that, Jana wants to know if can be used for FX.
Okay, I forgot to mention a couple of things. This was technically first used on Forex because everybody knows I'm a Forex trader since 1999, right? I was very earlier into that business because I love this excitement. So FX, I have traded, I'm not going to say much, but a huge amount of money live on Forex. And I do believe that Scott has some of the statements, Scott Brown. So basically, it can be applied to crypto. Anything which Reuters has a data feed, I could trade with. And Magic Trader is designed to do 1 minute all the way to monthly chart. And I like not to go too much into smaller time frame because I came from institution. However, if I'm trading E-minis, right, or sometimes Forex, or maybe futures, right, I like to see at least 3 minutes, right, and 5 minutes sometime. But that's about it. 1 minute drives me crazy.
All right. That looks like the end of the questions, but there's a gentleman in here that you might know. A gentleman by the name of Dakari Towns that has a comment. Should I read it out loud?
Yeah, you could.
All right. Peter has really turned around my trading experience around in the alert room. It took me about 2 weeks to really understand some simple strategies with Magic Trader. It really created the confidence I needed to trade. Thank you a lot, Peter.
You're welcome.
That's a good positive note to end on, right?
And anybody has a question, right? Because I promised Kelly and Jeff that I will keep it short.
Yeah, do you? So I don't see any more questions, but I'd like to talk about people getting a trial to MetaStock.
Yeah, go ahead. That's what it is. So you could take it off, but I just wanted to show the chart which I discussed earlier. So this is kind of diagram. They could have it, and they could get an idea visual that way. Other than that, I don't have anything to show. Right?
Okay. Perfect. And, cool. Okay, so
you
that's
could take it over if you want.
I actually already did. I didn't realize you were going back to your PowerPoint, but great job today, Peter. I think that was really, really good. I do want to say that about Magic Trader Elite, it has been extremely popular for the people that have got it. Like Dakari is not alone, the people that have tried this thing. So when I said when we went into it, I said our goal today is to get you to try it, because if you do, there's a really good chance you're going to like it. Peter's FXDA was an extremely, I forgot how to speak after speaking for 8 hours straight for 2 days in a row. But Peter's system has been extremely well liked, and I'd encourage you to try it. So the program itself is called the Magic Trader Elite program. It is a large program, and so it's like when we show MetaStock, we don't show you like everything that's in the program because it's massive. We've been working on it since the 80s. Peter and his daughter Serbi have been working on this for 15 plus years now, and they've developed all kinds of indicators, explorations. There's a couple of explorations. There's a really good manual, which is how I figured out how to use the Magic Trader myself. But it's a very, very big program, and that's one of the things that we've kind of struggled with, and we've been working on, is kind of boiling down some concepts that you can just take away with. But I'd also say that that's been kind of a bit of a challenge, but it's also a benefit to you, because as you get more and more into the Magic Trader program, you understand more about it and how the scans work and stuff like that. It's just going to keep working better and better for you. So what we've got here, Peter did a really good job of showing everything, in the yellow bars, the spikes, the time risk, and the main core ingredients. The one thing that I did want to show real quick is the fact that it does have the expert advisors that I love, where he kind of goes in and summarizes what the ingredients are doing and kind of gives you some on-the-fly instructions. He showed you scanning, and that it incorporates the scanning, two of the most powerful tools in MetaStock, in my opinion. So he did a really good job of demonstrating that today, and it's a very, very good program. The thing is that we're offering this on a subscription. So the idea here is you can try it. If it's helpful for you, it's going to pay for itself. And that's kind of the whole idea behind it, right? If you get better trades out of it, you're going to like it. You're going to be giving us a testimonial, just like we got from Dakari a second ago. So normally this is going to cost about $199 a month. What we're going to do as a conference offer is allow you to try it for $149 per month. And that's a locked-in rate. So if you try it out, it's going to give you, we're going to give you that rate forever. Okay, $149 is a permanent discount. The other thing that we're kind of launching today, and that does come, if you just sign up for that, you're going to get the Magic Trader. If you don't have MetaStock, I'll give you a copy of MetaStock to try. I'll give you the real-time version of MetaStock with the Zenith data feed. So that's a $250 value with your subscription to Magic Trader. I want you to try it. I want you to like it. And of course, we want you to be a customer for a long time. So in addition to that, though, what we're also offering is a brand new course that's available for Magic Trader. It's going to be a 4-module course. It's going to include, it's going to be 4 2-hour courses. He's going to cover the fundamentals, an introduction to Magic Trader, 8 dimensions of risk. You can kind of see kind of all of the modules that are laid out right here. And basically, these classes, I'll give you a second to kind of glance through this or read through the list. These classes are going to be every week, starting in a couple weeks. I've got actually the start date right here. We're going to have 4 2-hour sessions. Okay, we're going to run them every week from Thursday, April 22nd to Thursday, May 13th. And they're going to be at 4:30 Eastern. So those are 4 2 hours of sessions. If I know anything about Peter, he'll probably be a little bit more generous. His sessions always run very, very long, but that's because he likes to spend a lot of time really explaining things. So we're going to record all of the sessions. They're going to be available for review. They'll be available up on your My Downloads. And the price for all of that training, over 8 hours of training as part of the special conference, is $699. So go ahead. It's $699. It's a one-time cost that gives you access to the training forever. You'll want to do that. Obviously, you'll want to get Magic Trader as well. If you do the Magic Trader with the conference, you'll pay $699 for the conference and $150 for Magic Trader. But what Peter's agreed to do is give you the second month and the third month of Magic Trader for free. So you pay roughly about $848 for the package. You'll have all of the trainings and you'll have 3 months of access to Magic Trader. And if you do that, I'll match his offer and I'll give you a second and a third month of MetaStock as part of the package as well. So to take advantage of that, give us a call. The phone number here is 800-882-3040. You can chat online with us at metastock.com/saleschat. Like I said at the top of the hour when Peter started talking, the people that actually have tried out Magic Trader have absolutely loved it. I'd encourage you to give it a go, see how it works for you. And every time we do a class with Peter, we have all these people that are talking about how much they love it. I'd encourage you to try it, because with the subscription, if it doesn't work for you and you don't like it, your risk is only the months that you paid. So give us a call, 800-882-3040. You can visit us online. You can chat with us at metastock.com/sales-chat. Let's see if we have any more questions. I hope you've enjoyed the day.
I'm still
Go
here.
ahead, Peter.
No, I'm here. I could answer all
Okay.
questions you want.
Let's see. How much does MetaStock and the data cost after the trial? Ram, that's a really good question. I appreciate that. And there are some different ways to do it. Like we have an end-of-day version. We have a real-time version. The end-of-day pricing starts at $59 a month. It's $69 for most people here in the US. So it's as low as $69. Most people usually keep the real-time version of the program. The cost of that's like $250 a month, but you can do a purchase of a license. And the license will actually cut that cost down so that you're only paying for MetaStock or the data every month from Refinitiv. So your cost goes down to about $150. We can walk you through all of that options, talk about what you want to trade, all of that, get really, really specific for that, Ram. Just give us a call, 800-882-3040. And we'd love to kind of walk you through what the options are and how to get started. I appreciate that question, Ram. I really do. We'd love to have you as part of the MetaStock family. Mike says, I've missed the first part of the webinar today. I was a bit under the weather and forgot about the training today. Can I review the previous website? Yes, Mike. So basically, you want to know if we have a recording. We've been streaming to YouTube all day today. So that means if you go up to YouTube, I'm just going to paste this in here for you, send this to you. If you want to go watch the whole thing again, you can go up there. The only cost to watch the YouTube is you have to like and subscribe to the video. No, I'm just kidding. You don't have to do that. But we would appreciate it if you actually like and subscribe while you're up there. And so that's it. I don't see any more questions, Peter. I want to tell you this. You did a great job today. I appreciate it.
Thank you very much. Hopefully we could do better than that.
Yeah.
Always learning to improve.
Yeah, no, you did great. Awesome job. I want to thank you for spending an hour with us. For everybody in the audience, thank you. What a great session we had today.
I want to thank the MetaStock staff. They have worked so hard, right? And even your programmers, right? These two exploration you added, right? Which you could tell them how they could get it, all people who attended. And it wasn't an easy job for programmers either, between all the stops they're doing, and they gave me a surprise. Right? We talked about it, and I got surprised by you today that we're going to include that.
Dakari and the other people that already have Magic Trader, just go download it again from metastock.com and you'll be able to get it. It's just part of the installation package. I told you like a week ago, I don't think there's any way we'll get that done in time, right, Peter?
Yeah.
And they did it. So they always surprise me too. They're a great group of people.
And not only that, Will was on a phone. This guy was on a phone with me. I had some challenges today. So your team is awesome, right? And they always there to help me.
Yeah, they do a great job. They are, and that's I love. I'm very proud to work for MetaStock. I love the fact that most of the time we can come in and look at our support surveys and the satisfaction ratings at 100%. It's great. They're good people. So, and thank you, Peter.
Yeah. So if anybody has still question, we are here to answer.
Yeah. All right.
All right.
Okay. Thank you very much, everybody.
Thank you for everything. I appreciate it.
Our phone number is 800-882-3040. We'll be here until the phone stops ringing. Thank you for everybody that came today. Thanks for making this event a success. I hope it was worthwhile for you. I hope you learned something. And most of all, I hope to see you tomorrow at 10 a.m. Eastern. We'll see you there.